60 पॉइंट गिव निफ्टी नीचे है, तो एक सेंस तो बन रही है कि एचडीएफसी बैंक में शुरुआत शायद नीचे की हो, क्योंकि सबसे इंपॉर्टेंट वही हो रहा है, एचडीएफसी बैंक कैसे रिएक्ट करेगा। देखिए इंपॉर्टेंट चीज़ ये थी कि जो प्रोविजनिंग बढ़ी एचडीबी फाइनेंशियल में हिस्सा बेचकर, वो उन्होंने क्यों की। आप कह सकते हैं कि उसको बैलेंस शीट इम्प्रूव करने के लिए किया, लेकिन जो भी है थोड़ा सा मार्केट को एक शायद रिस्पेक्टर ओपन हुआ यहाँ पर, लेकिन स्टॉक में ना ऑलरेडी काफ़ी शॉर्ट्स हैं और फ्राइडे को भी काफ़ी शॉर्ट्स बने थे यहाँ पर, तो मुझे लग रहा है लोअर लेवल पर यहाँ रिकवरी आने के चांसेस रहेंगे और कुछ नहीं तो शॉर्ट कवरिंग, प्लस नंबर इतने ख़राब भी नहीं है और हो सकता है लोअर लेवल पर फंड्स बाइंग भी करें इसमें एचडीएफसी बैंक में। अगर किसी बड़े एफआई को पसंद आ गया तो बाइंग भी पॉसिबल है। आईसीआईसी बैंक तो खैर अब बड़ा गैप अप होने के साइंस दिख रहे हैं, लेकिन अब उसको चेज करना है नहीं, ये आपका डिसीजन है, लेकिन नंबर तो बहुत शानदार है आईसीआईसी बैंक के। इस बार भी हर पैरामीटर पर आउट परफॉर्म है। नेट इंटरेस्ट मार्जिन हम 18 बेसिस पॉइंट का कंप्रेशन एक्सपेक्ट कर रहे थे, 7 ही बेसिस पॉइंट का कंप्रेशन आया। एसेट क्वालिटी भी अच्छी है, मुनाफा भी अच्छा है, बस महंगा है स्टॉक, इस चीज़ का ध्यान रखिएगा। रिलायंस के नंबर्स कुल मिलाकर स्टेबल है। रिलायंस के नंबर्स में मतलब अरे ये रिलायंस के नंबर्स में न्यू एज बिजनेस में खैर अच्छी ग्रोथ है, अब ब्रोकरेज भी पॉजिटिव नजर आ रहे हैं, तो ठीक है। अभी के लिए आप कह सकते हैं 2 + 1 माइनस, लेकिन जो 1 माइनस है वो कितना माइनस इम्पैक्ट करेगा और करेगा या नहीं करेगा, लोअर लेवल पे बाइंग आएगी या नहीं आएगी, शॉर्ट कवरिंग आएगी या नहीं आएगी। बेसिकली जो डिसाइसिव फैक्टर होगा ना वो एचडीएफसी बैंक होगा। आज वो कैसे रिएक्ट करता है निफ्टी पर, सबसे ज़्यादा इंपॉर्टेंट वो है। मुझे नंबर्स इतने खराब नहीं लगे एचडीएफसी बैंक के, कंसिडरिंग स्टॉक की जो पोजीशनिंग है। देखिए यही नंबर अगर 2050 पे आया होता तो मैं कहता कि एकदम आज गिर सकता है स्टॉक, लेकिन अब गिर के 1950 पे भी आ चुका है, तो ठीक है, इस लेवल पर ये नंबर इतना खराब नहीं है।
ओके, इट्स मैटर ऑफ पोजीशनिंग। शायद इन नंबर्स को आप इस प्राइस को इतना नेगेटिव नहीं कहेंगे। आप इसकी प्लीज निफ्टी लेके आइएगा, साथ ही साथ फॉरेक्स मार्केट की डिरेक्टरी भी लेके आइएगा। बाकी वेरिएबल्स को देखते हैं, उसके बाद आगे बढ़ेंगे। आज की स्पॉटलाइट इट्स 25090 आधा परसेंट एट 86.25 आपको स्क्रीन पे लगभग 10 पैसे की यहाँ पे कमजोरी नजर आ रही है। बाकी अभी गोल्ड सिल्वर और M6 क्रूड पे टिक्स अवेलेबल नहीं, तो उसे छोड़ता हूँ, बट एज ऑफ नाउ इट्स फॉरेक्स मार्केट 86.25 10 पैसे की कमजोरी। मनोज, अब पिक करते हैं आज का स्पॉटलाइट। क्या पिक कर रहे हैं आप आज?
बिल्कुल, देखिए आज 2 स्टॉक जो मैं लिए, उनमें पहला है डिलीवरी। बहुत चल चुका है लेकिन ये स्टॉक ध्यान रखिएगा, लेकिन एक नेक्स्ट लेवल ऑफ मोमेंटम है। ये वीकली चार्ट है डिलीवरी का, और आप देखिए पिछले मेरे ख्याल से 15-16 वीक्स में से सिर्फ 2 या 3 ही नेगेटिव रहे होंगे और 4 वीक तो बैक टू बैक गेंस हैं। और एक बहुत बड़े चैनल का जो उसकी लिस्टिंग के बाद से जो चैनल चला आ रहा है उसको क्रॉस करने की तैयारी कर रहा है, तो इस वजह से ये मेरे रेडार पर आया। दूसरा स्टॉक जो रेडार पर आया वो है बजाज फाइनेंस। हालांकि आज न्यूज़ में जियो फाइनेंस है, लेकिन बजाज फाइनेंस का चार्ट काफ़ी अच्छा लग रहा है। वीक डेली चार्ट फ्राइडे को अच्छी बाइंग हुई यहाँ पर। थोड़ा रिस्की है लेकिन चार्टिकली काफ़ी अच्छा लग रहा है स्टॉक, तो ये दोनों स्टॉक रेडार पर। फाइनल डिस्क्लेमर, अगर आप बाय सेल करें तो अपने फाइनेंशियल एडवाइजर को करिए।
चलिए, तो बजाज फाइनेंस आपकी स्क्रीन पे 94150 पे खुलने की तैयारी करता हुआ आज की स्पॉटलाइट बैक पर, लेकिन एक एनालिसिस टेक्निकल और मौजूदा न्यूज़ को उसको देखते हुए डिलीवरी एंड बजाज फाइनेंस। एक बात निफ्टी लेके आइए, स्क्रीन पे रखिए, और चलिए अब चलते हैं आज सुबह जो 3 थी सुबह की इन 20 स्टॉक्स को देखिए, क्या कारण था, क्यों पिक किया गया, स्ट्रॉन्ग या फिर वीक मूवमेंट। आज सुबह सीरियस वाला था अपडेट।
स्टॉक्स की लिस्ट है तैयार। अब देखते हैं रिकैप। सोना BMW स्टॉक को अपनी लिस्ट में रखेगा। ब्रिगेड एंटरप्राइजेस यहाँ पर क्या एक्शन नजर आ सकता है, नजारा इसको भी रखे रडार पर। EU स्मॉल फाइनेंस बैंक, बंधन बैंक, यहाँ पर नतीजों का असर, और इरकॉन को मिला है ऑर्डर। मैस्टेक यहाँ पर भी अगेन नतीजे हैं। वर्लपूल, सेल और JSW स्टील बतौर टेक्निकल्स अपनी लिस्ट में शामिल कीजिए।
मेरी दस की टीम भी आपकी स्क्रीन पर आएगी, रडार पर रखिएगा। बहुत सारे सभी खबरों पर रिएक्शन से देखिएगा, वॉच पर रखिएगा। HDFC, GIC और डॉक्टर रेड्डीज को लाल रखा था, पेंकिट्स थोड़ा सा मुश्किल हो रहा था। ICICI, पंजाब बेंसिन, सेंट्रल बैंक, JK सीमेंट, इंडिया सीमेंट, करूर वैश्या, इंडसइंड, सब अलग एक डेवलपमेंट से चलते चलिए साथ ही आज के मंडे के टॉप 10 आपकी सीरीज। पहले तो सब निफ्टी के नंबर्स रखिए, उसमें रिलायंस इंडस्ट्रीज भाई ब्रोकरेजेस की तरफ से थम्स अप आता हो, और वैसे न्यू एज बिजनेसेस फिर से अच्छा करते हैं। HDFC बैंक मतलब कोई बुराई नहीं, अच्छा ऑलराउंड परफॉर्मेंस है, कुछ इफ्स एंड बट्स लगे हुए हैं, अच्छे परफॉर्मेंस पे देखते हैं कैसा बिहेव करेगा। एनआईएम्स कॉन्ट्रैक्ट हुए, एसेट क्वालिटी में स्लाइट डिटोरिएशन, पर वो सीजनल है, एग्री बिजनेस के चलते। आईसीआईसीआई बैंक हेडलाइन नंबर्स जो आए वो स्ट्रीट एक्सपेक्टेशन से बेहतर थे, एसेट क्वालिटी स्टेबल थी, एक सीजनली वीक क्वार्टर में स्टेबल थी, तो अपने आप में अच्छा हो गया। तो ज्यादातर हर पैरामीटर पे बीटी है नंबर्स का। तो एक ब्रोकिंग ने सही लिखा था, द स्टोरी कंटिन्यूज, ऐसा कह दिया। जेएसडब्ल्यू स्टील चौथा निफ्टी का नंबर, चर्चा कम हो रही है दिग्गजों के बीच में, लेकिन अच्छे नंबर जितने डिलीवर करें, और मेटल्स को लेकर आउट परफॉर्मेंस तो हम फ्राइडे से देख भी रहे हैं। एक्सिस बैंक वो अपडेट्स आते हुए कि क्यों वो क्वालिटेटिव एसेट क्वालिटी का असेसमेंट हुआ, शायद आरबीआई की सख्ती से ये ऐसा हुआ है, तो ऐसे में फिर थोड़ा सा लिंगरिंग वरी सी। जियो फाइनेंशियल्स फ्राइडे को बाजार बंद होने के बाद अपडेट्स आए कि इन्होंने जर्मन इंश्योरर अलायंस के साथ एक 50-50 जेवी करा है भारत के री इंश्योरेंस मार्केट में उतरने के, प्लस लाइफ और हेल्थ इंश्योरेंस पे भी दोनों एक नॉन बाइंडिंग टर्म शीट साइन करे थे। डॉक्टर रेड्डीज इनके एक श्रीकाकुलम प्लांट को यूएस एफडीए से 7 आपत्तियां मिली। इंडसइंड बैंक और सोना बीएलडब्ल्यू खबरों में, इंडसइंड बैंक परसों फंड रेजिंग के लिए बोर्ड बैठक करने वाला, और सोना बीएलडब्ल्यू ने एक चाइनीज जेवी कर दिया। रिजल्ट स्टैक रख देता हूं, वैसे रिजल्ट की लिस्ट बहुत एग्जॉस्टिव, मैं कुछ सिलेक्टिव, कुछ बैंक्स रख दिए, कुछ सीमेंट मैन्युफैक्चरर रख लिए जो आज रडार पे हैं। इसके अलावा नतीजों के लिहाज से आज भी एक इंटरेस्टिंग दिन, निफ्टी में इटर्नल और अल्ट्राटेक सीमेंट के इंपॉर्टेंट नंबर्स आ जाते हैं। आज सुबह जो सीएनबीसी आवाज के पैनल ने टॉप कॉल्स हाईलाइट कर दे, अपने प्रिफर्ड पिक्स वो आपकी स्क्रीन पर रैप अप के तौर पे आएंगे, और प्लस ब्रोकरेजेस के रडार पे जो स्टॉक्स हैं वो भी रख देंगे।
ओके चलिए, अब टॉप कैश कॉल्स का समय हुआ। राजेश जी, गावस्कर और रचना जी। रचना जी आप शुरुआत करिए।
वो कुछ बोल रहे, मुझे सुनाई नहीं दे रहा।
रचना जी आपकी ट्रेड कैश कॉल में।
जी मेरी तरफ से कैश कॉल में मैं बीकाजी में स्टॉक में बाय देना चाहती थी। बीकाजी का सेटअप जो है वो इस तरीके का है कि यहाँ पे शॉर्ट टर्म के लिए भी पे करा जा सकता है, एंड इवन इफ यू आर विलिंग टू होल्ड ऑन फॉर अ लॉन्गर टाइम तो भी यहाँ पे चांसेस है। और प्राइस लेवल्स के हिसाब से यहाँ पे एज ऑफ नाउ वी आर सिटिंग एट अ लेवल ऑफ अराउंड 756। अगर आप इसमें शॉर्ट टर्म के हिसाब से 740 का ऐसे लगा के इसको लॉन्ग करें तो आप 770 780 के टारगेट्स लगा सकते हैं। और अगर आपको पोर्टफोलियो में ऐड करके रखना है कुछ टाइम के लिए तो उसके लिए भी यहाँ पे स्कोप है। इस केस में आपको 690 पे ऐसे लगाना चाहिए, एंड अपसाइड पे आप 850 या 900 तक के टारगेट्स फॉर टाइम पीरियड ऑफ 6 मंथ्स लगा सकते हैं।
और विकास जी की नमकीन खाई और मूड सही रखिए। रचना जी थोड़ा सा गर्म हो गई थी, लेकिन अब ठंडी पड़ जाएगी कुछ देर में, अब आउटपुट बिल्कुल ठीक हो गया है। प्रकाश सर के पास चलते हैं। प्रकाश सर गुड मॉर्निंग, आपका कॉल सर।
गुड मॉर्निंग टू यू वीरू। स्टॉक का नाम है जुबिलेंट फार्मा। अब ट्रेड करें 1234 के आसपास, 1232 34 के आसपास ट्रेड करें जुबिलेंट फार्मा। मेरे ख्याल से स्टॉक लगाना चाहिए 1220 का, करीब 12 रुपये का, 12-13 रुपये का सौदा। नियर टर्म टारगेट 1260 पॉसिबल जुबिलेंट फार्मा। उसके बाद 12 स्ट्रॉन्ग रेसिस्टेंस है, वहां पर तो निकल जाना चाहिए।
ओके, जुबिलेंट फार्मा आई हो गई गावस्कर की पिक। राजेश जी आपने क्या पिक किया?
अभी देखिए मेरी नजर है गुजरात पिपावाव पोर्ट के चार्ट के ऊपर। बहुत ही क्लीन ब्रेकआउट मिला था परसों के दिन, 200 EMA के ऊपर का क्लोज था। आज भी ये परसों का है खुद से मुझे लगता है निकाल रहा है। तो 163.80 पे यहाँ पे मुझे प्री ओपन में प्राइस दिख रहा है। 160 का स्टॉप लॉस रखे और गुजरात पिपावाव पोर्ट बाय करे। इस तरफ स्विंग का टारगेट होगा 170 से लेके 175।
गुजरात पिपावा। अब एक काम करता हूँ, तीनों की तीनों कैश कॉल्स आपकी स्क्रीन पे रखता हूँ। यहाँ पे रचना जी ने आज पिक किया, विकास आपको बाय करना है और पॉसिबल टारगेट आप 770, 780, 740 स्टॉप लॉस। अगला ट्रेड पिक किया प्रकाश सर ने और उनका कॉल रहा आज जुबिलेंट फार्मोवा 1260 के लक्ष्य के लिए और तीसरा ट्रेड यहाँ पे राजेश सतपुत्री जी ने पिक किया और उनका ट्रेड रहा गुजरात पिपावा 170, 175 के लक्ष्य के लिए। तो यहाँ पे स्पॉटलाइट पूरा और आपने बिग कॉल्स भी देख ली और कैश कॉल्स भी देख ली, हाउस व्यूज भी देख लिया। अब चलते हैं अनुज के पास आज की रणनीति पर। अनुज, इंडेक्स प्लीज दिखाइए, ऑलमोस्ट 25,000। क्या आप इसे एक निर्णायक ओपनिंग मानते हैं इन अर्निंग्स के ऊपर और व्यू क्या रहेगा लेवल्स?
देखिए, सबसे इंपॉर्टेंट एचडीएफसी बैंक है, नीचे नहीं खुल रहा है, उल्टा 1% ऊपर खुल रहा है और फ्राइडे को जो शॉर्ट करके गए हैं वो 1% के गैप अप पे क्या सोच रहे होंगे मैं देख रहा हूँ। खैर वैसे इसमें काफी मूविंग पीसेस हैं, बहुत ज्यादा टाइम मतलब पहले एक ट्रिक से नहीं डिसाइड कर सकते। पहला सपोर्ट 24,900 से 24,950 फ्राइडे का लो और उसके बाद सबसे क्रूशियल सपोर्ट 24,850 से 24,900 है वीरो। रेजिस्टेंस 25,050 से 25,150 पर और उसके बाद 25,200 25,250। कोई भी ट्रेड बहुत जल्दबाजी में मत लीजिए, पहले एक घंटे का एक्शन देखिए फिर डिसाइड करिए। आई थिंक बैंक निफ्टी क्रूशियल है क्योंकि आईसीआईसीआई बैंक और एचडीएफसी बैंक अगर दोनों ऊपर खुले तो बैंक निफ्टी के लिए पॉजिटिव होगा, लेकिन आज बैंक निफ्टी मुझे लग रहा है काफी वॉलेटिलिटी रहेगी। 55,800 से 55,900 लोअर साइड पर एक बहुत बड़ा डिसाइसिव फैक्टर है और 56,800 अपसाइड पर। अगर आप 56,800 निकाल लिया और उसके ऊपर निकल गए तो बड़ी बड़ी शॉर्ट कवरिंग भी आ सकती है। थोड़ा सा आज बैंक निफ्टी में बहुत ज्यादा जल्दबाजी नहीं करनी है, थोड़ा देख के डिसाइड करेंगे। लेकिन मेन चीज तो एचडीएफसी बैंक है बीरू, 1% ऊपर खुल रहा है, फॉरगेट अबाउट नीचे। और ये जो प्री रिजल्ट में आप कई बार टेम्पटेशन में ट्रेड कैरी करते ना, कई बार वो रिस्की हो सकती है, ये एक एग्जांपल है। खैर नहीं भाई, ये तो पहला ही रेट है, प्री ओपन का रेट है, एक्चुअल ओपनिंग में देखते हैं किस तरीके से रिएक्ट करेगा।
ओके चलिए, तो ये हो गया यहाँ पे जनाब निफ्टी बैंक इन बड़े दिग्गज स्टॉक्स की प्राइस परफॉर्मेंस को देखते हुए पोस्ट अर्निंग्स। अनुज, आज के बिग स्टॉक्स?
देखिए, आज बिग स्टॉक्स में पहला एक्सेस है, सीएनबीसी टीवी18 की एक बड़ी एक्सक्लूसिव है कि आरबीआई ने इंटरवेंशन किया है और कहा है कि आप अपने एनपीएस थोड़ा सा बढ़ाकर दिखाइए, आप थोड़ा सा कम रिकॉग्नाइज कर रहे हैं उनको। हालांकि उन्होंने ये भी कहा है कि ये इंडसइंड बैंक नहीं है, अकाउंटिंग वाला इशू नहीं है, लेकिन जो भी है जहां आरबीआई इन्वॉल्व हो जाए वहां दिक्कत है। स्टॉक रेड में, एयू बैंक रेड में क्योंकि स्टॉक चल चुका है काफी और नंबर्स उस हिसाब से उतने अच्छे नहीं है, लेकिन 3% का गैप डाउन हो रहा है, ये आपको देखना है उसके बाद आपको शॉर्ट करना है या नहीं। जेएसडब्ल्यू स्टील ग्रीन क्योंकि नंबर्स अच्छे हैं और कमेंट्री काफी पॉजिटिव है, इसके लिए जेएसडब्ल्यू स्टील को ग्रीन में लिया है। और उसके अलावा जियो फाइनेंस को भी ग्रीन में लिया है, हालांकि स्टॉक काफी चल चुका है लेकिन न्यूज पॉजिटिव है, वो जो एलायंस के साथ उन्होंने टाइप किया है, जॉइंट वेंचर किया, उसकी वजह से। बाकी मैंने बिग स्टॉक्स में जो 3 नंबर था उनको नहीं लिया, लेकिन तीनों की फटाफट मैं आपको बात बता देता हूँ। आईसीआईसीआई बैंक ऑब्वियसली क्राउन ज्वेल और करीब 1.5% ऊपर खुल रहा है। एचडीएफसी बैंक मुझे नंबर्स उतने बुरे नहीं लगे, जिस हिसाब से पोजीशनिंग थी मार्केट की, लेट्स सी आज कैसे रिएक्ट करेगा। और रिलायंस हार्डली अपने नंबर से बहुत ज़्यादा रिएक्ट करता है, तो आज भी कोई बहुत ज़्यादा मूड में नहीं है। लेकिन असली मेन एचडीएफसी बैंक है, आज का डिसाइसिव फैक्टर एचडीएफसी बैंक है, वो कहाँ तक जाता है।
एचडीएफसी बैंक सारा दारोमदार इसी पे रहेगा। 1978 एक बार तीनों को रखेंगे स्टॉक्स को जरा देखते हैं। देखिए, एचडीएफसी बैंक जैसे कि हम कह भी रहे थे और जो कि मैंने पल्स में प्रेजेंट भी किया था, ये वो स्टॉक है जो कि प्रायर टू नंबर्स शॉर्ट लेके गया है, जबकि रिलायंस और आईसीआईसीआई बैंक की पोजीशनिंग उतनी खराब नहीं थी, ये अपने साथ लॉन्ग कैरी करके ले गए हैं। तो 1978 पर ये खुलने की तैयारी करता हुआ और आज के और आईसीआईसीआई बैंक करीब 1.5% ऊपर। और आज के कुछ पॉजिटिव सरप्राइजेस में अगर आप देखें तो रख देता हूँ स्क्रीन पे। इनफैक्ट मेटल्स अच्छा करें, जेएसडब्ल्यू स्टील, आईसीआईसीआई, एचडीएफसी बैंक, और ये इंडिगो आज अच्छा मूव दे रहा है और लीडर इन द सीमेंट स्पेस, जिसमें शुक्रवार को भी लॉन्ग क्रिएट हुआ था। अल्ट्राटेक सीमेंट 62 रुपए ऊपर खुलने की तैयारी करता हुआ, तो ये कुछ स्टॉक स्पेसिफिक अच्छा एक्शन है और वो एबीबी का रिवर्सल अभी भी कंटिन्यू कर रहा है। चलते हैं मंडे मॉर्निंग इस ओपनिंग को देखने के लिए अनुज के पास। अनुज, ओवर टू यू एंड बेस्ट ऑफ लक।
थैंक यू हीरो। देखिए, थोड़ा सा अभी भी एक डिस्कनेक्ट है गिफ्ट निफ्टी में और प्री ओपन में, लेकिन देखते हैं 25,000 पर शुरुआत गिफ्ट निफ्टी के हिसाब से। और बैंक निफ्टी ये अच्छे खासे ओपनिंग के साथ शुरुआत के साइन दे रहा है, 275 पॉइंट ऊपर। फर्स्ट रेट्स निफ्टी के किसी भी वक्त आएंगे और देखते हैं कहाँ पर मार्केट खुल रहा है। करीब 25,023 पर एक्चुअली 50 पॉइंट ऊपर ही खुले। बैंक निफ्टी 150 पॉइंट ऊपर खुला, लेकिन अब थोड़ा सा कूल ऑफ हो रहे हैं, एकदम से 24,980 पर आए 25,000 के ऊपर खुलकर। उसके बाद बैंक निफ्टी अभी भी करीब 300 पौने 300 पॉइंट ऊपर है और निफ्टी ITE करीब 117 पॉइंट नीचे आपको ट्रेड करता हुआ दिखाई देगा। मिड और स्मॉल कैप में हल्की सी गिरावट है, मिड कैप करीब 1/3% नीचे है, स्मॉल कैप भी करीब 1/4% नीचे। एडवांस डिक्लाइन अभी के लिए ठीक ठाक है। मैं बाकी सब चीजों पे जाऊं उससे पहले वो 3 इंपॉर्टेंट जो नंबर्स हैं जिन पर रिएक्शन आ रही है वो देख लेते हैं। और एक चीज बताऊं मैं आपको, HDFC बैंक देखिए आप, HDFC बैंक एक्चुअली 1% ऊपर खुला और सस्टेन कर रहा है। ICICI बैंक 1.5% ऊपर खुला और रिलायंस हल्का सा 0.75% नीचे खुला। चलिए अब बाकी के सारे सेक्टोरल मूवर्स पर आते हैं, देखते हैं वो किस तरीके से कर रहे हैं। एक बार जरा लेकर आइए सेक्टोरल हिट मैप मार्केट का। ओके, निफ्टी बैंक 1/3% ऊपर, निफ्टी फाइनेंशियल्स करीब 2/3% ऊपर, मेटल्स में भी 2/3% का जंप दिखाई देगा आपको। इसके अलावा नीचे क्या है, थोड़ा सा एनर्जी आ रही है, रिलायंस का इंपैक्ट होगा, ऑयल एंड गैस, ये भी रिलायंस का इंपैक्ट है। PSU बैंक्स में हल्की सी गिरावट है, डिफेंस और कैपिटल मार्केट से जुड़े स्टॉक्स में हल्की सी गिरावट है। मिड कैप गिर रहा है अच्छा खासा, एक्चुअली मिड कैप करीब 1/3% नीचे और एडवांस डिक्लाइन ऑलरेडी डिक्लाइंस के फेवर में आ चुका है। चलिए निफ्टी गिरने से शुरुआत कर लेते हैं क्योंकि ज्यादा टाइम।
To build anything that truly lasts, it takes time. Takes time.
China's talking about boosting up the economy yet again. That could spell good times for metal stocks. And the other factor is that pricing, in fact, has recovered a little bit. Sona BLW, as well mentioned, that one as well has opened up with a gain of around 2.5%. But, you know, the contours of this deal are going to be important. So after the kind of run that we saw post Vivek's story and post this morning's gap up as well, I'll be interested to see whether or not it can build on from here. How material is it? So that's going to be important. The stock has already run up 10% here in the last few trading sessions. You have Vintage Coffee. That's another one we don't normally talk about, but I recall Nimesha told us about fundraising in one of the D Street chatters, and the numbers as well look quite good. So they raised some money, some pretty decent names came in there, and the results over the weekend look good. So that stock is high and volume's quite high. Aadhar Housing is another one that's looking up, I think. You know, the volume's pretty high on that one. Aadhar Housing up close to around 2% as we speak. PVR, let's pull up that stock. You know, you had a newbie that debutants that were launched in a movie over the weekend. Sayara, you know, the gentleman Ayan Pandey lives down my road. In fact, young lad out there, 83 crores when you have two debutants, you know, in a movie. So PVR, I think it trades at around 10 times EV per EBITDA. The pipeline is strong for the remainder of this year. For the time being, the stock is up close to around 2% because there's a box office surprise over the weekend. 85 crores coming in from debutants. Bandhan Bank, the stock's under pressure. This is in reaction to its numbers. And the stock as well has moved into the F&O band, so we'll have to keep an eye out on that one. MRPL, I think it came out with a set of numbers. That stock, after seeing a big run, actually it's coming for profit taking. It's down 7.5%, so that's one of the casualties of the morning. And AU Small Finance as well, that's the other one that's selling off big time, down more than 7% as we speak.
Well, you know, that's how we're starting up this morning. 2.4 point change on the Nifty. Nifty Bank is got a little bit more green at this stage. Otherwise, it's a very, very flat kind of start to things. So, do you want to comment?
I was just talking about AU Small, and that's why I was highlighting the stock right from the word go, because the positioning, the build-up on tier 2 banks has been very, very smart. The market believing that that's where you'll get better growth than top-tier financials. On AU, profits are fine, but everyone's focused squarely on their guidance of higher credit costs, specifically for their MFI business. And the market doesn't want to deal with anything where there could be an asset quality issue or something that's not been baked in. And that explains the sharp reaction on AU this morning.
Absolutely. And keep an eye on this one. Big volumes, 1 million plus shares already. Devina Mehra is now joining us, founder, chairperson and managing director at First Global. She's the market master of the day. Devina, great to have you with us on the program as always. You know, at a broader level, Devina, briefly, if you could sort of run us through your thoughts. Are you constructive that the market does well? You know, very soon, and if you were to look at the silver lining, very soon, earnings growth has been poor, we all know that. But very soon you're going to sort of flip over and start to look at FY27 estimates. And that maybe provides us some leeway, some flexibility to maneuver. But what's your sense, Devina?
Good morning, Prashant. My view, I was looking at my February interviews. I had said at that time that if you were waiting for a correction to invest, have you invested? And we know that markets, depending on which index, are up 15 to 20% since then. But even now, I would say that whatever is your equity allocation, remain invested. I mean, markets could be choppy for a while. There could even be some downside from here. But in the medium term, I remain positive. You mentioned earnings. Yes, Q1 earnings have not so far been particularly great, and that was to be expected. I think you'll see improvements in the coming quarters because there have been some positive macro developments. We, of course, know that the GDP came out ahead of expectations, but besides that, the one big positive has been inflation. So, inflation, especially food inflation and crude, these two things are important for India and important for the corporate sector also because they impact consumption. And there has been over the last 1 year good news on both. I even saw, some newspaper which does an estimate of the household thali, and not just the inflation. Actually, the price has come down, which rarely happens. And as we know that when inflation is high, because India is still largely a fairly poor country, it crowds out other kind of consumption. So if dal prices are too high, people don't buy shampoo. It is as dire as that. So now you see the other side. So this is the good thing on the revenue side, and also on the margin side, you will see some improvements, especially since crude and downstream are a big portion of inputs for many industries. So I think you will see improvements on both those fronts in the coming quarters. You may not have to wait till FY27 for that.
Devina, if someone came to you and with a meaningful amount of money and said, well, I want to put this to work, right? Would you tell them to sip it into the market slowly through funds, etc.? Would you say this is this is as good a time as any to sort of take slightly chunkier, deploy in a more chunkier fashion? Just that specific question, Devina. What's your sense?
You could deploy it probably over a few months, maybe 3 to 4 months. You can split what you want to invest. So that it's something that you can do rather than deploy it all at once. But I think definitely you should, whatever is your equity allocation, again, I'm repeating, never have 100% in equity because equity predictability is always low, not just on a 1 year basis, but sometimes even on a 5 year basis. So whatever money you deploy in equity, you should not have to touch for at least 8 to 10 years. So give that caveat, and then whatever is your equity allocation, yes, if you are not invested fully, you can do it over 3-4 months.
Prashant, when you asked Devina about you have a pot of money which you want to deploy, at least she said deployed in India, staggered. I thought she'll say deployed in other global markets because Devina, as we all know, is a big sort of votary in favor of diversification, global markets, global assets as well, and not being squarely focused very narrow on India. On that, Devina, and there it's easy to get negative, but really help us find the right lens through which we need to look at the Indian market right now. Look at reactions today. Numbers weren't too bad, but the market is drifting in. It's just expectations are still continuing for solid growth, 15% plus growth, and very, very few companies are able to deliver that. So is this a temporary patch? Do you think we should just keep investing in this patch, or is it a bigger concern?
So Surabhi, coming to what you said at the beginning of your question, yes, global diversification you must do. That is one area where Indians are normally lacking. So over a period of time, at least 30 to 40% of your investment should be in global markets. And I see now other fund managers picking up sort of my arguments here and there. And suddenly in the last 1 year, I see fund managers now saying that I'm investing personally globally, whereas that last year's portfolios didn't show any global exposure. But that apart, I mean, it is a good thing to have global exposure. And but coming to what you said, yes, I mean, as I said, the markets could be choppy for a while. There could be some downside, but in the medium term, I still remain positive, which is why I'm saying that you must invest to the extent of your equity allocation. And this is a data point I have repeated often, that when there is no imminent, very overwhelming evidence that a crash is coming, most of the time it remains, it makes sense to remain invested because in 40 years you miss out the 10 best days, you miss out 2/3 of the return. And normally good days come only when there are these questions in the market that should I be invested, shouldn't I be invested, should I, it's the time to go out, should I stop my SIP? That's when the good days come. They don't come in a mad bull market. So in 2024, everybody was convinced that they could make 30-35% compounded forever. I had family officers tell me that, let alone small investors. And even saying that I don't want too much, 30% is great. Like 30% is too much. So at that time, people were not asking me that should I stop my SIP. So the questions always come when there is uncertainty, and often that is the time when the market actually gives sharp moves.
All right. Hi, Davina. Good morning. Good to see you. When markets are drifting lower actually as we speak, but you were talking about some pot of money or gold or something. Wow, that really, brightened up the morning. That said, just to clear the point, a lot of retail audience will be looking in there. What would your advice be in terms of equity allocation if you're allocating fresh money today? What would it be? And I think the point that you made on within equity, 30% should be allocated in global equities, if I got that correct, just to reconfirm.
Yeah, actually of your total investment, 30% should be overseas. So even non-equity investment, there is no reason why it should be 100% in India. So that remains. So I mean, when you're talking of equity allocation, the first part of your question, you're talking the sectors?
No, total overall equity allocation. And then we could get to sectors, so that will be the next part. But first, what would your advice be?
Yes, I just said that if you, I think you should be invested. If you want to stagger it, you can stagger it over 3 to 4 months of whatever is your equity allocation. That is still not invested in the market.
Fair enough. By the way, Devina, so many other things, and the US, for example, right? I mean, big tech is doing well, and all these policies are aimed at, the AI-related policies and the R&D expenses, where big tech is one of the largest spenders. Firing on all cylinders. NVIDIA, so that's that entire pack are doing phenomenally well. The other part of the market, I don't know if you have any thoughts here, Devina, is crypto. I'm just asking you this. I mean, the stance of the regulator, the government here over the last couple of years has been absolutely clear. But here you have the president of the US, the White House, trying to mainstream crypto. And let me tell you, by the way, they've signed the first bill into law. And I was just looking at Coinbase. Coinbase is up 3x since the lows in April. I don't know. You think this will force a relook at this as a...
Good morning. Let's have a look at where the OI stands as of now. There is a heavy bit of call writing in 25,200. So 25,200 may be a very, very big resistance at this point of time, at least for this week. And 25,100, and there is call writing in 25,000 as well as in 25,100. As things stands today, there is more call writing at 25,000 than on more than the put writing. It means even crossing 25,000 may be a risk. Given that the three heavyweights, which has the results has been already declared, ICICI, HDFC and Reliance, so the NIFTY may end up struggling between 24,500 to 25,000 this week. So that is what the picture we get based out on OI today. So let's see how the day progresses and whether it picks up from the low, and if there is any momentum returns to the heavyweight shares. As of now, HDFC Bank and ICICI are on positive, but Reliance is on the back foot. So there is a tug of war going on among the heavyweights itself. So we will wait and see. By the end, the picture will emerge how this week is going to pan out.
Because crypto actually undermines government fiat currency. So as the head of the government, should you be doing that? Should you be saying that don't use my currency and use crypto? I mean, just look at that if it actually catches on, it will replace the US dollar in international trade. Is that something he wants? Because all along for every other currency, he is saying that I don't, if you start doing trade in some other currency, that's a negative and you will be penalized for it. So it's not very consistent at the very least.
Well, we live in a complex world, and I think one clear takeaway is, as Devina, you always maintain, that don't put all your eggs in one basket, make sure you're well spread out. And I think that's a great piece of advice that our viewers can take back with them. Thank you so much for joining us this morning. Good to have you on, and we look forward to more conversations soon. Thanks for being with us.
Thank you.
Okay. That's Devina Mehra with her view on the market. The market, by the way, is down 60 points. And the Nifty is now trying to keep its head above 24,900. So there's definitely downside pressure, despite the fact that the two big banks have not disappointed on earnings. ICICI Bank and HDFC Bank are still trying to hold up. Well, we're going to stick with the financials, actually. Lots and lots of other names beyond the Nifty also reported numbers. And L&T Finance is the next stock, the next company that we're putting on the radar. It was a slightly mixed set of numbers for the quarter gone by. We have Sudeep Roy, Managing Director and CEO at L&T Finance, joining in. Mr. Roy, thanks for being with us. As I come to you, I just want to tell our viewers, just remind them, your growth is looking absolutely fantastic, right? The overall book is growing by 15%. The retail part of the book, I think, is even better, 18%. And you're continuing on your journey of, as you call it, retailization of the book. So that's very much on track. I think your NIMs plus fee, 10% plus, no problems there. But I want to start by understanding what's happening with provisions and asset quality. So let's look at this. You have utilized 300 crores of prudential provisions, and so far out of your entire provision buffer base, I think 700 crores have been utilized. So what is the thought process? This is why your credit cost has also come down. Sequentially and year on year, your credit cost is down. Just help us understand what is happening with the asset quality. Will you be rebuilding these provisions? Is there any stress? And what can you guide for asset quality this year?
Thanks, good morning, and thanks for giving us the opportunity. To answer your question, obviously, yes. As you are aware that we are one of the largest microfinance players in the country, specifically the third largest. And obviously, last year, the entire microfinance industry went through an asset quality cycle. So overall, some of them, given this product where it's like almost 90-95% loss given default, any customer who misses his payments, tends to flow forward. We actually have sort of had a reasonably sort of tight control on credit costs. We are the lowest in industry against an average sort of industry loss rates of 10% plus. Last year, we ended last year with about 4% loss rates. So in a way, we are probably an outperformer in terms of credit costs in the segment in the industry. However, a couple of sort of incidents happened, which obviously we couldn't predict. The Karnataka ordinance happened in February of last year. And in a short period of February of this year, actually, last financial year. And in a short period of 2 to 3 weeks, we saw collection efficiencies in Karnataka come down by almost close to 300 basis points. Now, that is something that you cannot plan for. And the fact is that the climb up on collection efficiency when such an event happens is a slow and gradual progress. We have been climbing up in collection efficiency in Karnataka by about 30-40 basis points with every passing month. But, that sort of gave a little bit of flows which we had sort of originally not planned for. However, in the rest part of the country, the collection efficiencies have been inching upwards quite well. We ended the overall collection efficiency in Q1 FY26 in the microfinance business at about 99.34%, which was, and we expect that this gradual restoration
to what we call normalized collection efficiencies of 99.6 to 99.7% will happen over the next 3 to 4 months.
So, Mr. Roy, just a couple of further questions on that. Has all of that Karnataka impact, this MFI ordinance, has that played out? Could there be further stress? Again, I'm going back to the provisions which you utilized. Will you have to, are you thinking of building up your provision buffers as well? Because you have, I think, just about less than 300 crores left now.
Yeah, we have.
So what's the plan? And will your credit cost guidance, the guidance you've given so far is, I think, 2.3 to 2.5%. Are you confident that that will hold?
See, the total amount of macroprudential provisions left is about 275 crores. And coming to your Karnataka question, the collection efficiencies have gone up from the sort of dip that we saw in February, but it's nowhere near normal of 99.5 to 99.6% what we expect. I think we will take till about end of September, maybe early October to reach those numbers in Karnataka. As regards to the usage of macroprudential provisions, you said that we have 275 crores left. The objective of the management to be as prudent as possible and to use as little of that as possible. And I do believe that the guidance on the credit costs that we have given, I do believe that we will be able to test those marks without support on any macroprudential provisions in Q4 of this year. Because by that time, I expect the asset quality headwinds which had appeared in the macrofinance segment and to a certain extent in the two-wheeler and the unsecured asset segments to completely dissipate by then. So yes, we continue to steadfastly guided to that particular range of numbers. And our three-dimensional credit engine Cyclops, which we had implemented and now almost over 12 months of implementation in our two-wheeler business, implemented now in our SME as well as our tractor business. In September, it will be implemented in our personal loan business, is giving actually quite encouraging results.
MFI, sir, you said that the MFI business asset quality issues will bottom out by which quarter?
It will bottom out. I do believe that it will bottom out by Q3. Our original estimate was Q2, but the fact is that the Karnataka ordinance actually slowed down the recovery process. But I completely believe that on the back of a very good monsoon and improving rural liquidity, it will bottom out by Q3.
All right. Hi, Mr. Roy. Good morning and good to see you, Ben. Growth you were aiming for, I think, was around 20%. Do you stick to that? And give us which segments will be driving this growth, particularly rural. I think you were guiding for 10 to 15% out there. So let's focus on growth first.
Yeah, I stick to the growth numbers. In fact, if you see on a QOQ basis, our disbursements have grown strongly by about 10% on a QOQ basis. In fact, the rural business finance vertical, which is our microfinance vertical, actually delivered a QOQ growth. Average last quarter, we were disbursing anywhere between 1,600 crores to 1,650 crores a month. In this particular quarter, we have inched that up to about 1,800 crores a month. And I do believe that on the back of improving credit quality situations in the microfinance industry, we will be probably touching anywhere between 1,900 to 2,000 crores of fresh disbursements every month. Since our two-wheeler credit quality has also improving sharply, this quarter our two-wheeler disbursements have gone up. And I do believe that the two-wheeler disbursement will continue to grow strongly. Personal loans disbursement on a year-on-year basis have grown at a very strong pace of almost 60% plus. Our partnerships with Cred, PhonePe and Amazon Pay are scaling very well. We'll be adding a couple of new large big tech partnerships over the next couple of quarters, which will add volumes to that. Our home loans business is also growing strong. And the gold loans business that we acquired from Paul Merchants, actually we'll be setting up about 150 to 175 branches in the remaining part of new branches in the remaining part of the year. So our gold loans business also will grow strongly. So overall, yes, we continue to guide toward that 20 to 25% AUM growth for the rest of the year.
Very quickly, Mr. Roy, NIM plus fee will be in that targeted 10 to around 10.5%, and ROA moves to around 2.8 to 3%.
So the NIMs and fees should be within the guided range of 10 to 10.5%. We have seen a weighted average cost of borrowing reduced by about 17 basis points on a QOQ basis. And I do believe that over the rest of the year, we will see rate efficiencies of almost close to 25 basis points, primarily because of the transmission of the rate cuts to the the liability side, liabilities originations. And we are also pushing, taking our yields up in every line of business. So yes, we will try to get our NIMs and fees in the corridor of 10 to 10.5%. And
and ROA?
In terms of ROAs, to probably by Q4, we should test near 2.8%.
However, that remains also to see how the credit quality pans out, which are very hopeful right now, that we should be near to 2.8% at the end of Q4.
Got it. Thanks a lot, Mr. Roy, for joining in and filling us in with all of those details. Well, we've got another management that's joining in, Mr. Jayant Acharya, the joint MD and CEO at JSW Steel. Hi, Mr. Acharya. Good morning. Thanks a lot for joining in. Well, let's first get out that steel demand factor out of the way. There are various sectors that have been a slowdown, but in steel, it appears things are still solid amidst the global uncertainty.
Yeah, so the steel demand, if you've seen in India, the last quarter grew by about 7.9%. It has been strong, considering the fact that the quarter YOY grew by 15%. So the base was seasonally higher. So 7.9% is good. The capex by the central government for April and May numbers are also positive. I think we are on track to achieve this 11.2 trillion of capex, which was announced. From the domestic side, so therefore we see stable economic growth. We see good steel demand in India. As far as the global challenges are concerned, I think we have seen quite a few in the last few months. The uncertainties have not fully settled down, geopolitically as well as on the tariff side. So we see still a resilient economy in spite of all this. And World Bank has still maintained the growth at 2.9%, slightly lower than the last estimate, but still at 2.9%, which is reasonably good.
Well, the problem is the grey area with regard to China. China, well, the production has come down, but exports continue to remain elevated. That's what's weighing on prices. How do you see this panning out going ahead? Will things improve with regard to the Chinese factor from here on?
Yeah, so just to go to the Chinese production side first. So China production for the first half of this year has moderated by about 3%. The domestic growth has also moderated by close to 6%. And their exports have been elevated, so went up by 17%. So that's the area of concern which we see. On the price side, I think China has improved over the last few weeks. We see that as a positive. The inventory in the China's monitored, areas or monitored markets are down by 4 million, from 14 million to 10 million, which is again positive. So given the fact that 30 million tons of production cuts are expected, or let's say production moderation is expected this year, I think going into the second half of this year, maybe we will see a better moderation on the export side as well. Coming to India, yes, I think the safeguard has been very timely, and it has certainly been of great help to the Indian steel industry at large. As you know, the global challenges, as I mentioned, have been quite high. The tariff uncertainties have also caused trade flows to get diverted. And India is it's a high growth market and is open to barriers. So therefore, this safeguard was very timely. We do expect that the government will be looking into the final safeguards which are due in the next few months, and will take necessary steps to see that dumping of steel in India does not happen.
Absolutely, and the government has come in with some measures, and that seems to be helping the industry. Mr. Acharya, morning. Thanks for joining in. I also want to talk about the benefits that you're getting because of a drop in some of the input prices, for instance, in coal costs. What is your expectation for the second quarter, for the rest of this year? I mean, do you expect a further decline?
So on the coking coal side, last quarter, as we had guided between $10 to $15, we have seen a drop of about $14 in line with our guidance. Going forward into quarter two, we expect a lower drop. As you said, the prices are stabilizing. So maybe between $0 to $5, say up to $5 is something which we see a moderation possible on coking coal side.
Oh, okay. So that's good news. I mean, there's a safeguard duty on one hand, some of your input costs are coming down. So what could this mean in terms of your standalone EBITDA per ton?
So on the Indian operations side, rather than the standalone, I would look at the Indian operations. Indian operations, the EBITDA stood at 7,496 crores, which was up sequentially by 16%. We were helped, or we benefited by the movement in prices, which went up. Also on the coking coal cost side, we the gain from the drop in coking coal. However, we had certain shutdowns. We had a blast furnace shutdown in Dolvi for a plant maintenance, and the same in BPSL, which increased our specific consumption and had some cost. So therefore, what you see here is net of that. These shutdowns expenses are not likely to be continuing, so therefore that would be a positive going into Q2. The other abnormal movement which we had was the foreign exchange movement. We actually had a forex loss of 343 crores, which is a mark-to-market on euro appreciation. Euro appreciated sharply between end of March to end of June, and that's had an impact. On the consolidated EBITDA, as we said rightly, the overseas operations have done well. US operations from a negative 3 million swung to a positive 20 million. Europe from a marginal negative swung to a positive 1.3 million euros. So therefore, the overseas operations contributed sequentially, to the EBITDA, and therefore you see the consolidated EBITDA at about 7,576 crores, which went up again by 19% sequentially.
Well, indeed, US has really turned around in this quarter, and maybe things could look up from here on as well. Got that. But Mr. Acharya, what is the outlook on debt from here on?
So on the debt side, 79,850 crores. We are about 3,200, 300 crores higher than last quarter exit. Primarily the build-up of some of the inventories in our new operations at JPML and certain other assets where we had to build up the inventory. If you recall, the inventories were sharply reduced in the previous 2 quarters. So we reduced our inventories in excess of 300,000 tons. We had to rebuild some of it because of new operations and for better service. The exports was also lower. If you see quarter on quarter, the exports also went down, primarily because of the international market situation. So that also resulted in a bit of a built-up in inventory. And that is the reason why you see debt going up. So the working capital will get unlocked as we go progressively into the coming quarters of the year. So that looks fine. The ratios are very good. I think what you should watch is that 3.34, which was the net debt to EBITDA, has now improved to 3.2. The net debt to equity remains flattish at about 0.95. So from the ratio side, we are very prudent, and we continue to look at the ratios and see that we are aligned to a prudent ratio management.
But what about the fundraising plans? Any equity raising plans in the near term?
Nothing as such. Nothing so far.
Okay, all right. So no fundraising immediately on the equity side. Got that. Finally, before we let you go, Mr. Acharya, I have to ask you about this, right? Bhushan Power and Steel, we know the matter is sub judice, it's in the courts, and you filed that review petition. But how are you thinking about it? I mean, just in case you don't get a favorable review, I mean, what can you tell shareholders right now on this?
Yes. So, this operations, as you're aware, in BPSL, we have turned around after JSW Steel has come in. The operations from a loss-making entity to increase in production, increase in capacity, and to making profits. That has been the contribution which JSW Steel has brought to BPSL. Last quarter also is reflective of that. So we had a bit of about 760 crores, which went up substantially YOY and QOQ both. As far as the review petition is concerned, we have filed a review petition on the 26th of the last month, and we believe we have strong grounds to pursue the review petition. The COC and the resolution professional, the RP, have also filed their separate review petitions on the subject. So the court has opened. I think we will await the listing in front of the bench and then await the outcomes. But we believe we have strong grounds to pursue this case.
Thanks a lot for that, Mr. Acharya. Wishing you all the best, and we look forward to chatting up with you. By the way, that initial dip that we saw in the Nifty has got bought into, big recovery from the lows, 80 points recovery from the day's low. Let's see whether or not this can sustain. For the time being, though, slip into that break, come back. The management of Canfin Homes is waiting for us on the other side.
To build anything that truly lasts, it takes time.
Good morning. Good morning. Market is recovering from its support S3 as you can see in the chart. So as long as it is above 24,906, can oscillate between the pivot 25,010 and 25,906.
If you live stream these days, you want a way to recognize your audience that's fun and interactive for them. Today, I want to show you how to use alerts to add animations to your live stream overlays in OBS for followers, subscribers, donations. Super chats, bits, no matter what platform.
Installing OBS can be confusing, and streaming isn't meant to be confusing. It is meant to be fun.
What is up, my YouTube friends? My analytics say that 80% of the folks that watch my content are not subscribed. Am I doing something wrong? If so, definitely let me know in the comments. But if you are looking for tools, tips, and tricks that can help make you a better YouTuber or live streamer, subscribe to the channel and click that bell so you don't miss any new content. It's totally free. This is a pretty simple process. First, we'll log on and set up our alerts in Stream Elements. Second, we're going to set up the alerts in OBS. And third, I'm going to show you how to test the alerts and move them around if you need to. Now, there are two popular services for adding alerts, Streamlabs and Stream Elements. Both have their benefits and negatives, but
If you've been watching the channel for a while, you'll know that OBS is a super flexible and powerful tool that you can do a whole bunch of different things with. You can live stream with it. You can record gameplay and upload Let's Plays to YouTube. You can do walkthroughs on how to use certain programs or websites like I do on a regular basis. You can even record just multiple camera angles at once within one piece of software and do a guide on how to assemble a Lego set if you wanted. What's up everybody, Dimitri of Chaotic Gaming here, and today I'm going to show you how to do a talkover recording using OBS, whether you're going to be using it for gameplay, for software, for anything really. We're going to try to go through it as general as possible, and you can spiff it up and change it up and do whatever you'd like to make it however you need it to be. If you want a more in-depth guide on how to set up OBS itself, I do have a relatively longer video on OBS setup. If you guys would like me to do a more brief version, please let me know in the comment section below. On what you would like me to focus on, and I'll try to record a new one, updated one. OBS has changed a little bit since, so it might be a good idea to do so. So once you've got OBS installed and ready to go ahead and go to your settings. We're going to go through a few quick brief things here. Stream is not going to be important. Output is going to be important. We're going to change this to advanced. And we're not going to have to worry about the streaming page. If you do want to use some of these things for stream, you can go ahead and do so. But the streaming stuff is not going to be important for what we're focusing on today. We're going to go to the recording tab. So the important thing about the recording tab is choosing where your videos are going to go by using the recording path. Choosing your format. I do recommend using MKV because if OBS crashes midway through a recording, it will not corrupt the file, which is super important. It also allows you to separate all the audio tracks in post if you decide you want to. Selecting your audio tracks. If you want to have those separate audio tracks, you're going to want to use this. If not, just keep it at the default of 1. And your encoder. So your encoder is going to be entirely dependent on what you're recording and what your hardware is. If you're just recording your desktop, a piece of software, a website, stuff like that, you can just go ahead and use X264, which is using your CPU, and that is just the most simple, easy way to do it. And you can set that up, and depending on your CPU, you can set it to have much higher quality presets. You can set it to go, slow, very slow. All depends on your hardware. You can just keep it at the default though, very fast if you want. You're most likely going to be recording at 1080, so having like a super high quality preset isn't the biggest deal, especially if you're just doing a guide on stuff. You don't need the highest quality, you don't need that crazy preset to be done. But if you do have a newer NVIDIA GPU and it has an NVENC encoder, I'll leave a link in the description for NVIDIA's webpage that tells you which ones have the new encoder and which ones don't. But if it has a specific NVENC chip on it for the
sales team experiment and the experience that we are having is quite good.
What does it mean, sir, in terms of cost to income ratio?
Cost to income ratio, we are targeting about 18%, 17 to 18%. Around this quarter, it is a little higher because in the
18.3%, so it stabilizes at 17 to 18%.
18%, about 18%, because we have had the increase in our salary for the staff because we had.
What does it mean, sir, in terms of cost to income ratio?
Cost to income ratio, we are targeting about 18%, 17 to 18%. Around this quarter, it is a little higher because quarter, which in the coming quarters will probably even out a little bit.
All right, where are the return ratios headed? The ROA is around 2.2% and ROEs is ballpark around 17%. Where do you see these numbers stabilize at?
ROA, we are, we will be able to maintain 2.15 to 2.2%. That's the thing that we are looking at. That should be maintained. ROE also around 17%. Of course, at this time the costs have been slightly elevated. But going forward with our provisioning also, which will kind of reverse a little bit, and also the evening out of the expenses, I think that also would be around 17%.
Okay. All right, Mr. Iyer, we'll leave it on that note then. Thank you very much for joining in. Good to get that perspective from you on the business. That's Canfin Homes. By the way, let's quickly go back to the market and water recovery. It's really firing on all cylinders. Look at the U-shaped on the Nifty. And it's because of a lot of buying that's come in financial. So anyway, HDFC Bank and ICICI Bank are continuing their good work. But stocks like Bajaj Finance, etc., they've also joined in. There's buying on Eternal in the last 30-40 minutes as well. So this is where the bulk of it is coming in from. Reliance is still under pressure, mind you. IT is still under pressure. That hasn't changed. But some of the financials where the market has conviction, they're simply getting a bulk of the buying.
Even where there is little conviction, Axis low, 25 rupee recovery from the day's low.
Yeah.
Axis low was about 1,070. It's back at about 1,090.
Yeah, absolutely. I just want to point out one more stock, by the way, beyond the Nifty. You've got to look at Mastech. 9% up on Mastech, and look at that. Maybe we'll get Rima in to explain this to us in a bit. The first quarter was subdued. I mean, the constant currency revenue was under pressure. Margins were again lower. But from what I recollect, it's the deal win commentary, and they've had strong deal wins, including several AI wins. Perhaps that's what the market is really like, looking forward to the future. what a move. I think the best that we've seen from IT so far.
Well, indeed. And actually today in terms of the recovery that we've seen in the banking index, the banks that matter are doing well. Because you still have IndusInd Bank, you still have RBL Bank, you still have AU Small Finance Bank who are taking it on the chin. But the ones that matter,
the big boys are standing up.
HDFC Bank, Kotak Mahindra Bank, ICICI Bank, all of them have seen a big recovery from the day's low. So the banks that matter, they are putting their hand up, they're getting counted. Explains why we've seen that sort of recovery. And just to word a technical factor on the NIFTY Bank, went down to around the 50 DMA and bounced from around that 56,000 odd mark, which is another important technical level out there. That said, Mitesh is back with us. Mitesh, what are you making of this recovery? Sell into it, or do you think it's good for more?
Not yet. I think so I spoke about 24,900 being the decisive level. We did dip marginally below that. We had a low of around 24,880 or thereabouts, 882. And the bounce back has started, but I think you will see this markets, possibly make an attempt towards 25,200 odd zones, 25,200 and then 25,320. So I think these are the two levels I'm watching on the upside. So for the timing, it looks like we'll possibly be heading towards the upper end of the range. And therefore, I think, there's a good chance that this recovery could extend. On the stock side, I have a buy on Ambuja Cements. That's a buy with a stop at about levels of 597 for targets of 630. And AU Bank, though, I think that's a negative chart, very negative kind of a breakdown over here. So sell with a stop at 755 for targets of around 700.
Okay, so those are some trades that you can work with. Let me ask Mitesh on this. Mitesh, I'm just wondering, just even if it's an intraday trade, short trade, anything on Mastec? Stock surging 9%.
Yeah, I think this very strong breakout which has taken place over here. My sense is that the stock will possibly see more upsides. We saw the stock kind of peak out at about levels of 2,800, 2,790, 2,800 way back in February 25. So I think that top would be the first target area. So 2,790, which is about another 70, 80 points higher from here. And then 2875, which was important pivot in December. So I think these are the two targets which Mastec can do.
Okay, all right, Mitesh, thank you very much for that. So those are individual trades and views on stocks as well. Mastec, of course, flying away with a 9% pop. Manisha is here with what is top of mind for her as far as commodities go. Manisha, good morning.
Morning, and thank you for that, Prashant. I'm looking at the base metal as a sector because we're looking at strong gains as we start a new week. The dollar index is off its highs, and that has been supportive. The market's also looking at strong U.S. economic data that we saw in the previous week, whether it was the strength in U.S. retail sales numbers or the U.S. jobless claims number actually seeing a decline, telling you that perhaps an interest rate cut is far away, but that clearly has supported the markets. Even the Chinese data, for that matter, beat street expectations, whether it was about the second quarter GDP numbers or the retail sales. That is exactly where the metals are taking strength from. And then there are expectations of stimulus measures coming in from China. China has reiterated, pledged it yet again. And interestingly, it also is the China Politburo meeting which is on, which sets course for the policy measures for the rest of the year. And that is something that the street is watching out for. I'll start with copper then, and we've seen this price continue to see higher trends there. We're not trading too far away from its all-time highs, and that is also because the U.S. tariffs of 50% take effect from 1st of August. Ahead of that, we've seen a lot of copper flow into the U.S. markets, but even now as we stand and until the 1st of August, the expectation is that the U.S. copper premium to LME, which is at 25%, perhaps could just be as strong. Aluminum also has continued to gain, and we are trading at a March 2025 highs at this point in time, and the last 1 month has seen nearly 4.5% to 5% of gains come in for aluminum. Strong gains continuing for zinc as well, as we see China do a lot in sense of construction there. We are looking at prices trading at April 2025 highs. The Chinese smelters are facing pressure to cut production as capacity has output demand, and that clearly has been supportive. In any case, the kind of production that we have seen come in for zinc in the global markets for the previous quarter also has seen a bit of a decline, supporting prices there. And then you have the Chinese steel and iron ore prices continue to trade on the higher side. It's a 2-month highs for steel. It's a 3-month highs for the iron ore prices as well, which has been quite supportive. And if you look at what we've done in sense of metal prices on a month-on-month basis, we are looking at stronger gains. For copper prices, it has been 15% of gains Aluminum has gained up by 4.5%, 6% gains in zinc as well. And it has been a 13% of gain coming for the iron ore prices and 6 to 7% of gains also in case of nickel and steel. So good going as we look at the previous month in case of metal prices.
Okay, and no wonder all the metal stocks are shining bright in the market today. Thank you so much for that, Manisha. We do have to take a very quick break. Come back on the other side and we'll get you more stock-specific action from the day.
Switzerland.
Welcome back. Okay, we've been talking about some of the stocks that are working really well, and that's large banking names. On the flip side, look at AU Small Finance Bank. That stock has been down 7%. The market seems to be really focused on why AU Small Finance has increased their credit cost guidance for the year. Gaurav is here to explain the details to us. Gaurav?
Well, yes, AU Small Finance Bank is down in trade today, and the reason being that they have upped their credit cost guidance from 0.85% to 1%. And the major reason what the bank has given during their con call is that in the MFI segment specifically, their recoveries are still soft, and that is the reason why they have upped their guidance. What they're also saying is that in the MFI segment specifically, they're expecting this to rise almost to 5% versus what it was guided in the range of 3 to 4%. So definitely there is some pain which is coming up from the MFI segment. Another disappointment from the result was the net interest margins. Now they had declined almost by 40 basis points. Now they are reported at around 5.4% versus what it was expected to fall almost by 30 basis points. That was again a little bit of disappointment for the market. From here on now, management is expecting NIMs to decline in second quarter because of the rate cut impact and will improve from third quarter onwards, and it will also be better and flattish in terms of the overall average that we have seen by FY27. On the other hand, now profitability, although it has increased, but because of these two specific reasons, we are seeing some kind of pressure in the stock price. Let's also not forget that in the last few days, we have seen AU Small Finance Bank performing really well. In fact, in the last 6 months, we have seen the bank outperforming the major indices. As a result, now Investec has actually cut their target price to 910 rupees. What they're saying is that the recoveries is something which is hurting the margins right now, and that is the reason why they have also cut their PPOP estimates. And on the other hand, we also have Nomura, who gave a target price of 610. So definitely some pessimism is coming up from the brokerages as well, and as a result, we are seeing the stock is down in trade today.
Okay, that's AU Small Finance. Stock's down 7%. By the way, I don't know, Prashant, are you one of those people who's anti-dairy and don't do dairy?
Oh, no. Why?
That explains, right? There's no anti-dairy feeling when it comes to Hatsun Agro. Look at the stock, it's like 7-8% higher. So it's dairy all the way.
Dairy all the way. What is that famous Amul ad? Dood. Anyway, we'll take a...
No, we've got actually Mangalam on this to explain really how the dood is helping.
Mangalam, did I take away your punchline?
You didn't. That was an Amul tagline. I'd just say the dude's here to talk about dood. But, the results post-market on Friday, good set coming in. Hatsun Agro also benefits in the first quarter on account of it being summer, irrespective of the rains that took place, etc. Their ice cream business has been doing well. And add to that, they've gone ahead and acquired Milk Mantra a couple of quarters ago as well. So that is aiding their consolidated numbers. But the real, cream, so to say, lies in their gross margins. That's coming at a multi-quarter high this time around. And all the dairy companies have been calling out increased procurement prices, because of which they've gone ahead and taken price hikes on milk as well. We heard Amul, Mother Dairy and the likes go ahead and increase their milk selling prices by about ₹1.50 per litre, up to 2.5 rupees as well. Add to all of this the higher contribution of value-added products, be it ghee, butter, and the others coming in would support their margins, and that's really happened for Hatsun Agro as well. 9% revenue growth. The gross margins have expanded by nearly 60-70 basis points. The EBITDA, as a result of which, has also grown at 9%. The net profit growth has been slower, largely because of higher depreciation, the acquisition that I alluded to. So the key to track is growth via scale of acquisitions, and secondly, outlook on further contribution coming in from value-added products. Add to all of this, the stock hasn't been doing much. In fact, it's down almost 24% from its 52-week high. And in the last 12 months itself, it's down by almost 18%. So this is adding further power to the milk.
Power to the milk. Mangalam, thank you very much for that. So it's Hatsun for you. We'll take a quick commercial break here. We get into our next conversation. Lata will be speaking with the management of Bandhan Bank on the back of their fourth quarter earnings. Remember, Bandhan over the last couple of months has been saying that slowly but steadily, maybe by the third quarter of FY26, things will start to look much better. So we'll ask them whether they're on track for that and more. Stay tuned. Coming up.
Trading.
CNBC TV 18 tracks the pulse of markets and business in real time, bringing you the stories that shape the economy.
From breaking news to sharp analysis, we deliver insights that help you navigate businesses, markets, and investment opportunities.
Nuvama presents CNBC TV 18 Market Central,
providing sharp market intelligence for wealth creation with a commitment to doing it right.
पैसा लगाना है तो सेंचुरी क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ, सेंचुरी क्लब प्राइम, रहो बेफिक्र।
Welcome back. We are still with corporate earnings. Bandhan Bank's results were actually a mixed bag. The positives were there. A quarter-on-quarter rise in the ROA, return on assets, which is what investors will look at. A 12 basis point increase to 0.8%. Rise in the return on equity by 70 basis points to 5.9 from 5.2. All quarter-on-quarter. But there have been some share of worries as well. Margins are down, as it is for every bank. But quarter-on-quarter fall is 30 basis points for Bandhan. Gross NPAs are up by about 25 basis points. Again, quarter-on-quarter to 4.96. Net NPAs also up by about 8 basis points. However, the positive here is that fresh slippages are sharply lower. And that's very important. Separately, profits and NII have fallen year on year. But that was all obviously because of a very high MFI base year ago. Otherwise, they have done the profit and NII are better than street expectations. To understand more, we have with us the MD and the CEO, Mr. Parthapratim Sengupta. Mr. Sengupta, good morning and thank you very much indeed for your time. Well, first, just a jargon. When you say emerging enterprise business or EEBs, you mean MFI?
It's basically MFI, but within this segment also there are individual loans. So it consists of also group loans and it consists of individual loans, but not that to be truly by the definition of MFI, not everyone's household income is below 3 lakhs or with 3 lakhs for the day. It consists both, but the segment target is different. They're coming up from the micro segment.
Yeah, no, I mean, this is just a clarification for, the lay reader, the lay viewer who looks at your investor presentation and may get a little confused. But thanks for that. So it's also over 3 lakh household loans. Now, your MFI, I'll call it the MFI segment, okay? Your EEB, you've seen a sharp fall in the amount of loans lent to that group. Can you tell us whether this is the fall and you will start improving in a quarter or two? Because you told us that the MFI pain will bottom out. So do we start to see more loans this quarter itself, next quarter?
So I have also told last time also when the Q4 results were announced, the challenges are going to remain for almost 2 quarters. That is the market trend. Though Bandhan Bank in this segment has performed much better than the market. But still the challenges, definitely we are not insulated from those challenges. And if you look at it today, the problem of over-leveraging has been contained to a large extent after the guardrails have been imposed. It has an effect. Definitely it will have a short-term effect. And we think that another 3 months, probably the effect of these guardrails that would be eased out. And then the industry would start picking up. But let me tell you, strategically, we have also decided to increase our secured book mix. Because we are a universal bank. Though our base has been very strong in this MFI segment, we will continue to be a leader. But definitely, we will go for a moderated approach in this segment. We are focusing on both a particular balance between the secured and the MFI segment for the day. So we made a very reasonable target of 8% only growth, for 8 to 9% growth for this financial year. We hope that, yes, this growth probably would be achieved by the end of this financial year.
Oh, okay. Actually, you've taken away some of my questions. This secured loan book that you are leaning towards, that will reduce margins even more, no?
Yeah. So
what is the margin guidance?
So let me again tell that it was very clearly told, I think, when I took over the charge, that as we are a universal bank, we need to have a proper balance. The secured book, we are going, and definitely the margin would be moderated. But we are taking some steps for this. You see, from April, we made a major cuts in our deposit rates for that year. And that effect, we have seen almost 19 basis point in this quarter. And as soon as the fixed deposits would get matured and new renewals would happen, further positive effect of the cost of funds would come. So that is number one. Number two is that even today, my books in the fixed interest rate, that is almost 50%. And going forward also, we will maintain a ratio of around 40 to 45% in this particular book. So that way we are not affected. And the third one, you have already said that slippages are improving. And if this improvement continues, and we are expecting it to be much better in the coming months, so there will be definitely all these three factors will have will nullify the adverse impact of NIM because of the rate cuts, and also because we are going to the secured books further.
So what is the NIM guidance, sir? Net interest margin?
So we will try another 20-25 basis point. Definitely we are expecting to reduce, but we will see. But as I was told, that these steps would definitely have a positive effect on this year also.
Okay. Now, about your EEB, again, I would like to say MFI, but you're saying there is a definition issue there. You had said that you will increase your, your emerging enterprises book. by 5,000 crore. That was there in your target last quarter, if I'm not mistaken.
Yes.
Is that still holding? Yes. So after reducing now, are you going to increase? Because now you have to increase it by 16%. My colleague Gaurav is calculating, if you have to meet your 5,000 crore target, you have to increase it by 16%. You'll do that.
Let me tell you, the last quarter only, Q1, we have seen almost more than 20% growth in this segment. So we are capable. It's infrastructurally, if you look resource-wise, we are definitely capable. If the industry, we are expecting that it will go forward. So the disbursements, we know that we have to make a large number of disbursements, but yes, we are keeping the target. And we hope that from Q3 onwards, we will probably be able to do it.
Okay. Now I wanted to ask you about your SMA1 also. While your overall slippages have gone down, SMA1 has gone up. Now, just for those who don't follow this unnecessary jargon, SMA1 is if people don't pay within 30 days. It doesn't become NPA. There is a long time before it becomes NPA, but those who don't, those whose dues are 30 days past the date of payment is called SMA1. That has gone up sharply. Why that? Should that give us some worries about slippages?
You see, yes, but the main thing is that if you look at my SMA2 figures for that, so in the EB book especially, it has reduced. And a large number of these SMA1 remains in this category or it goes back to SMA0 and many of them are...
Sorry, one minute. Sorry. What I meant was SMA0 has gone up, sir. Sorry. SMA0 has gone up from 860 to about 1,000 crores.
Let me tell you this very clearly that SMA0, the main reason is that we have introduced a new accounting principle in the EB segment whereby we are raising demand on the holidays also. Previously, this was not there. Now, just understand that if in a particular geography, say West Bengal, if you take, there are festive holidays. Almost continuously 4 days, my people will not be available for collection. But the demand is raised. So what will happen once the bank opens after the collection will happen. But during these 4 days, almost say per day, almost 6% of the total book or 1/6 of the total book will go to SMA0. So if it is 4 days, it is almost 1/6, 1/6 into 4. So that much will go to SMA0. So it will always look inflated whenever there will be holidays. But let me tell you, we are trying to build up a culture to collect these installments a little bit in advance. We are also exploring if we can actually tune it like the bond market, that is the next working day can be the demand raising period. That what we are experimenting, but it is not a cause of worry. It happened because of the accounting change.
Fair enough. Yeah, if see, SMA0 has risen, but SMA1 has not. So, perhaps what you say is right, that people are just collecting it later. There was another question during the investor presentation, which I didn't understand. I was more puzzled by your answer. The question came from Macquarie, and they said that, your vintage book in Q4, the MFI book, the EEB book, rose by about 15,000 crores, and simultaneously your NPA went up by 0.1%. Did some loans become NPA the moment you gave them? And you didn't say no. You said your point is valid. Can you explain what this is?
No. So let me tell you, there has been cases of some quick mortality. We can't deny it for that year, but that has been contained to a large extent. That's why
it is only 0.1, but why does it happen?
There are, because I would say that whenever you say disburse in the month of March, I think we made a total disbursements of close to almost 1,500 crores or more than that, in that, or maybe more than that, much more than that. So there will be some quick mortality cases. Let us accept that in this segment it happens a certain percentage, but we try to recover it through our NPA recovery efforts. So what we are doing now is that one, we are making some hygiene changes also. So in the credit underwriting process also is getting revamped, number one. Number two, we have introduced the QR code of recovery so that even on holidays or on other days, or the customer is away from the station and my people could not reach him. So they can now pay them through the QR code also. We are going to introduce AEPS also and doing away with the biometrics. So a lot of hygiene change and EAR correction. So going forward,
You said March we give a lot of loans, we give 1,500 and that is why this may be happening. This hurry to give March loans, is it because to reach a target and so some wrong loans are given?
No, it was, you see, it was not there for that. If you look at my last year book for that year, we have consistently degrown.
Okay.
So we have been growing for that, but we consistently taken a decision to degrow in this segment. We have taken it, but let me tell you, when such large number of loans happens for that year, some quick mortality do come. We are doing a proper staff accountability and things for that measures, but taking measures.
Okay, so let me now squeeze quickly two questions because I'm told I'm running out of time. One is, why is it your housing GNPAs have risen? Isn't that supposed to be the safe, secured sector?
Oh, so one thing you will know that Bandhan grew up by taking an NBFC.
Yeah.
And that NBFC, of course, for the day, as you are all aware, that NBFC and bank had previously, now of course, anything has been aligned for that year, had different accounting systems, have different ways of doing the business for it. So some of them are legacy problems, let me tell you. If you take my housing book, last 2 years, what we have disbursed for that year, that book is very quite strong enough.
Okay. Well, the Prime Minister is walking and he will make his speech before the session begins. So, Mr. Sengupta, just one quick question before the Prime Minister speaks. Will we get a 1% ROA this year?
Our target is 1.5. We hope that we will be able to achieve. We have not yet revised the target because last time also we have said that we will be Q1, our ROA target will be 0.7 and we have achieved 0.8. Let us see. So I will look for.
नमस्कार दोस्तों.
Thank you.
मानसून सत्र में आप सभी मीडिया जगत के लोगों का स्वागत है. साथियों, मानसून नवीनता और नवसर्जन का प्रतीक है और अब तक जो खबरें मिली हैं, देश में मौसम बहुत ही अच्छे ढंग से आगे बढ़ रहा है. कृषि को लाभदायक मौसम की खबरें हैं और बारिश किसानों की अर्थव्यवस्था, देश की अर्थव्यवस्था, ग्रामीण अर्थव्यवस्था और इतना ही नहीं, हर परिवार की अर्थव्यवस्था में एक बहुत महत्वपूर्ण होता है. अब तक जो मुझे जानकारी दी गई है उस हिसाब से पिछले 10 वर्ष में जो पानी का भंडार हुआ है इस बार, वो करीब करीब 3 गुना हुआ है, जिसका आने वाले दिनों में भी देश के अर्थतंत्र को बहुत लाभ होगा. साथियों, ये मॉनसून सत्र राष्ट्र के लिए ये बहुत ही गौरवपूर्ण सत्र है. ये मॉनसून सत्र राष्ट्र के लिए एक अपने आप में विजयोत्सव का रूप है. और जब मैं कहता हूं कि सत्र राष्ट्र गौरव और विजयोत्सव का सत्र है, तो सबसे पहले तो मैं पहली बार इंटरनेशनल स्पेस स्टेशन पर भारत का तिरंगा झंडा वहां लहराना, यह हर देशवासी के लिए गौरव की पल है. देश में साइंस टेक्नोलॉजी के प्रति, इनोवेशन के प्रति नया उमंग और उत्साह भरने वाली ये सफल यात्रा रही है. और पूरे संसद, लोकसभा राज्यसभा दोनों सदन देशवासी जिस गौरव का अनुभव कर रहे हैं उसमें एक स्वर से जुड़ेंगे, एक स्वर से इसका यशगान होगा। जो भारत को अंतरिक्ष में नई ऊंचाइयां पर पहुंचाने वाले जो भावी कार्यक्रम है उनके लिए भी प्रेरक बनेगा, प्रोत्साहक बनेगा। साथियों, ये मॉनसून सत्र एक विजयोत्सव है। पूरी दुनिया ने भारत की सैन्य शक्ति का, भारत के सैन्य के सामर्थ्य का रूप देखा है। ऑपरेशन सिंदूर में भारत की सेना ने जो लक्ष्य निर्धारित किया था 100% अचीव किया। आतंकियों के आकाओं के घर में जाकर के 22 मिनट के भीतर भीतर ऑपरेशन सिंदूर के तहत उसको जमींदोज कर दिया गया। और मैंने बिहार की एक कार्यक्रम में इसकी घोषणा की थी, जो हमारी सैन्य शक्ति ने बहुत ही कम समय में सिद्ध करके दिखा दिया। और इसमें मेड इन इंडिया सैन्य शक्ति का ये नया स्वरूप, इस पर भी दुनिया बहुत आकर्षित हुई है। इन दिनों विश्व के जिन जिन लोगों से मिलना होता है तो भारत के इस मेड इन इंडिया जो औजार तैयार हो रहे हैं उसके प्रति दुनिया का आकर्षण बढ़ रहा है। मुझे विश्वास है कि जब सदन इस विजयोत्सव को एक स्वर में विजय के भाव से इस सत्र के दरमियान उन ओजस्वी तेजस्वी भावनाओं को प्रकट करेगा तो भारत की सैन्य शक्ति को बल मिलेगा, प्रोत्साहन मिलेगा, देशवासियों को प्रेरणा मिलेगी और सैन्य क्षेत्र में जो रिसर्च, इनोवेशन और मैन्युफैक्चरिंग हो रहे हैं, मेड इन इंडिया डिफेंस इक्विपमेंट बन रहे हैं, उसको भी एक बल मिलेगा और जो भारत के नौजवानों के लिए नए रोजगार के अवसर पैदा करेगा। साथियों, ये दशक हम एक प्रकार से देख सकते हैं कि शांति और प्रगति कंधे से कंधा मिलाकर के आगे बढ़ने के कदम कदम पर प्रगति के एहसास करते रहे हैं। देश कई प्रकार की हिंसक वारदातों का शिकार रहा है, लंबे अरसे तक शिकार रहा है। देश आजाद हुआ तब से ये समस्या को झेल रहे हैं, चाहे आतंकवाद हो, नक्सलवाद हो। कोई प्रारंभ में शुरू हुआ होगा, कोई बाद में शुरू हुआ होगा, लेकिन आज नक्सलवाद का, माओवाद का दायरा बहुत तेजी से सिकुड़ रहा है। माओवाद को, नक्सलवाद को जड़ से उखाड़ने के संकल्प के साथ देश के सुरक्षा बल एक नए आत्मविश्वास से तेज गति से सफलता की ओर कदम रख रहे हैं। और मैं गर्व से कह सकता हूं, देश में सैकड़ों जिले नक्सल की चपेट में से निकल करके आज मुक्ति का सांस ले रहे हैं। हमें गर्व है कि बम, बंदूक और पिस्तौल के सामने हमारा देश का संविधान जीत रहा है। हमारे देश का संविधान विजयी हो रहा है। देश के उज्जवल भविष्य के लिए साफ दिख रहा है कि कल तक जो रेड कॉरिडोर थे वो आज ग्रीन ग्रोथ जोन में परिवर्तित होते नजर आ रहे हैं। साथियों, एक के बाद ऐसी घटनाएं देशभक्ति के लिए, देश की भलाई के लिए संसद में पहुंचे हुए हर माननीय सांसद के लिए गौरव का पल है। और संसद के इस सत्र में ये गौरव गान पूरा देश सुनेगा, हर सांसद से सुनेगा, हर दल से सुनेगा। साथियों, आर्थिक क्षेत्र में भी जब 2014 में आप सबने हमें जिम्मेवारी दी, देश फ्रेजाइल 5 की अवस्था से गुजर रहा था। 2014 के पहले वैश्विक अर्थव्यवस्था में हम 10वें नंबर पर थे और आज भारत तेज गति से दुनिया की तीसरे नंबर की अर्थव्यवस्था बनने की दिशा में आगे बढ़ रहा है, दरवाजे पर दस्तक दे रहा है। इन दिनों 25 करोड़ गरीबों का गरीबी से बाहर निकलना, जिसको विश्व की अनेक संस्थाएं सराहना कर रही है। देश में एक जमाना था 2014 के पहले जब महंगाई का दर, इन्फ्लेशन रेट डबल डिजिट में हुआ करता था। आज 2% के आसपास आकर के देश के सामान्य मानव के जीवन में राहत बन गया है, सुविधा बन गया है। लो इन्फ्लेशन के सामने हाई ग्रोथ एक अच्छे विकास यात्रा की दिशा है। साथियों, डिजिटल इंडिया, यूपीआई आज भारत के एक नए सामर्थ्य को दुनिया देख रही है, पहचान रही है और ज्यादातर देश में उसके प्रति एक आकर्षण पैदा हो रहा है। यूपीआई ने फिनटेक की दुनिया में अपने एक नाम कमाया है। रियल टाइम डिजिटल ट्रांजैक्शन दुनिया में सबसे ज्यादा हो रहे हैं। दुनिया में जितने हो रहे हैं, अकेले भारत में उससे ज्यादा हो रहे हैं। साथियों, पिछले दिनों इंटरनेशनल लेबर ऑर्गेनाइजेशन का एक वैश्विक समागम था और उसमें भारत ने बहुत बड़ी ऊंचाई प्राप्त की है। आईएलओ का कहना है कि 90 करोड़ से ज्यादा लोग भारत में अब सोशल सिक्योरिटी के दायरे में है। ये अपने आप में एक बहुत बड़ा अचीवमेंट है। उसी प्रकार से वैश्विक संस्था WHO ने ये कहा है कि भारत अब आंख की जो बीमारी आमतौर पर बारिश के सीजन में ज्यादा देखी जाती थी, ट्रैकोमा, अब भारत को WHO ने ट्रैकोमा फ्री घोषित किया है। तो आरोग्य के क्षेत्र में भी ये अपने आप में एक महत्वपूर्ण भारत के लिए सिद्धि है। साथियों, पहलगाम की क्रूर हत्या, अत्याचार, नरसंहार पूरी दुनिया चौंक उठी थी। आतंकवादी और आतंकवादी के आके दुनिया का ध्यान उनकी तरफ केंद्रित हुआ था और उस समय दल हित छोड़ करके देश हित में हमारे ज्यादातर दलों के प्रतिनिधि, ज्यादातर राज्यों के प्रतिनिधि विश्व भ्रमण किया, दुनिया के अनेक देशों में गए और एक स्वर से दुनिया के सामने आतंकवादियों का आका पाकिस्तान को बेनकाब करने का एक बहुत सफल अभियान चलाया। मैं आज राष्ट्र हित में किए गए इस महत्वपूर्ण कार्य के लिए उन सभी सांसदों की सराहना करना चाहता हूं, सभी दलों की सराहना करना चाहता हूं और उसने देश में एक सकारात्मक वातावरण पैदा किया। विश्व ने भारत की बात को स्वीकार करने की दिशा में अपने मन के द्वार खोले और इसके लिए ये हमारे सांसदगण, हमारे राजनीतिक दल सराहना करने के मेरे लिए सौभाग्य है। साथियों, हम जानते हैं कि ये स्पिरिट, एक स्वर, एक एकता का वातावरण देश को कितना उत्साह से भर देता है। विजयोत्सव का ये पर्व इस मॉनसून सत्र में भी उसी भाव से प्रकट होगा। देश की सैन्य शक्ति को सराहना करेगा, देश के सामर्थ्य का गौरवगान करेगा और देश के 140 करोड़ नागरिकों को नई प्रेरणा का कारण बनेगा। मुझे विश्वास है कि हम सब मिलकर के डिफेंस के क्षेत्र में आत्मनिर्भर होने के इन प्रयासों को बल दें, सेना के सामर्थ्य की सराहना करें और मैं आज देशवासियों के सामने जरूर कहूंगा और देश के राजनीतिक दलों से भी कहूंगा कि देश ने एकता की ताकत देखी है, एक स्वर का सामर्थ्य क्या होता है देखा है। तो सदन में से भी सभी माननीय सांसद उसको बल दें, उसको आगे बढ़ाएं और मैं जरूर कहूंगा, राजनीतिक दल अलग अलग है, हर एक का अपना एक एजेंडा है, अपनी एक भूमिका है, लेकिन मैं इस वास्तविकता को स्वीकार करता हूं कि दल हित में मत भले न मिले, लेकिन देश हित में मन जरूर मिले। इसी एक भावना के साथ इस मॉनसून सत्र से देश के विकास यात्रा को बल देने वाले, देश की प्रगति को बल देने वाले, देश के नागरिकों को सामर्थ्य देने वाले अनेक विधेयक प्रस्तावित हैं, सदन विस्तृत चर्चा करके उसको भी पारित करेगा। मेरी सभी माननीय सांसदों से उत्तम डिबेट चलाने के लिए शुभकामनाएं हैं। बहुत बहुत धन्यवाद।
Cash.
To build anything that truly lasts, it takes time.
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
Hello and welcome to Chartbusters. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And we have got a lot of news flow that's coming in there. So let's get straight to the first management on the show. India marked Intermesh. They put up a strong showing actually in the past quarter. There was a good growth on various parameters. But what's the way ahead? We're joined by Mr. Dinesh Agarwal, the CEO of India Mart. Hi, Mr. Agarwal. Good morning. Good to see you in. I want a couple of numbers out first out of the way. Paid subscriber growth is still very tepid. On a quarter-to-quarter basis, how do you see this number picking up? If you could give us a guidance on that front. And also collections, well, they perked up. What's the steady state growth we should work with on collections, paid subscriber and collection? Go ahead.
See, on the paid subscriber, we have been saying that our silver customer churn has been elevated, and we continue to work on various items that are affecting our sellers. We are going and meeting the sellers continuously. We have made a lot of changes so far. Hopefully, in the times to come, in couple of quarters, there should be some uptick visible. On the collection side, we have improved the collection over the last 2-3 quarters, collection growth, and we would try and target towards a double-digit collection growth because given the customer churn is still stubborn, I don't think we can give any concrete guidance on either of the two.
So if you could give us a broad range as well. You said paying subscribers should increase. If I look at the last few quarters, it's been between 2.1 to 2.2, somewhere closer to 2.15 on an average. How much better do you expect this number to be? I'm not asking you for specific numbers, but just an indicative range. And even collections in the first quarter grew by 17.5%. You expect the double-digit growth to continue, but there is a big difference between double-digit and late teens, right?
So let's look at the standalone collections first. The standalone collections grew at 5% and then 8% and then 9% and then 10%. And standalone operations account for the large part of our collection. Now coming to the consolidated that you are seeing at 17%, we have made certain changes in the busy partner payout model, and that is why you are seeing this number to be elevated at 17%. We have also given in the earnings presentation that if you do a like-to-like comparison, this is only 13%. So,
correct.
And given that the first quarter of the financial year for the busy, because most of the people change their accounting softwares during either the last quarter or the first quarter. So first quarter is generally a very high quarter for the busy accounting. And that is why I am still guiding you to be at around 10-12% collection going forward.
Okay, 10-12%. And what about on the subscriber? Subscriber should be around 2,500 odd. Should we work with that number?
Yeah, plus minus 2,000. Yeah, plus minus 2,000.
2,000. All right, got that. Tell us about margins. Marketing expenditure as well did vary in the past quarter. So as a percentage of your mix, what will your marketing spend be at? And also, what is the outlook on margins? Steady state, what should we work with?
So I have been guiding that the margins are currently looking elevated because of the fact that we are not heavily investing in the sales and sales side because the churns are elevated. And as soon as the churn comes under control, we would go whole hog on the sales side. So that is why we have been guiding that the margin on the steady state you should always consider to be around 33% to 35% going forward. However, we have started to do certain marketing spend on the buyer side. We have started some performance marketing, and since we have taken up this activity after 10 years of the last time ever we did any marketing spend, we are taking time to adjust the marketing spend according to the different industries and different geographies, how Google responds and how Facebook responds and how YouTube responds. So I think about 2-3% of the margin we would be spending towards the and that I guided in the investor con call also.
Yeah, you had it would be between 2 to 3% of your sales out there. But on the revenue per client in terms of realizations, if you could give us a sense on that as well. While paying subs are increasing, you expect them to increase by 2,000 every quarter. In terms of revenue or realization per client, what's your outlook here?
So revenue realization per client for the last many quarters has been growing at about 10%. In general, if you see a longer term CAGR, it has been growing at 6 to 8%. If the subscriber base starts to grow up quickly, I think that ARPU growth will come down to 6 to 8% only. Currently, since the customer count is not growing, that is why you are seeing the ARPU growth taking the all the heavy lifting. And that is, so if you take this particular quarter on the standalone, 1% came from the customer growth and 9% came from the ARPU growth.
So 6 to 8% ARPU growth continues. And what about client concentration? Because top 10% of your clients contributed about 40% to your revenues 5 years back, and because of lack of paid subscribers increasing, that numbers increased to 50%. Are you looking to bring it down back to 40%? Because that would be a lot more sustainable, right?
So top 10% customer is quite large number. In our case, almost 22,000 customers. And 22,000 customers, it is not only that the paying subscribers have not grown, and that is why their revenue contribution is growing. See, in a typical marketplace, what happens, top of the pyramid enjoys the largest benefit because they are able to figure out how to do the sales and marketing better using internet. So effectively, we have also introduced category-based pricing and everything, and that all combination put together has slowly increased the ARPU top 10%, and it will continue to remain at about 50%.
All right, very quickly, sir, when will the churn ratio improve?
So I wish I could tell you a timeline. We continue to work towards that, and the management has been doing good over the last so many decades. I am pretty confident that we should be able to bring it down quickly.
All right, sometime in the second half of this fiscal?
Possibly, yes.
Appreciate you joining in, Mr. Dinesh. Thanks a lot. Wishing you all the best for detailing. Thanks for joining in and detailing the past quarter's numbers. For the time being, slip in a short break, come back, continue to focus on stocks and market action.
To build anything that truly lasts, it takes time.
पैसा लगाना है तो सेंचुरी प्लाइ क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाइ क्लब प्राइम, रहो बेफिक्र।
Welcome back. You're watching us here on Chartbusters while we are speaking to the management of India Mart Intermesh. Don't lose sight of the market. It's been a big recovery from the lows that we saw. Was bound to recover from earlier levels of closer to 24,900, 24,950. That's what the street was pinning its hopes on, and big results helping the overall cause of the market as well. HDFC Bank has moved to the high point of trade. ICICI Bank itself has moved to the high point of trade as well, and both of them are negating the pressure that Reliance is putting on the frontline index. And before we move forward, just keep an eye out on Eternal as well. So the erstwhile Zomato, currently at the high point of trade, reports its numbers today. Two things I'll be watching out for: whether there is any reduction in losses in their quick commerce business, and secondly, is there any improvement in the growth in their food delivery business as well. With that, let's move on to Axis Bank. Loans and provisions in the first quarter were not entirely the result of banks' own internal decisions, but that of RBI's push as well. This exclusive news brought to you by Ritu.
Well, the surprising spike in bad loans which dented Axis Bank's profitability in the recently announced first quarter numbers that the bank attributed to a technical impact was actually not entirely a proactive move by them. We've been given to understand that this followed a regulatory intervention from the Reserve Bank of India, which had raised some red flags about Axis Bank's asset classification practices during a supervisory review in the January-March quarter of this year. Now, RBI found that the bank's NPA recognition policy was too lenient. While the bank was compliant with RBI's income recognition and asset classification norms on paper, we understand the regulator felt that the bank's internal policies were not aligned with the spirit of the regulation, and in some cases, this was leading to a delay in recognition of stress or even under recognition of stress in some cases. Particularly, this was seen in the unsecured retail and small business loan segments. So, in response to this nudge from the RBI, Axis Bank revised its internal framework, which then led to that 614 crore rupee hit to the bottom line, the additional 2,709 crores in gross slippages, and 821 crores in provisions because of the so-called technical impact. Now, on its part, the bank called the move a prudent application of enhanced qualitative criteria, which was aimed at making the balance sheet more resilient. Importantly, though Axis Bank's NPA recognition framework was seen as falling short of regulatory expectations, our sources have made it amply clear that they should not be compared with the IndusInd Bank case, where major accounting lapses have come to light. In Axis Bank's case, the issue was about policy interpretation, not financial misreporting.
Interesting one. Thanks a lot, Ritu, for joining in and detailing that particular story. For the time being, though, we'll wrap up on this edition of Chartbusters. Don't go anywhere. The team of Trading Hour is waiting by.
To build anything that truly lasts, it takes time.
Hello and welcome to Trading Hour live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always Hormis Patakia and Reema Tendulkar. Good morning guys. Well, 100-point uptick on the Nifty is what we are witnessing right now, courtesy HDFC Bank, ICICI Bank, and it is negating the impact that Reliance Industry is seeing. So we saw that recovery around 9:30 and that continues to be the case as well. But you know, while we talk about that moves on the secondary market, there is a new kid on the block, Anthem Biosciences. That stock is in focus. It has listed 28% premium to its issue price to discuss the company's FY26 outlook and plans after listing, the usage of IPO proceeds as well. We are joined by Chairman, MD and CEO Ajay Bhardwaj and CFO Gavir Beg. Gentlemen, good morning. Thank you so much for joining in and patiently waiting by as well. Now that we are listed, we can talk about the future prospects as well. Mr. Bhardwaj, let me start with you first up. It has been a decent growth for the company going forward despite the challenging year that has gone by. If you can tell us what are the plans in terms of the growth in terms of revenue and EBITDA margins as well. FY22, we saw margins at around 47%. Do you think you'll get back to that, or the normalized margins will be around that 36% mark?
Well, thank you for having us on the show and good morning. We really not that much has changed since we spoke a few weeks ago with you. Our focus has to be on concentrating on our core strengths, that is adding more firepower to our new modalities like high potent peptides, RNAi, lipids, oligonucleotides. So, and we are continuing to do that. And we just feel that we have to set, given the type of business we are in, we have to what we have done the last 6-7 years is what's going to bear fruits this year, and we're in a very good position there. And as far as margins go, we are quite sure that we'll be able to maintain what we have delivered, and we that's our endeavor going forward as well. That we have very healthy EBITDAs at the moment around 36%. And that's what we endeavor to keep delivering on.
Okay, so margin sustainable at 35-36%. Just one question. You were one of the fastest companies to hit 1,000 crore in top line. Last year, you ended with a top line of close to about 1,800 crore, clocking in a revenue growth of 35%. You said that a lot of the work that the company has done over the last couple of years will bear fruit now. So going ahead, what would be the revenue growth, on an average, say for the next 2 or 3 years? Because you have, I believe, close to about 160 crore, 160 projects in the pipeline. So can we expect this 35% kind of a revenue growth for the next 3 years, sir?
Gavir, you want to take it?
I'll take that. See, historically, if you look at our numbers over the last 5 years, we have grown at about a CAGR of about 24%. Last 2 years, we have grown at 30% as well as 34% across FY23 to 24 and 24 to 25. What we've been doing over the course of this last 10 years is invest more on the new projects which comes in, and these new projects, as it moves across the phases from early phase to late phase, the quantities increase and we keep on supplying more and more batches to our customers. So that's been our endeavor. The numbers that you are seeing right now are coming in from the 10 commercial molecules what we have, plus about 160 projects which are in the early or the late stage development. Hopefully going forward in the future, there would be some molecules which will move from early to late and some molecules which will move from late to commercial, because that's been the probability of success in the drug discovery and development cycle, where the probability of success is about 80% for the late phase and it's lower for the early phase. So we'll continue to do what we've been doing so far, which is to do things differently as well as to do different things also. The pipeline that we have will actually lead our growth going forward. What we're aspiring to do is to deliver a similar growth number as we have delivered over the long-term horizon of the last 5 years, closer to about 20% plus. That's what we endeavor to deliver. And from a margins point of view, margin has been sustainable over the last 2 years at 36-37%, and we aspire to be in the same zip code of 36 to 37% on EBITDA level and continue to deliver numbers in that zone.
So Gavir, 160 projects in all, early to late. Out of that, in late stage, I believe is 16. How many will move into commercial production, say by the end of this fiscal year or the next fiscal year? Do we have any timeline, something which is very close to completion?
There are 16 projects which caters to 10 late phase molecules, 10 phase 3 molecules. Typically, the industry-wide success rate is about 80% across phase 3 to commercial. As and when we come up with our first quarter results, we'll also give an update in terms of the molecules, the stages of the molecules, whether some of the 16 late phase projects corresponding to the 10 late phase molecules have moved or not. Typically, if you look at phase 3 or the projects which have been in the filing stages where the phase 3 results have been filed with the FDA for approval, it typically is an 18 to 24 or 20 or 30 months kind of a time cycle for any project to move from the late phase to commercial stage. So I would not comment on how many molecules are moving from phase 3 to commercial this year, but the horizon is what I could comment on because that's the industry-wide horizon.
Good morning. Thank you for joining in. And first,
compared to, sorry.
Please continue, sir.
No, I was saying that we have many shots on goal, and compared to what we had earlier. So we are very optimistic about the future. Things are much better. They're as good as today as they've ever been in Anthem's past.
So be that as it may, sir, but firstly, congratulations on the listing. It's a big day for you and your company. Gavir mentioned that you aspire to do things differently, but is the China plus one opportunity one of those things that you aspire to do differently? Because that has been a big talking point over the last couple of years for your industry as well as for a lot of other industries. And you'd mentioned in the previous conversation that you are trying to decrease the dependency on the China supply chain down. It's already below 20%. How lower can you bring that down to? And the fact that you are investing in facilities for catering to this demand, what is the kind of capex plan that you have envisaged for this year?
So I'll take the first part of it, and then Gavir will tell you about capex. Now, you see, the China plus one strategy that everybody's been talking about is basically comes from the the geopolitical situation in the world where people feel anxious about putting more of their eggs in the Chinese basket. Up until now, they have actually been the major player in the contract research, development, and manufacturing business. But we are now clearly seeing signs that people are saying, I do not want to put in my second project in the same place again, or alternatively, when they have a first project going in, they have anxiety about going into China because you don't know what the future holds. So we are getting many more inquiries, and clearly that's panning out. But it's not like flipping a switch that it will happen tomorrow. It is, as I said, even anyway, the gestation periods in our business are long, and we are in that phase where we are seeing a lot of inquiries which will, going again by past history, migrate into future business. So yes, that's going to pan out in the next few years. And as far as capex go, I think Gavir will clarify that.
Yeah, we've been investing on capex across our entire Unit 2, Unit 3, and now we have started on the Unit 4 journey as well. Unit 4 is going to be a large project because from a size point of view, it will be as large as Unit 1 plus 2 plus 3 combined. Hopefully, we'll be giving out in our first quarter results some sense on what is our Unit 4 expansion it could look like. But it's going to be a large project which is catered towards our growth going forward in 2028, 2029 onwards, because it's a greenfield project, so it will take about 2 to 2.5 years time to build and get constructed and be ready. By that time, our Unit 2 expansion, which is almost complete, and Unit 3, which is already also commissioned across phases from 24 to 25, will be firing revenues for us. Unit 4 could be in 2028 and 2029, and that's going to be a large capex for us.
We take that point, gentlemen. Thank you so much, Mr. Bhardwaj and Mr. Baig, for joining us today and telling us the future plans. Look forward to more conversations about the company as well. We'll do one thing. We'll slip into a short break now. When we come back, we'll discuss what's buzzing in the commodity space with Manisha Gupta.
In every negotiation.
To build anything that truly lasts, it takes time.
पैसा लगाना है तो सेंचुरी क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी क्लब प्राइम, रहो बेफिक्र।
CNBC TV 18 tracks the pulse of markets and business in real time, bringing you the stories that shape the economy.
From breaking news to sharp analysis, we deliver insights that help you navigate businesses, markets, and investment opportunities.
Nuvama presents CNBC TV 18 Market Central,
providing sharp market intelligence for wealth creation with a commitment to doing it right.
Welcome back. It's a very, very significant recovery from the lows of the day for the market, which slipped below 24,900, and since then it's been an almost 200-point recovery from those levels. And the two major contributors to that recovery, of course, are HDFC Bank and ICICI Bank, and they are the ones that are leading this recovery higher for the index. You can pull up the contribution chart as well. That will give you an idea of the kind of extent of which they are contributing. ICICI Bank, of course, closing in on its record high levels of 1471, so it's at 1460 currently, so 2.5% higher on ICICI Bank. There you can see there 100 points higher on the Nifty and 130 points contributed by HDFC Bank and ICICI Bank. On the flip side, Reliance continues to offset those gains and 50 points contribution to the downside from Reliance Industries. Now take on to the commodity space then, and Manisha is here with us to talk about something that everybody has been talking about recently, and that is the crypto market, Manisha.
Oh, well, yes, and I come in from the Indian point of view because, over the weekend we've been reacting to the coin DCX the story or the release that came in where the exchange has said that $44 million in security breach is what they've lost. And this is a report that came in on Friday. But over the weekend, there are various statements that we've seen come in from the Indian exchange saying that the breach was, one, quickly contained. The customer assets have been untouched and they actually have been in cold wallets. This is where the cyber hackers cannot reach. Third, that they're closely working with the cyber security partners at this point in time. And fourth is that the loss has been absorbed by their own treasury records. This will not impact the buyers or the investors within the exchange. But clearly, there have been various reports suggesting as well that there has been a lot of withdrawal as well coming in from the exchange after this threat. Interestingly, this comes in exactly a year after when WazirX also went through something. And at that point in time, it was also the investors' money that got lost to the tune of $235 million. This is much lower, and as the exchange said, this has been contained quite quickly there. I also want to talk about the Chainalysis report, which says, and it's, this is due to be released any time now. Chainalysis in last 2 years has said that India continues to be the second largest growing market when it comes to crypto. It has surpassed various other markets like UK, Turkey, Russia, etc. Increasing trading platforms and DeFi, decentralized finance opportunities within India is what clearly has been reading those numbers on the higher side. Having said that, and while there are some positive, there also are concerns with the fact that you're looking at 2025 as the worst year when it comes to cyber attacks, frauds, etc. as well. At this point in time, we stand at around 2.17 billion to 1.5 billion in sense of hacks in crypto services and wallets as well. This is the highest or the worst ever for that matter. 2022 was the worst year in sense of cyber attacks, frauds and rug pulls, and 2025 seems to be making all those record highs yet again into the market. Interestingly, another positive for the crypto clearly has been the US President signing the Genius Act. This was on 18th of July 2025. Now, this will create a regulatory regime for US dollar-pegged stablecoins. The understanding is that a lot of trade is in any ways happening, but with stablecoin act being passed like that, you will be looking at more money, higher transactions, purchases from merchandise and buying as well in sense of dollar and treasuries coming in. So a big one really, and the world is watching. For Indian markets, we still are waiting for the discussion paper to come in. It was supposed to come in on 30th of June, but markets do believe that in this quarter itself, we could be looking at that paper coming out.
Okay, interesting. And if it does come out, we'll come to you, Manisha, for all the updates. Thank you so much for joining in, as always, with what's happening in the commodity and currency space. Let's go across to Nagraj Shetty of HDFC Securities for a quick technical check on the markets. Nagraj, good morning. Thank you so much for joining in. Well, can you quickly tell us what's the next important level to watch out for on the NIFTY and your individual technical picks as well?
Hi, good morning. Nifty has been in a choppy trend over the last few weeks. What we can observe on the daily chart is lower tops and bottoms. Every rise has encountered resistance at the high levels recently also, and Nifty declined. So the trend, overall inherent trend remains weak. There is a pullback rally from the lower levels. I think at the higher levels, 25, 200, 250 is going to be a strong resistance from here onwards. We could see some emergence of selling pressure from higher levels. At the lower levels, if Nifty slips below 25,000 levels, 24,500 is going to be the strong support. That is going to be the range for the Nifty for the near term.
And individual names?
Yeah, I have two stocks, one from buy side, one from sell side. Recently, metals has been doing well during this turbulent Indian markets, and National Aluminium Nalco is the one that, after moving to a recent range movement over the last 2-3 weeks, has bounced back nicely. The overall chart pattern is looking positive, and it has moved up from near the important support of 200 EMA. Currently trading around 195.50, 196 levels. One can look to buy right now at 196, and target would be around 206 levels, and one can place a stop loss at 190. On the other side, I have one short side sell recommendation, that is from PSA side, REC. REC has been in a kind of a range bound action, has not shown any kind of upside bounces from the supports. Currently showing range movement, downside breakout of the range movement, placed at the support at lower levels around 395. If this stock REC breaks below 395, then that would be a sharp sell-off for the stocks, and we could see the lower level. One can look to sell at this point of time once it breaks below 395 levels, and the downside target will be around 380, and one can place a stop loss at 407.
Thank you very much for that. Let's move on and talk about Sona BLW. Vivek is now joining in. Vivek?
Well, that's right. Along the lines of what we had reported, in last week regarding a company setting up a plant in China, and most likely the anchor customer going to be there is BYD. Along those lines, the company did inform the exchanges that they are setting up a JV with a Chinese partner. In this particular JV, Sona will be investing close to $12 million for a 60% stake, and the JV is expected to commence operations in H2 FY26. What will the JV supply? The JV will manufacture and supply driveline systems and components. A whole host of brokerages have written on this particular development. Investec says that the JV with J&T will actually provide exposure to the largest EV market in the world and help tap Chinese OEMs. JV with J&T over time will reduce customer concentration risk. LRS says it's a significant positive in terms of supporting valuations for Sona, which has gone ahead and reduced quite significantly in the recent past. ICICI Securities says that the stock has underperformed its peers in the last few quarters and currently trading at 32 times FY27 EPS. So what they're saying is that they expect the stock to bottom out and should start outperforming from here on. And JM Financial says that the JV actually represents a significant growth opportunity. The company would not have entered this venture without a strong anchor customer, and they go ahead and name BYD as the likely anchor customer. Kotak, on the other hand, while they believe that it helps the company address a large addressable market, they believe that margins over could be squeezed given the fact that competition there could be quite intense.
Okay, take that point. Thank you so much for joining us, Vivek, with those details. We'll slip into a short break now. When we return, we'll be joined by the management of Rosari Biotech to discuss their Q1 numbers. Stay tuned for that conversation. Itself.
To build anything that truly lasts, it takes time.
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV 18 Market Central.
For your daily source of market intelligence and wealth creation with a commitment to doing it right.
Welcome back. You're still tuned into Trading Hour. Rosari Biotech, that is the management on our radar. The company posted a slightly muted set of EBITDA growth this time. The institutional and B2C businesses remain soft. To discuss this quarter gone by and way forward, we are joined by Sunil Shari, the co-founder and managing director of Rosari with us. Mr. Shari, good morning. Thank you so much for joining in. I wanted to understand, it's a 5% growth on the EBITDA. You've seen better growth on EBITDA in the previous quarters. So what was the volume growth this time around? Which segment was this led by? And if you can also give us the export and domestic breakup, because exports did do very well in the last year.
So normally our first quarter is always muted, and if you compare first quarter of last year to the first quarter of this year, we are 11% up on volumes, 11% up on sales. This quarter we had some project delays because we had to stop manufacturing for a few days because of the expansion which will come up in stream in this quarter. And we expect better numbers for the next 3 quarters. We should look at the yearly figures rather than quarter to quarter only.
No, I do get that. You said the volumes were up 11% this time?
Yeah, compared to the first quarter of last financial year.
Okay, and what was the export growth this time?
Export growth is 6% compared to the first quarter of the last financial year. Quarter on quarter, we have done much better than before, and I think we lost some days because of expansion work when we could not do any production because ethylene oxide is a hazardous raw material, and I think we should do better this quarter.
Mr. Chari, good morning. Thank you for joining in. You've mentioned exports have done better, but what is the export to domestic mix currently? And last year, if you mentioned that it was at 50%, right? It was 50%. What is the kind of growth that you are envisaging this time around for your exports?
So we are in the first quarter of this financial year, we are at about 26% as exports. We had 27% in the last quarter. So I think we should maintain this or grow better than this in exports. The home personal and performance chemical segment, the HPPC segment, is something which is the growth driver for us. Textile was little muted, animal health and nutrition was little muted. I think we should pick up in the remaining quarters.
Okay, so this 11% volume growth is ex the institutional business? Or is it with the institutional business?
The institutional business, but the institutional business also this first quarter was a little slower than compared to the last quarter.
Okay, so ex of institutional business, it should be high single digits.
Yes.
Okay. What about ethylene oxide? That's a major raw material. What's the availability looking like from Reliance Industries? What is the split currently when it comes to raw materials for you?
So the ethylene oxide from Reliance, we are expecting the new material to come in next 12 months. That is what is the indication from Reliance. And then I think we should have surplus ethylene oxide availability. We have ramped up the capacity already. So by the time this new ethylene oxide comes, in the next financial year, we have the capex already done for it.
Mr. Chari, your first half is generally agro heavy, right? And it is the period where the contribution of Unitop is the highest. Now, the first quarter is suggesting some weakness in that portfolio as well. So, have you any comments here on this generic agrochem demand and on the product mix in this space?
Oh, if you compare the first quarter of the last financial year and this financial year, we are up by 11% even in agro. This second quarter is the highest agro sales, and I think our demand position and order position looks better compared to last year also. So we don't see any slowdown in agro for us. The monsoons have been good in all the regions where we sell.
Okay. So what kind of growth are you looking at in FY26 itself when it comes to the top line, the bottom line, the margins as well? FY25 saw a revenue growth of around 14%. The profits were up 4.5%. Will you be doing better than that?
So when we did our IPO, I always say this, we were at 600, 700 crores. Last year we did 2080 crores. And I want to be conservative now and say maybe, high double-digit figures, 10% plus, and let the figures speak by itself at the end of the year.
Do you have any targets? You're saying 10% is what you're looking at. What about the margin number? Considering that raw material situation would improve, you'll get the ethylene oxide supplies as well coming by?
Ethylene oxide supplies will come in the next financial year, the additional ones. So I would hold the similar margins as last year.
What about pricing, Mr. Chari? Crude prices have been trending lower, acrylic acid prices and other raw material prices have also remained soft. Have you taken any price cuts this time around? What is the kind of trends that you are envisaging for the rest of the year when it comes to pricing?
So pricing is passed through, as we said in all the calls. So as the raw material prices fall, our FG prices fall automatically. And that is why also if you see 3 years from now, volumes are nearly 60-70% up. But you don't see the turnover going so up because per kilo realization in finished goods is less. So I think we are good, and I think this is the bottom I have seen in the raw material pricing in the last 10-15 years. It should become better. I think the per kilo realization should increase for all of us.
Okay, so realization should increase from here on for raw material prices. I wanted to understand what the freight situation is currently, Mr. Chari. The other expenses hike that we've seen in the PNL, is it because of higher freight? What's the export or import situation looking like when it comes to transportation?
The freight has increased substantially, but still it's not like the 2021-22 types. It is still manageable. Freight from China to India has increased substantially, but from here to the US, to Mexico, to Europe, to Turkey, has seen some increase, but I think it is stable now. We have increased manpower. So if you see, our manpower costs have gone up, and we are adding more people in R&D, we are adding more people in sales, and because the capacity is coming up and we need to have people to service those capacities.
All right, Mr. Chari, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. The management there of Rossari Biotech on the road ahead for the company. A slight recovery from the lows of the day. The stock still 4% lower, currently at 713. Take a short break, continue our conversation on the markets and the recovery that we have seen from the lows of the day. Parag Thakkar of Fort Capital joins us on the other side. Stay tuned.
How about making... To build anything that truly lasts.
Target price of 16.17. Jeffrey says O2C was impacted by refinery shutdown, but the outlook continues to be very constructive. Focus will now shift to AGM, where they'll talk about Geo preceded by possible listing of Geo, which is preceded by a tariff hike. They project an 11% EBITDA growth that would come by in FY26. Motilal Oswal says while Q1 was soft, they remain sanguine on Reliance Industries' growth prospects across segments, and they have a target price now of 1700 versus 1685 earlier. So there is a target price revision that has come by on the upside.
Okay, let's move on and talk about HDFC Bank. A steady set of numbers. The bank's net profit has gone up by 12% on a year-on-year basis. Gaurav joins in to take us through the fine print. Gaurav?
Yes, when we talk about HDFC Bank, good set of numbers is what we saw in this quarter. Net interest income increased almost by 5% on a year-on-year basis. But on the other hand, pre-provisional operating profit, there we saw a sharp spike of around 11%. Now, other income, if we look at this aspect specifically, there was an impact of around 9,000 crores because of the sale of HDB financial stake. But what bank has done is that they have converted that 9,000 crores as a floating provision. So that is the reason why we look at the reported numbers, provisions look a little elevated. But if we exclude that, let's also not forget that bank has also created 1,700 crores of contingency provision in this quarter. So if we exclude both these numbers, again provisions also look in line with what the street was expecting. As a result, profitability increased almost by 12%, which was 6% higher than the street's expectation. Now, when it comes to net interest margin, the fall was somewhere in the range of 18 to 19 basis points on a sequential basis. It was a little higher, but if we look at the core net interest margin, that has fallen only by 12 basis points. So again, it was in line with what the street is expecting. What was positive is that now management is confident on FY26 and FY27 growth. They say that in FY26 they will grow at a pace of the industry, and in FY27 they will outpace the industry's growth rate. On the other hand, on net interest margins also, they are saying that 50 basis point of impact is yet to get flown in the net interest margins. But going ahead, they expect credit cost to remain healthy. So that was a positive commentary from the management. Another update here is that they have declared special bonus in the ratio of 1:1, and they have also declared special dividend of 5 rupees per share. As a result, brokerages are also being a little bullish now. We've got Nuvama who increased their target price. Motilal Oswal maintained their target price of 2,300 rupees per share. So definitely some optimism was seen from the brokerages as well. And as a result, we are seeing some uptick in this counter today.
Indeed, one of the top contributors to the Nifty recovery. But Gaurav, the other one that is contributing to the Nifty recovery is ICICI Bank. Tell us more about those numbers.
Well, yes, when we talk about ICICI Bank, a good set of number. Bank has delivered good set of number for the last few quarters, and in this quarter also they are not missing on that expectation. They have delivered higher than what the street is expecting. Net interest income increased almost by 11% on a year-on-year basis, while pre-provisional operating profit, there we saw 17% growth. Now this was because of the higher other income, and this is actually the trend that we have seen across the banking segment. When it comes to provisioning, now this quarter bank actually reported very good set of number in terms of asset quality as well. Gross NPAs have remained flat on a sequential basis. As a result, provisions were also in line with what the street is expecting. And when we look at profitability, there we are seeing 15% increase. Now another big positive surprise in ICICI Bank is the net interest margins. It has declined only by 7 basis points, whereas street was expecting around 17 to 18 basis point fall on a sequential basis. Now there were some changes in the accounting policy as well, and management commentary also suggested that if we compare on a like-for-like basis, the net interest margin fall was just around 4 to 6 basis points. So again, that was actually very positive in terms of the results going ahead. What management has said during the commentary is that there will be an impact of 50 basis point of rate fall going ahead in the second quarter. But on the other hand, cost of funds are also likely to decline from the next quarter. So that is something which is positive. Again, we saw brokerages being a little bullish. Nuvama increased their target price. We also have IIFL and Investec who increased their target price on ICICI Bank. And as a result, we are seeing some uptick in this counter as well.
Okay, take that point. Thank you so much, Gaurav, for joining us with that analysis. Let's take this conversation forward and talk about market fundamentals as well. Parag Thakkar, Senior Fund Manager at Fort Capital, is joining us now to discuss that. Parag, good morning. Thank you so much for joining in. Well, big numbers over the weekend, over post-markets on Friday as well. What's been your biggest takeaway? How are you analyzing these numbers? And what next for these big names?
So I'll talk about three of our holdings which are very important: Reliance, HDFC Bank, and ICICI Bank. So first of all, HDFC Bank, I think they have done the best thing, that whatever gain they got from HDB OFS, HDB Financial Services OFS, they have done as a floating provision of 9,000 crores. Plus they have a contingent provision of 1,700 crores. So they have increased their provision buffer to 36,000 crores now. At the same time, they have brought down their CD ratio to 95.1%, which will allow them to grow in line with the system in FY26 and grow ahead of the system in FY27. Now, if you see, it's a sleeping tiger which has awakened now, right? So now it is ready to grow, and the macroeconomic situation also is great. Monsoon has been good. We are very close to festive season also. Liquidity is very good in the system. So this is the right time for them to start now lending. And up till now, they were lending less and just focusing on deposits to bring down their CD ratio. Now CD ratio is also comfortable. Of course, their medium-term target is to bring it to 87 to 90%. But I think now they can start focusing on growth, which they have said on the call also. So I would say that at 15 PE and at 2.1x on FY27 price to book with 1.9% ROA, I think now they can grow. And of course, one caveat here is for every bank, I think Q2 again will be a margin hit because 50 bips has to be passed on. And so one can embrace for one another, I would say, margin cut in Q2, and then things will start to normalize. But FY27, I'm sure, will be looking very good for banks in terms of earnings also. So HDFC Bank, of course, ICICI Bank, spotless as usual. Nothing to say, nothing to complain about. They always report excellent numbers. Again, as you said, the NIM decline was minimal. Of course, in Q2, again, they will also see a NIM decline. But just to mention one thing, one private sector bank which reported numbers earlier, fortunately we were not having that in our portfolio, but that reported extraordinarily high credit cost. Even if you adjust for technical slippages, the credit cost was 1.2%, which in case of HDFC and ICICI was between 50 and 55. In fact, X of agri, which is seasonal, they were below 50 bits. So I would say that this is coming to the back to basics. The banks which lend very prudently, the banks which have a strong deposit franchise, I would say that this will be the winners in the coming cycle. Because see, HDFC Bank, if you see the balance sheet, the tier 1 capital is about 17%. Same is the case.
Right.
I would say,
Parag, since you're on the subject of banking and financials, HDB Financial just came out with numbers, but a common trend that was highlighted in the numbers was the stress in the CV lending business. What does that happen to the other peers that are involved in this, say for the likes of Shriram Finance and the likes? Do you see this stress impacting earnings and thereby seeing some more valuation compression in names like these?
Sure. So I would say that this is a common trend. Like AU Small Finance has also increased its credit cost guidance, right? And that is also due to this used CV only, I think. So and all these stocks we don't own in the portfolio, so I would not like to comment. But generally, as a sector dynamics, you are absolutely right that these are risky segments, right, to lend, where your yields are more, so your ROIs are upfront and your profits are upfront. But then, over a period of, again, it normalizes, and so the hits come. So I think that is why we stick to HDFC Bank and ICICI Bank kind of names, or Kotak Bank kind of names in our portfolio, and we don't take disproportionate risk by buying this kind of NBFCs, which they also have a good business model, but I would say that they go through this kind of cycles often. And lending is a leverage business, by the way. You just earn 2 to 2.25% ROA at best. Right, ICICI Bank today has 2.4% ROA, which is the industry-leading ROA within the large-cap private sector banks, or PSU banks if you include them. And you are taking risk of 100 rupees. So you have to be very, very prudent when you lend, and that is why we stick to them only.
Okay, all right. Take that point, Parag. Thank you so much for joining in today with that take. A whole host of stocks to discuss, and they've been impacting the market moves also majorly today. We'll do one thing. We'll take a short break. When we come back, we'll talk more about the markets on the other side. Stay tuned for that.
To build anything that truly lasts, it takes time.
Welcome back. You're still tuned into Trading Hour. A lot of buzzing elements in the broader markets. Hats and Agro, that is one which is in focus after reporting a solid set of numbers. Mangalam is joining us with the key highlights. Mangalam.
Well, the biggest positive for Hats and Agro this time around has been the improvement that we've seen in gross margins. Remember, dairy companies have been, reporting steady gross margins, some of them declining over the last few quarters as well. But at 32.some%, we have, the highest gross margin that we've seen in many quarters for Hats and Agro. Now, this is a function of a couple of things. One, a large part of their milk procurement is in-house, so higher prices for the industry means that their margins get better benefits because realizations are higher while the costs are same. Secondly, higher share of revenue coming in from value-added products. And the third part is seasonally, this is the quarter where they also sell a higher proportion of their Arun ice cream brand, and that has aided their overall revenue. So if you look at the numbers, a 9% growth in revenue, gross margins expanding. The company has been investing in back-end, etc. as well, which is why the EBITDA margin has stayed steady at 13.9%. The net profit is lower, led by depreciation, which has come in at 137 crores versus 111 crores. And that's largely because of a couple of acquisitions that the company has made as well, most notably that of Milk Mantra. So how they scale Milk Mantra is something that the street will be watching out for, and how they expand beyond their current geographies and the higher contribution of value-added products is something that we will watch out for going forward as well. Add to all of this, the stock by itself has been a bit of an underperformer, down 24% from its 52-week high, and over the last 12 months itself, it's down 17%. So all of this with improved margins has led to a recipe of an up-to in the stock.
Thank you very much for that. You said how Hatsun has underperformed, down 17% in the last 1 year. Its peer, Dodla Dairy, had done well in the last 1 year with a gain of about 20%. But today it's correcting. So there has been a bit of a reversal. And Dodla also came out with their numbers. While the revenues have gone up by 10% on a year-on-year basis, margins are lower. Margins are at 8.2% versus 11.5%. And that is driving a 3.5% fall in the company's profitability. So Hatsun up, its peer Dodla Dairy down 3.5%. But let's talk about AU Small Finance Bank. That's been one of the big casualties of the day. Bank's net profit is up 16%, but the asset quality has weakened. Gaurav joins in with a breakdown.
Well, yes. When we talk about AU Small Finance Bank, let's understand what has actually caused this casualty first. When we talk about the credit cost, now bank has increased their credit cost guidance from 85 basis point to 100 basis point for FY26. And the reason being that in the MFI segment specifically, they are seeing a weakness in the recovery. Specifically in the MFI segment, they have said that the credit cost is expected to rise almost to 5% versus earlier guidance of 3 to 4%. And they also believe that the peak of MFI credit cost will be in the second quarter. From third quarter, they are optimistic that this credit cost will come down. But another disappointment here in the result was net interest margins. Now they have declined almost by 40 basis point versus expectations of the fall of around 30 basis point. What management is penciling in is that in Q2 we will see a further decline in net interest margins because of the rate cuts, and from Q3 we will see some rates actually increasing in terms of net interest margins, and full recovery is expected in FY27. Although when we talk about profitability, there we saw a sharp jump. It increased almost by 15%, but that was led by treasury gains, and that is something which market did not take in a positive way. In fact, brokerages are also being a little pessimistic. We have got Investec who has cut the target price to 910 rupees. What they are saying is that the recovery is going to delay, and that is the reason why they are cutting down the target price. In fact, they have cut their core PPOP expectations almost by 9% for FY26 and FY27. We also have Nomura who actually increased their target price but still maintain their sell rate and a target price of 610 rupees. So definitely some pessimism was seen in the brokerage notes as well. And as a result, we are seeing the stock is struggling today.
Indeed, but one stock which is doing very well is Mastech. It's up close to about 9%. So numbers were not wow. In fact, they were quite tepid. Revenues were down 1.1%. Revenues have been muted over the last couple of quarters, and this was a particularly tough, challenging quarter for the entire industry. You remember all the large cap IT companies had reported a revenue contraction. Mastech's revenues too were down 1.1% sequentially. Margins too for the company declined for the third consecutive quarter. So in Q1, margins were down close to about 30 basis points sequentially, but they've been declining. And in the last interview, the company had actually spoken about improving margins. They want to get margins back to that 17-19%, but in Q1, margins came under pressure. That said, maybe the street is latching on to the bottom line number. Profits went up because of higher other income, so profits were up 13.5%. There is hefty cash in the books. Cash in the books is close to 550 crore rupees. And their main business comes in from UK, particularly the NHS segment, and that is doing well. So UK is about 65% of their overall revenues. That went up 10% quarter on quarter. Even last quarter, it did very well. Their order wins were healthy. So these could be some of the positives that the street is latching on to. The conference call today is at 1 o'clock. So we'll get some more color on, if there's something more that's exciting the street.
The numbers may not be wow, but the stock is definitely looking like a wow right now.
Like a wow.
On the stock, of course, still 20% below its 52-week high, which is 33.75. But among the top gainers in the broader markets today is Nasdaq, 9% higher, slightly off the highs of the day, but 9%. You take that with both hands any day. Take a short break. More on the markets on the other side. Stay tuned.
Is taken forward.
To build anything that truly
Match the market effortlessly. Quick and hassle-free investment options. Save on cost, more for you. तो इंडेक्स फंड्स को आज ही करो एक्सप्लोर क्योंकि इंडेक्स फंड सिंपल है।
म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना संबंधी सभी दस्तावेज सावधानी पूर्वक पढ़ें।
Welcome back. 70 points higher on the index, but still some hesitation at higher levels. Counting down to the big number of the day, that is Ultra Tech. Of course, one of the big two numbers of the day. Nigel is here with what the street is expecting. Nigel.
Well, Ultra Tech's numbers actually are expected to be a rather good one. And besides the numbers, the street also will be keeping an eye out from the largest player in the cement industry. What's the outlook in terms of demand? What's the outlook on pricing as well? Let's run it through the basic consolidated numbers first up. Revenue is expected to jump up by close to around 20%, but EBITDA number will see a bigger jump. That's by more than 40%, which means that margins will expand. The PAT expansion though, PAT growth will only be around 35%, though you have the EBITDA number that will grow by more than 40%. Let's explain this to you. What are the key factors at play? Well, volume growth is expected to be mid-teens. If you have Kesuram that's accounted for in the base year, then it will be in lower teens. While if it's not accounted for, then on a smaller base, the growth will be anything between around 16 to around 17%. So we'll keep an eye out on volumes. Will be led basically by inorganic growth. On the realizations parameter is expected to grow by close to 2 to around 3%. On a sequential basis as well as on a year-on-year basis. So both those two are firing for it. Top line, big growth being led by the volume parameter because of inorganic growth. Moving to the cost focus side, the margin expansion will be because they've been focusing a lot on cost, on reducing the cost of production. So EBITDA margins will expand because of better realizations and lower cost of production as well. And finally, I said the PAT growth will not be as much because there is likely to be an increase in depreciation cost as well as on interest cost, which will plague the PAT number to a little bit. But more than the numbers, the commentary is going to be very, very important. So we'll keep an eye out on these numbers. Normally comes in at around 2 to around 3 p.m. So we'll get you a quick analysis on that one. Back to you.
Well, thank you very much for that. And that brings us to a close in this edition of Trading Hour. Thank you for watching.
To build anything that truly lasts, it takes time.
गाइस वीकेंड पे गोवा चले?
गर्लफ्रेंड से पूछना पड़ेगा।
कजिन की शादी है,
मेरी प्रेजेंटेशन है।
सबके साथ गोवा ट्रिप प्लान करना कॉम्प्लिकेटेड है, पर इन्वेस्टिंग विद इंडेक्स म्यूचुअल फंड्स could be as simple as 1, 2, 3. Match the market effortlessly. Quick and hassle-free investment option. Save on cost, more for you. तो इंडेक्स फंड्स को आज ही करो एक्सप्लोर, क्योंकि इंडेक्स फंड सिंपल है।
म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना संबंधी सभी दस्तावेज सावधानी पूर्वक पढ़ें।
Stocks bounced early after early weakness as some better than expected earnings boosted sentiment. Financials and industrials lead the charge while IT and energy drag.
Reliance Industries clocks a good quarter, delivering a healthy profit even after adjusting for gains from sale of Asian Paint shares. Brokerages remain upbeat with an eye on value unlocking from the new energy business.
ICICI Bank over-delivers. HDFC Bank too turns in a steady show with only a moderate decline in net interest margins, unlike the mid-sized banks, many of whom also feel the credit cost pressure.
CNBC TV 18 learns that Axis Bank was prodded by the RBI to recognize stress, leading to a jump in provisioning in the first quarter, while regulator found no accounting lapses or violations. it felt the bank's NPA policy was too lenient.
Jio Financial Services and Alliance Insurance Europe will set up a 50-50 reinsurance joint venture in India. The two have also inked term sheets for equally owned JVs in life and general insurance.
A very good afternoon. Welcome to a halftime report live from the CNBC TV 18 Motilal Oswal studio. I'm Akshaya Patra. With me is Banglam Malu as well as Mini Motiwala. Well, we've started Monday at least on a firm note. So the markets are in the green. We have the Bank Nifty, which is up around 0.8%. We have the Nifty, which is above 25,000 as we speak as well. It seems as though earnings and what could happen with the tariffs continues to be in focus. So when it comes to earnings, we have the likes of ICICI Bank, HDFC Bank, as well as Reliance Industries, which are in focus on account of earning reactions. And obviously, what could happen with the tariff situation. In terms of earnings that will be released today, we do have quite a lot to reckon with, especially in terms of the broader markets. We have the likes of Ultratech Cement, Eternal, Havells, IDBI Bank, just to name a few in terms of what we can expect in terms of numbers. So overall, a steady day of trade, but let's see, a lot of data points.
A lot of data points ahead, but bulls would be feeling very happy because after 3 weeks of losses on the frontline index, the Nifty has finally managed to recover from the lows and currently crossed past that 25,000 mark as well after closing below that level on Friday's trading session. And this comes on the back of a weak start. So today we tested levels of slightly sub 24,900 as well. And from there has been a big recovery. The Nifty Bank as well bounced off very crucial levels. We'll talk about that in just a bit. The good part is that portfolios would be feeling relatively happier today as well. Versus morning to now, if you pull up the red and green lines, you would see that there has been an intersection. While the split is right down the middle, they've actually come closer. And, for most part of the afternoon, the red line was above the green line. And then now we have the green line slightly above the red line, about 1,350 stocks in the green for about 1,340 stocks in the red. Nippon Life India moving higher, Aditya Birla Capital moving higher. A couple of these stock market related names, MCX for instance, moving higher. And we are also seeing some traction in names like InfoEdge, etc. So a bunch of stocks now picking pace as we move towards the latter half of trade. Hi, Vinny.
Hi, good afternoon. So other than that, let's watch out for metals also. Some of these metal names are buzzing away in trade. So whether you look at Nalco, Hindustan Zinc, Vedanta Limited, Hindustan Copper, all these names also managing to hold on to strong gains today. And obviously in terms of the Nifty 50, the top gainers, what is, aiding the market right now? Obviously the banking names like we've spoken about before, ICICI Bank, HDFC Bank, Kotak Bank among the top supporters for the Nifty. While in terms of drags, we have Reliance as well as Axis and TCS among the top drags coming for the Nifty 50. But let's talk about the banks then and what are these individual reasons why these banking names are in focus today. Starting with Axis Bank. Now, sources are saying that Axis Bank's unexpected spike in bad loans and provisions in its first quarter earnings was not entirely the result of the bank's own internal decision. Ritu is joining in with us to give us details on this front. Ritu?
Well, the surprising spike in bad loans which dented Axis Bank's profitability in the recently announced first quarter numbers that the bank attributed to a technical impact was actually not entirely a proactive move by them. We've been given to understand that this followed a regulatory intervention from the Reserve Bank of India, which had raised some red flags about Axis Bank's asset classification practices during a supervisory review in the January-March quarter of this year. Now, RBI found that the bank's NPA recognition policy was too lenient. While the bank was compliant with RBI's income recognition and asset classification norms on paper, we understand the regulator felt that the bank's internal policies were not aligned with the spirit of the regulation, and in some cases, this was leading to a delay in recognition of stress or even under recognition of stress in some cases. Particularly, this was seen in the unsecured retail and small business loan segments. So, in response to this nudge from the RBI, Axis Bank revised its internal framework, which then led to that 614 crore rupee hit to the bottom line, the additional 2,709 crores in gross slippages, and 821 crores in provisions because of the so-called technical impact. Now, on its part, the bank called the move a prudent application of enhanced qualitative criteria, which was aimed at making the balance sheet more resilient. Importantly, though Axis Bank's NPA recognition framework was seen as falling short of regulatory expectations, our sources have made it amply clear that they should not be compared with the IndusInd Bank case, where major accounting lapses have come to light. In Axis Bank's case, the issue was about policy interpretation, not financial misreporting.
Okay, important developments there, Ritu. Thanks very much for that. So that's on Axis. That stock is down around 1%. But let's talk about one of the top gainers on the Nifty. That's ICICI Bank again. From the private banking space, it's one of the top Nifty gainers after reporting what was a good set of earnings over the weekend. Gaurav is here to take us through the fine print of the numbers and what the street really liked about it this time round, Gaurav.
Well, yes, definitely we can say ICICI Bank reported good set of numbers because net interest income increased almost by 11% on a year-on-year basis. Other income actually supported the pre-provisional operating profit growth, where we saw 17% growth on a year-on-year basis. And lastly, when it comes to profits, now company reported 15% growth here. All the parameters were actually higher than what the street is expecting. What was actually a very positive and a key thing to highlight is that net interest margins declined only by 7 basis points on a sequential basis versus the estimates of around 16 to 18 basis point fall on a sequential basis. Now, management commentary also suggests that there were some changes in the accounting norms. As a result, if we compare on a like-for-like basis, the net interest margin decline could only be somewhere in the range of 4 to 6 basis points. Now, this is really impressive when it comes to the repo rate cut that we have seen across the industry. Other than that, there was another key thing to highlight is that the asset quality remained very stable. So gross NPAs remained stable at around 1.67%, just a 2 basis point increase in a sequential basis in terms of net NPAs. So there also bank delivered fairly good amount in terms of the asset quality. When it comes to commentary going ahead, now banks said that in the next quarter we will see 50 basis point of fall and its impact on net interest margins, but at the same time they are also saying that the cost of funds will decline. It will continue to decline. That is again which is something positive. Other than that, when we talk about brokerages, from there also we saw very positive reaction. Now Nuvama increased their target price to 1670. We also have IIFL and Investec who increased their target price, and all these brokerages are sounding bullish. In fact, when we talk about stock performance in the last 6 months, we are seeing ICICI Bank has continued its outperformance, and today's trade as well, it is up more than 2.5%. So definitely watching out on this counter on the back of a good set of number that it delivered in first quarter.
All right, Gaurav, thanks a lot for that. So that's about ICICI Bank. ICICI Bank and HDFC Bank together contributing the most amount of gains coming by on the Nifty Bank today, and as a result of that on the Nifty as well. Let's listen to the management of HDFC Bank, where the profits grew 12% on a year-on-year basis. And our colleague Ritu quizzed the management during their first quarter media call. Let's listen in to what S. Vaidyanathan, who's the CFO of the bank, had to say.
Normally, based on this Kharif and Rabi season, June and December is what the bank has typically seen agricultural credit and slippages elevate in these 2 quarters. And then it starts to subside in the following quarters. So this quarter is no different. It is just that the core, excluding the agriculture, which we have shown, has been very benign and pretty close, 102 basis points or so, compared to 96 basis points or so last year. So very, very close outside of the agriculture. And same with the GNPA too, which I alluded to, which is 114 basis points GNPA excluding agri. And the last year was 116 basis points, and last quarter was 113 basis points. So they are consistent and very stable across. We have taken this as an opportune stage to enhance the floating and the contingent provision. It is not meant for any specific portfolio. It is not meant for any specific anticipated risks. These are counter-cyclical buffers for making the balance sheet resilient. And that's where we have intended to and enhance this. And if you look at it, our contingent provisions were about 51 basis points of the total advances. It has moved to 57 basis points, so enhancing the coverage. The floating provisions were at 47 basis points, and with this addition that we have done in this quarter, we have taken it to 80 basis points. If you look at the credit growth, 2 things are happening. One at the industry level, you're seeing that the credit growth is coming down. Call it between 9% thereabouts. It could be touching 10, but between 9 and 10%. If you look at our credit growth, our AUM, we reported currently a little more than 8% our AUM growth. Last year, if you see March, we closed at about 7%. So we are moving up in the direction of growing credit. Cost of funds has been the only item that had inhibited the margin from the 4% to 3.4% thereabouts. Cost of funds had two components in it. One is the borrowing mix was higher than typical what the bank had experienced, 7%, 8% or so, went all the way to 21%. We have brought it somewhere midway between the 7 and the 21 right now. So we have more room to go to get that borrowing retired in course of time.
Okay, all right. So that's the update coming in on all the banks in terms of earnings. We need to take a short break with the news that the markets are steady. We have the Bank Nifty, which is up around 0.8%, and the mid-cap index, which is cruising with a gain of around 350 odd points. Take a break. On the other side, we'll connect with the management of Aarti Drugs to discuss their Q1 performance. Stay tuned.
To build anything that truly lasts, it takes time.
Welcome back. You're watching us here on Halftime Report. We've been talking about how there has been a stellar recovery in the frontline indices. Let's put a number to that as well. From the lows, there's been over 200 points in terms of recovery for the Nifty Bank a lot more, the mid-cap index as well, up nearly 0.6%. Today's low on the Nifty, now important crucial support zone because it's come after 3 weeks of declines. 24,882 on the Nifty today and 56,256 on the Nifty Bank. So these are important levels to watch out for going from here as well. What is it that has led the market higher from these lows? HDFC Bank and ICICI Bank, they've been top contributors and they've negated the downward pressure that Reliance has put in on the frontline index as well. With the Nifty now comfortably above the 25,000 mark, important to see where the put writers are active. And yes, they are. The 25,000 put writers come up for you on the screen. 73 rupees is premium out there. And the 24,900 put writers as well, both of them equally active, telling you that the support for the market remains at today's low around 24,850 to 24,900. On the way up, however, crossing that 25,100 mark is very crucial because call writers are still standing tall out there at 85 rupees premium, telling you above 25,150 to 25,200, there could be some congestion in the market. In fact, where the Nifty is right now is very close to the 50-day moving average. So crossing that 25,035 mark would be extremely crucial to track, and thereafter we can look at the 20-day moving average. For the Nifty Bank, the 50-day moving average is where we bounced back from, and now all eyes would be whether it goes ahead and crosses the 20-day moving average, which is at 56,928. Looking out for a couple of stocks as well. AU Small Finance Bank, lower in today's trading session post results. Union Bank as well, lower. Both of them seeing a lot of fresh shots being added. Eternal, ahead of numbers. That stock is up 3% among the top Nifty gainers. We'll watch out for how, the food delivery business grows and the losses reducing in Blinkit. So that stock is seeing some fresh long positions. And Angel One, the stock which has been in F&O ban for the last few trading sessions, may exit F&O ban given the open interest action that we've seen on that one.
Okay, all right. Thanks, Pankaj, for that. So that's the entire F&O space. But let's talk about one particular company. Aarti Drugs is the first management on the show. It reported what was a decent set of Q1 numbers. Margins came in healthy. Export revenue also jumped 18% year on year. We have with us Adish Patel, who's the CFO of Aarti Drugs, joining in to discuss the company numbers gone by. Adish, hi, welcome to the show. Just wanted to start by talking about the API business in particular. You said that last quarter you did see good global demand. Did that come in this quarter as well? Did you see good global demand this quarter? And could you break up the volume as well as the price action that you saw?
Yeah. So the demand was fairly good as far as exports was concerned, but on year-on-year basis. We did saw around 15 to 17% volume growth in exports and around 5% volume growth in domestic market year on year. But having said that, if we compare quarter on quarter, I think there is a lot more potential in demand for the volumes, both in exports as well as domestic market. And the main laggards were mainly antibiotic category in the fluoroquinolones.
Why did you see this kind of, sluggishness in terms of the antibiotic API demand sequentially? And what are you anticipating in the coming quarters in terms of volume growth in the API segment?
So I think we can do much better as far as exports is concerned. Definitely the China has been very active in last couple of quarters in terms of reducing prices. But mainly it is in temporary nature because on the longer term, definitely the demand does come back is what we have seen to us. We might have lost few orders because we were checking on the prices. We were not being too loose on cutting down the prices in last couple of quarters. But going forward, we are quite hopeful because we have got a lot of EU registrations and latest we got US FDA approval as well. So that put us in a very comfortable position to market more and more API in the regulated markets, which were not accessible to us some time back.
So if you could give us three numbers, Adish. One, earlier you were targeting 14 to 15% margins in FY26. Does that number hold? Volume growth between 10 to 15%. I suppose you will have a better clarity on which end of whether 10 or 15 is what you're likely to do in FY26. And prices, you expected a deceleration of 2 to 3%. Will that hold? So prices, volume and margins.
Yeah. So as far as prices were concerned, as we estimated that in the first half, we might see around 4 to 5% negative price variation. So that is what we observed in the first quarter. We did have a 9% volume growth year on year for the first quarter. Definitely the greenfield projects did not contribute in these volumes, and they will to a significant extent in the H2. So the volumes will go up to 15%, especially in second half. First half might be in the same range of around 9 to 10%. So volumes, you can say on a composite level might be somewhere between 10 to 15 this year, and 15% definitely we are eyeing for the next year. And now the price erosion has stopped. Since December, March and June quarters, the prices of APIs were quite stable.
Okay, prices of API were quite stable. And margins, what's your word coming in on margins? 13% to 14% you'd spoken about previously. So is that achievable and you still hold on to the target, or maybe you could expect better margins going forward in FY26? And also just a word in terms of your overall revenue growth. You had said FY26 you would see that double-digit revenue growth. Does that still hold?
Double digit, we might reach closer to that. by the end of the year. That is what we are hoping. Means probably 15% for the entire year. Value-wise growth may not be possible, but we will try to achieve 10% at least. Then as far as the next question was regarding what? Margins?
EBITDA margins, that 13 to 14% I think you had spoken about previously. So would that still hold?
Yeah. So the good part is our gross contribution has improved even on sequential basis. So if we have better utilization of plant capacities at that gross margin, definitely 15% we would have got in this quarter itself. But so 15 to 16% EBITDA margins with better utilization of greenfield capacities and the similar kind of maintaining the similar gross margins, I think it's pretty much achievable.
Okay. Adish, you also had your Tarapur plant which came back on stream. Your import alert was lifted in the month of Feb. So have you restarted your supplies to the US? If so, in what capacity? And what are you expecting in terms of contribution now from the US market?
So no, we haven't restarted the commercial business yet, though that plant was being used for some other geographies. But we already had a lot of customer audits for the US market for a couple of our products. So the thing is, once those all those approvals goes through, probably after 12 months time, our US supplies might start. But before that, the European supplies will start from the same plant for the same clients, because those clients are exporting to Europe as well as to US market. So
but why is it taking you so long to restart your supplies to the US?
Yeah. So because the thing is, so we were under import alert for quite a long time, around 10 years. So more than saying restarting the supplies, it would be more like launching fresh supplies to the US market, and that typically requires time from the US regulators, because the formulators need to get the new API vendor approved from the US regulators. So that process might take time.
Specialty chemicals, you expected that to contribute about 15% of your sales. Where does that number stand at right now?
Yeah.
And what is your glide path there?
Yeah, so 15% is pretty much achievable. Because the salicylic acid plant that does fall under intermediate category, and then the Saika plant, where we have just started the trials. Means I would like to say that last week only we started the trials. So if that goes through, then that plant would be put to use in this Q2 itself. If not, then probably in Q3. And so both those put together, definitely 15% is easily achievable in spec chem and intermediate category.
Okay. You had mentioned that Pakistan is around 3% of sales. There could be a little diversification in terms of sales. Are you still supplying?
No, we are not allowed to supply to Pakistan. So definitely that might have also hurt our export sale, which is down on sequential basis.
Okay. So where have you diversified your sales or diverted your sales to now? And how much is the export business as a percentage of your total sales, and how much did it grow, and how much do you think it was possibly impacted because of various external factors? So
if you look at year on year, it has definitely grown by 15-16%. But as far as Q and Q is concerned, we have definitely lost volumes as far as exports is concerned. Even with that, we are having around 35-36% of our revenues coming from exports for the standalone business, whereas for the formulation, around 57% of the business is coming from the export market. So temporarily, it might get, we might get hurt in terms of exports because of the Pakistan issue, but probably in 1 or 2 quarters, that demand should come back to us.
Okay. Adish, thank you so much for joining in with us on the show, and giving us an insight in terms of what we should be expecting from the company in FY26. That was the management of Aarti Drugs talking about maintaining and managing to at least reach a double-digit revenue growth in FY26 will be interesting, and in terms of improvement, in terms of pricing going forward will be a key to watch out.
Right, that's about Aarti Drugs, but as just that happened, we had a flash coming in on the bottom of your screen for Bajaj Consumer. The intraday of Bajaj Consumer should come up for you. The company is saying that they will go ahead and consider a buyback along with their results as well, and that has the stock fairly excited. It's up 5% right now. chances are it could go higher from here as well because of a couple of factors that are working for Bajaj Consumer. The first part is that they, got a new MD coming in the company, and ever since that announcement has happened, the stock has rallied about 45-50%. Secondly, in terms of valuations, there has been a lot more in terms of comfort coming in for Bajaj Consumer as compared to other players. And thirdly, the overall environment for staples has been improving ever since the first quarter updates have started trickling in. A lot of stocks have been doing well in that. Bajaj Consumer likely to benefit from that. And now you have the buyback sweetener, which is coming, takes the stock higher. It was already doing well, a smidge higher after that announcement has hit the screen. We take a short break, come back on the other side. Sudeep Shah of SBI Securities joins in with some trading strategies. Stay with us.
to give
Welcome back to Halftime Report on CNBC TV 18. Now we're joined by Sudeep Shah, Head Technicals and Derivatives Research at SBI Securities, to talk to us about the markets. Sudeep, good afternoon, and thank you so much for joining in with us. Today, obviously one of those better days coming in for the markets. We've come back and about the 25,000 mark, but there are key levels to watch out for, right? 25,100, and if it goes above that, or what is the support that one should keep an eye out on in terms of the Nifty? Also in terms of Bank Nifty, what are we watching out for?
Yeah, good afternoon. See, what we feel is that post the heavy results that had come in the last weekend, say Reliance, HDFC Bank, ICICI Bank, markets have now digested the entire result move, and we feel that going forward now, 24,900, 24,950 will act as a strong support. We are seeing a decent pullback in terms of banking stocks, in terms of financial services, which obviously has a higher weightage in the overall scheme of things. So overall, we feel 24,850, 24,950, that 100-point range will act as a strong support. And steadily, we could see a pullback closer to 25,200, 25,250. Now, the real resistance would be closer to 25,250 zone. So we see a range-bound move between 24,900, 24,850 and 25,250 on the upside. From a Bank Nifty perspective, 56,200 is what we see as an important support. Now, on Friday's low as well as today's low are identical at point also. So 56,200 looks to be a very important support, and till this holds, upside up to 57,200, 57,500 cannot be ruled out. And that could support Nifty towards it move to 27,250, 27,300.
Right, Sudeep, before you get to your individual stocks, I just wanted a chart check on Bajaj Consumer. The stock has moved higher. The management change has caused the stock to rally about 40-45% as well, and now they're considering a buyback. From a chart check standpoint, do you think there is further up move here, or are we looking at some sort of resistances? And then you can give us your stock picks as well.
Good afternoon, Mangalam. Mangalam, what I feel is that in the last few days, this move seems to be overstretched now from 200 to 10, the stock has moved to 250. Although the news is positive, but I feel the stock could head into resistances closer to 255, 257 zone. And that's why the risk reward ratio does not seem appropriate. So I feel that dips towards 240, 243 should be added to go long rather than buying at current levels. In stock specific, there are a couple of names that are there on our radar. One is Chola Finance, 1565, 1570 is what it's trading closer to. 1510, 1515 zone, we feel that that could act as a decent support, and with the pullback in the financial names, this stock could rebound towards 1650, 1700 zone on the upside. So this could be bought with a stop loss at 1520. The second name is a cement name. Now here we are seeing a decent pullback. Dalmia Bharat closer to 2270, 2280. This should be bought on dips, and on the downside 2230 would be a stronger support, and so the stop loss could be 2230, and we're looking at an upside closer to 2400, 2450. There's a breakout on the weekly charts backed by volumes. So at current levels and on dips, we feel that this should be added, and the stop loss could be around 2230 on the downside.
Okay, all right. We're going to let you go on that note. Thanks very much for joining in and giving us all of your technical recommendations, Sudeep. So that's Sudeep Shah talking about what he's recommending today. Just watch out for cement stocks such as Ultratech Cement, which will be releasing its numbers today. So it's holding up with a gain of around 0.7%. Eternal also is doing quite well ahead of its numbers. It's up around 3% ahead of its numbers today. So do watch out for that particular counter as well. We'll take a break, but on the other side, Manisha Gupta will join in to take us through her conversation with the MD and CEO of Senco Gold and Diamonds. The award with
To build anything that truly lasts, it takes time.
Welcome back, and joining us on the show now is Suvankar Sen. He's MD and CEO at Senco Gold and Diamonds. Suvankar, hi, thank you so much for joining in. And I absolutely directly want to go to the BIS notification that's come in about the 9-carat gold hallmarking also now introduced. I mean, we do understand that what India buys in sense of jewelry, almost 70, if not 80% of that is 22 carats. Of course, with gold prices going higher, diamond jewelry doing better, you need those lower caratages. But 9 carats?
See, if we look at the international markets, UK or even in certain markets in US and other parts of the world, people have been selling 9 carats and 10 carats. So 9 carats is about 37.5% gold and the rest is all alloy. So I think that if a 24 carat gold price is about 1 lakh rupees, then a 9 carat gold price will be around 3,750 to 3,800 rupees. And I think that it is only going to support the diamond and the studded industry because people there are anyway buying 14 carat. Now with the gold prices going up, I think that the ability to sell more diamonds will also go up. And in terms of affordability, if we look at the gifting segment below 30,000, below 20,000 rupees for an everyday wear, I think that this is a good support from the government to ensure that jewelers can produce jewelry which is affordable, and young generation customers and customers within budgets and more variety that they can buy. This will be good for the industry in the long run.
So Suvankar, what you're saying is that this is not for gold investors, rather for diamond buyers and fashion jewelry buyers. So there is this categorization there.
Yes, because what we are seeing in the market is when it comes to gold jewelry or wedding jewelry, when there is a serious buying for some special occasion happening, there, it is mostly 22 carat. People are looking to reduce the weight. So consumers are facing some challenge in terms of having jewelry within their budget. 18 carat gold jewelry, either whether it is Western design or traditional design, that is also something that the consumers are looking for. So when it comes to those wedding jewelry buying, we are seeing a 22 carat lightweight or 18 carat purity being asked for. But when it came to diamond jewelry, it is either 18 carat or 14 carat. And now we as jewelers and the consumers have an option to provide for a 9 carat base on which the gemstones and the diamonds and other precious and semi-precious gemstones can be given to the consumers.
So Anka, take us through the fact that, and this is for the consumers as well, that if you're buying a 9 carat jewelry, then your making charges are as much or perhaps more than if you were buying a 22 carat jewelry, and the wastage charges are high as well. And then you are using various kind of alloys. Dwell deeper into that, please.
So yes, when it comes to the mathematics of, the breakup of the gold rate and the making charges, when it comes to 9 carat, most of it is casting or machine made, and there is a lot of studded aspect to it because you are studied it with diamonds, so there's extra labor that is needed to make the jewelry complete, unlike a machine made yellow 22 carat gold jewelry. So therefore, when it comes to making charge per gram, it is the time value of the laborer, of the karigar, or the people who are working to make the jewelry. So the making charges in terms of percentage might look high, but in terms of absolute numbers, it might be as the same as it is for a 18 carat or 14 carat jewelry. But yes, when it comes to 22 carat, it is because the gold value itself is so high. Therefore, in terms of percentage terms, it will look as if the making charges are lower, but in absolute numbers, when it is a lot of design and karigari, obviously the making charges will be similar to a 9 carat. So this is how the consumer has to look for it, because it is the design, it is the manufacturing. The only way, the benefit that the consumer will be getting is a lower value of gold because it is 9 carat instead of 14 or 18. And that is how the consumer needs to look at the product.
So Ankur, coming also on the BIS notification that talks about the 24 carat coins to be now minted only by mints and refineries. How does that impact a lot of jewelers like yours?
No, I think that, these are steps taken by the government to ensure that there is a basic quality that is maintained when gold bars and coins are given to the consumer. While when it comes to, these new rules that have come in, what I can see and the talks that are there in the industry, that what exactly is the clarity that, we are looking for from the BIS and the government when it comes to these particular laws and rules. But yes, ultimately what we all need to look at is that even when we are providing a 24 carat 995 or 999 purity gold bars and coins to the consumer. We do our own internal testing to ensure that there is no mistake in terms of the purity that is being provided to the consumer. So when it is being either given from a proper mint or a BIS approved refinery, or even there is hallmarking of the product, there is proper quality control and checking done before we provide the product to the consumer. So I think it's all.
So, Suvankar, is there a clarity right now that whether or not jewelers can now make these coins, or is it only about refiners and mints and you can only sell it and not manufacture it?
No, the clarity is still not very clear, very honestly. I think there are discussions and happening within the industry and with the government. And I think hopefully clarity will come very soon.
All right. We will, of course, wait that.
All right, we will. I'm just curious to know, what does one even get in a 9-carat
37.5% gold.
So is that even worth considering as an investment? Because we're so value conscious when we buy gold that everything that we put in is largely on account of an investment value. Now if we're buying it for adornment, then 9-carat, will that be worth the money that we're paying?
Right. See, so there are two kinds of mindset that we see, and especially with the young generation consumers coming in. While there is a value and an investment that we attribute to buying gold jewelry or diamond jewelry, but there is an element of fashion and how consumers can keep on changing their jewelry and try out new designs. So I think more from a perspective of investment, if you look at it, you're paying a lower amount for the gold, and when you're exchanging it, since it's going to be hallmark, you will be getting that much quantity and quality or whatever, the value and amount of gold. So there is actually no loss to the consumer, except that, yes, the making charges that you will pay for the design that you're paying for. But when it comes to fashion,
I think Mangalam, yes, it also is about 9-carat, and it was going to be so strong, solid, that you can have diamond jewelry rather than 9-carat than anything else.
All right, guys. Thanks very much for joining in and taking us through that conversation. So definitely demand picking up for the lesser carat jewelry. But in any case, remember to tune in to the all-new CNBC TV 18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV 18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV 18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m.
To build anything that truly lasts, it takes time.
पैसा लगाना है तो सेंचुरी क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी क्लब प्राइम, रहो बेफिक्र।
Welcome back. Let's talk about the primary market action. Brigade Hotel Ventures IPO, which includes a fresh issue of nearly 760 crore rupees, comes up. They operate the Marriott, Intercontinental, Accor, and betting big on premium expansion as well. Reema caught up with Nirupa Shankar, the managing director of the company, and started by asking them about their expansion plans. Listen in.
We've already signed with Hyatt Group, and then we are looking to add to our existing hotel operators with one more brand.
So 1604 keys as of now,
Yes.
with 10 new in the pipeline.
Yes.
What would the expected key count look like?
So we've declared and given the exact numbers for 5 of them, so that will add to about another 1,000 odd keys. And then with the remaining 5, we've not given the exact numbers yet, but it will add a few hundred more.
Got that. And what's the expected timeline when these will be, come on stream or be operational?
Yeah. So we've already started the construction and design development for some of the hotels. So those will start coming in from FY28 onwards. So you'll see these hotels come in between FY28, 29 and 30.
And what would be the expected revenue contribution from these new hotels?
No, that's, that's a 5-year plan but we are looking for significant increase in the revenue, in the bottom line. We're looking for very healthy growth, I would say, because what we did in the last 16 years, which is the creation of 9 hotels, we're planning to crunch in the next 5 years. So it is a high growth period for us. So obviously we are looking to enhance our revenue significantly.
So what's the debt today? And how much will it come down to?
Yeah, so debt today is about 620 crores. And 468 crores of that is institutional debt, which is what we are looking to repay from the IPO that we're planning to do. So we will have about 120 crores of debt remaining. Yeah.
Will you look to take on more debt as you expand?
So we don't require debt immediately. We have sufficient internal accruals to handle maybe the next 1.5 years.
So promoter holding is 96.3%.
Yeah.
How much will it drop to?
Around 74-75%, yeah.
So you said 2 things. One is that the company is planning for significant acceleration in revenue, margins, profitability. And you want to do in the next 5 years what you've achieved in the last 16 years,
That's
crunch
right.
it all in.
That's right.
So 5 years later, what would Brigade Hotel Ventures look like? I mean, how would the mix change? What's the ambition or aspiration here?
So I believe in the next 5 years, what we have stated is what, business development has already been done. But of course, our BD is going to continue. We're not going to stop with just these 10 hotels. We're going to constantly look and evaluate for new markets, micro markets. And I would also say leisure is a new segment that we did not look at previously. Because I would say the leisure market didn't command those extremely high rates. Very few hotels commanded high rates for leisure. And occupancy was also much lower than business hotels. But COVID, post-COVID, everything changed in terms of market dynamics. Leisure markets have become extremely strong. The kind of ARR growth that leisure has seen has drastically changed. So you will see Brigade adding very high-end luxury resorts to its portfolio. You will see us doing a lot more 5-star hotels and 5-star deluxe hotels. What this implies is ARR will also see a different change and an increase because of the nature of the products we're creating, which will again translate into much higher EBITDA margins because of the flow through of the ARR profitability into the EBITDA.
So you're expecting a significant expansion in EBITDA margins and ARR.
That's right.
Because now you're going to be operating in a very different segment which commands higher ARR.
Yeah, that's right.
So explain to us what would be the margins, right? There are some peers of yours like Lemon Hotels, Chalet. They all enjoy margins of 40-45%.
Yeah.
Do you think, without getting into numbers or a guidance, but do you think your company can operate at 40% plus margins?
No, absolutely, because we are, even the existing portfolio, many of the properties already operate at those kind of margins. Sometimes the margin is reduced when you have new hotels coming up. They take time to sort of stabilize at 40%. But I think 40% as an industry average is a very doable number. And honestly, even in any sort of segment you operate, so even if you're in the mid-market or even if you're in the higher end segment, it is possible. So maybe there could be few percentage point difference. I would say in the 5-star luxury deluxe category, anything above 45 to 50% is very possible. In the mid-market category, something between 35 to 40% is very doable.
Is there an ARR number that you're targeting?
No, I mean, of course there is internally, but currently we are looking Currently, the portfolio is at around 6,800.
Yeah.
And like I said, I think with the portfolio change, you will see the increase in ARR.
And what about top line? You've been growing at 16, 17%. Is that sustainable?
Absolutely. And I would say, last year we did about 16, 17% increase in the top line, about 15% increase in EBITDA. And there's nothing to prevent us from doing something similar in the coming year without any addition in the portfolio. A lot of the portfolio, like I said, will come in, it's under construction and will come into play in FY28 and 29.
Occupancy, what's your own view?
Occupancy, currently our portfolio is at 77%, which is a very healthy occupancy for an entire portfolio. Despite the fact that we just launched a hotel last year. So I would say without that one hotel we launched, it's closer to 80%, it's 79% or so. We're pretty happy with the occupancy, but obviously nobody wants to sit on their past laurels. We are looking to see how we can take that up to maybe the mid-80s or so. That is our end objective with all our operating hotels.
Okay, so just one final question. Would you look to launch a hotel under your own brand name?
That's a question we have pondered over. But, today our strategy is that we like to partner with global tier 1 operators. I think, like I said, the Marriott's, IHG and Accors of the world do their job extremely well. And I think we would want to continue with the branded players.
To build anything that truly lasts, it takes time.
CNBC TV 18 tracks the pulse of markets and business in real time, bringing you the stories that shape the economy.
From breaking news to sharp analysis, we deliver insights that help you navigate businesses, markets, and investment opportunities.
Nuvama presents CNBC TV 18 Market Central,
providing sharp market intelligence for wealth creation with a commitment to doing it right.
Welcome back to Halftime Report on CNBC TV 18. And just want to mark a couple of names, that have recovered in the last 1 hour of trading, from the day's lowest point, seeing a bit of an uptick coming in. Gujarat Fluoro is the first one that we should look out for. In the last 1 hour, it's up almost 2%. Sharp uptick is coming in just the last few minutes for the stock. Other than that, we have 361 WAM. That's also seen a bit of a spike up coming in from the day's lowest point. And this is specifically in the last 30 odd minutes to an hour that we're seeing that spike up coming in. And ABSL, AMC, Aditya Birla Sun Life AMC, that's the other one that I would like to mark out as well. That is buzzing in trade, or, actually recovered from the day's lowest point. Other than that, Policy Bazaar has just come up on the screens as well. PB Fintech or Policy Bazaar, that also has seen a bit of a spike up coming in from the day's lowest point. And the last few minutes, if you look at the PB Fintech or Policy Bazaar, that's seen that spike up coming in. So keep an eye out on these stocks as well. Broader end of the markets is also, in the green now, trading in the green, even the Nifty small cap. But that's how we're seeing the market setup looking like. A better day coming in this Monday for the markets. That's what we'll be keeping an eye out on. But we'll wrap up this edition of Halftime Report as of now. Don't go anywhere. Up next, your business lunch to take you through all the action ahead and what we're watching out for.
To build anything that truly lasts, it takes time.
How many world champions does Mumbai have? Chennai's got 9, okay? In cricket, chess, carom, squash.
Fresh air. The roof, but different. The grill, but different. The alloys, but different. The seats, but different. Different is in the XUV 3XO Rev X series, starting at rupees 8.94 lakh.
How many world champions does Mumbai have? Chennai's got 9, okay? In cricket, chess, carom, squash.
Stocks bounce after some early weakness as some better than expected results boost sentiments. Financials and industrials are leading the charge while IT and energy continue to drag.
Reliance Industries clocks a good quarter, delivering a healthy profit even after adjusting for gains from sale of Asian Paints shares. Brokerages remain upbeat with an eye on value unlocking from the new energy business.
ICICI Bank over-delivers while HDFC Bank also turns in a steady show with only a moderate decline in net interest margins. Unlike the mid-sized banks, many of whom also feel the credit cost pressure.
CNBC TV 18 learns Axis Bank was prodded by RBI to recognize stress, leading to a jump in provisioning in the first quarter. And while the regulator found no accounting lapses or violations, it felt the bank's NPA policy was too lenient.
Jio Financial Services and Allianz Insurance Europe will set up a 50-50 reinsurance joint venture in India. The two have also inked term sheets for equally owned JVs in the life and general insurance space. Good afternoon. You're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Hormuz Patakia. With me as always is Vamakshi Dhuria. Vamakshi, good afternoon. It is that time of the day when we start counting down to major earnings. We're already seeing some flash at the bottom of your screens, but we're counting down to two major numbers today from Ultratech and from Eternal. The markets have been fairly okay, but there is still some hesitation at higher levels.
Well, absolutely, Hormaz. You know, today, if we can describe the market's mood, is how actually we feel on Monday morning. Like just Monday morning blues, then you have a cup of coffee, and then, you know, you're set for the day. And that is something that has actually played out in the markets. We started on a very, very weak note, but we soon managed to recover. The index is now trading with a gain. That is, the Nifty is trading with a gain of almost 81 points. You know, Nifty has managed to surpass the 25,000 mark yet again, and the mid-cap end of the market is actually very, very vibrant. You know, the mid-cap end of the market is up almost 0.7%. There you go. You know, it is at right now at the day's highest point. The small-cap end of the market, though, has seen a bit of a recovery, but trading mildly in the green. Now, you know, what is driving the action today is actually the earnings, right? Reliance, of course, is you know, pulling the Nifty lower. But on the other hand, we now have HDFC Bank as well as ICICI Bank, you know, pulling the index higher. So just some of the banking names that are doing quite well in today's trading session.
Absolutely. ICICI Bank at 1461, now just 10 rupees away from its all-time high, which is 1471. The Nifty Bank continuing on its merry ways at the highest point of the day, 650 points higher on the index as well. And it is that banking space which is contributing to this up move. Of course, that does not take away from the fact that there have been a lot of negative earnings reactions as well. AU Small Finance Bank being a case in point. But that too is seeing some recovery from the lows of the day. But staying with the banking space after the slew of earnings that came out on Saturday, almost double digits, Gaurav is joining in to summarize most of them for us, if not all. Gaurav, tell us more.
Well, yes, when we talk about banking, it was a very crucial weekend, I would say, because there were many names which came with their earnings. But let's look at some of the key counters who are actually also reacting on the back of the earnings. First, let's talk about HDFC Bank. A very good set of numbers is what we saw. Profitability increased almost by 12% on a year-on-year basis. Now, there are a few key things to remember here. First is that the asset quality remains stable, and second is that the core net interest margins declined only by 11 basis points. This is something that the market has taken positively, and as a result, we are seeing some uptick in this counter. When it comes to ICICI Bank, now there also let's focus on the core key segments where the positivity was driven, and that is the reason why we are seeing some uptick in the stock price as well. First is that net interest margins that declined only by 7 basis points versus expectations of 18 basis points, and here also we saw stable asset quality. When it comes to Yes Bank, there also we saw a little bit of positive news coming in, and the reason being that bank is actually moving towards their target of 1% ROA. They actually improved their ROA almost by 10 basis points to 0.8%, although it was driven largely because of the other income for the bank. When it comes to Bandhan Bank, now we saw a little bit of weakness in the stock price as well today, and the reason being that when it comes to numbers, they were expected to decline, and they have declined a little lower than what the street was expecting. But on the other hand, there were some concerns on the asset quality. Now the slippages have actually remained high, and specifically when it comes to EEB segment, which is some of it is actually their MFI book. There we saw higher slippages, and that is the reason why when we talk about the stock price, we are seeing some negative reaction. RBL Bank, on the other hand, again, when it comes to net interest margins, they delivered fairly well, but it was actually lower than what the street is expecting. Other than that, there were also some other areas of concern where the bank actually did well. In fact, what they are saying is that in FY26, they believe that ROAs are going to be somewhere around 1%, but definitely on the back of the net interest margin fall that we saw in the quarter, we are seeing a negative reaction. AU Small Finance Bank, let's move on to this counter now. It has seen a fall of more than 5%, and the reason being that they have increased their credit cost guidance almost by 10 to 15 basis points. They expect credit cost to remain around 1%, and after that, we saw some sluggishness from the investors and as well as brokerages like Investec. They have cut their target price to 910 rupees because they believe that this will actually slow down their journey going ahead. Lastly, let's also focus on Union Bank. Now, we already knew that the numbers for Union Bank was low when we compare it with the market, but another key trigger here is that now brokerages believe that there are no near-term triggers for the stock. In fact, when we talk about valuation, at the same valuation, we are getting better banks as per brokerages, and that is the reason when we talk about Motilal Oswal, they actually cut their rating for the stock, and as a result, we are also seeing some kind of negative reaction in the stock price. So, to sum it up, some good banks like HDFC and ICICI Bank who maintain their outperform across the segment, but there were some weaknesses like AU Small Finance Bank where we are still seeing some stress coming up from the MFI segment.
Well, thanks so much for that. Some hits, some misses from the banking space, but let's focus in on Bandhan Bank. The results were a mixed bag, as Gaurav was pointing out. The positives were a quarter-on-quarter rise in the ROA by 12 basis points to 0.8% and rise in return on equity by 70 basis points to 5.9%. But there have been a large share of worries. Margins are down quarter-on-quarter by 30 basis points to 6.4%. Gross NPAs are up by 25 basis points to 4.96% and net NPAs by 8 basis points to 1.36%. To understand more, we actually spoke to the management and, there was Partha Pratim Sen Gupta. Let's listen in to what their take was.
Definitely, we will go for a moderated approach in this segment. We are focusing on both a particular balance between the secured and the MFI segment for the day. So we made a very reasonable target of 8% only growth for 8 to 9% growth for this financial year. We hope that, yes, this growth probably would be achieved by the end of this financial year. So we will try another 20-25 basis point. Definitely, we are expecting to reduce, but we will see. But as I was told that these steps would definitely have a positive effect on this year also. Last quarter only, Q1, we have seen almost more than 20% growth in this segment. So we are capable. It's infrastructurally, if you look resource-wise, we are definitely capable. In the industry, we are expecting that it will go forward. So the disbursements, we know that we have to make a large number of disbursements, but yes, we are keeping the target. And we hope that from Q3 onwards, we will probably be able to do it.
Bandhan Bank, one of the other negative earnings reaction that took place after the results that were reported on Friday evening. Now, sources say that Axis Bank's unexpected spike in bad loans and provisions in the first quarter results was not entirely the result of the bank's own internal decisions. Ritu, who broke this story, is joining in with more exclusive details on this. Ritu.
Well, the surprising spike in bad loans which dented Axis Bank's profitability in the recently announced first quarter numbers that the bank attributed to a technical impact was actually not entirely a proactive move by them. We've been given to understand that this followed a regulatory intervention from the Reserve Bank of India, which had raised some red flags about Axis Bank's asset classification practices during a supervisory review in the January-March quarter of this year. Now, RBI found that the bank's NPA recognition policy was too lenient. While the bank was compliant with RBI's income recognition and asset classification norms on paper, we understand the regulator felt that the bank's internal policies were not aligned with the spirit of the regulation, and in some cases, this was leading to a delay in recognition of stress or even under recognition of stress in some cases. Particularly, this was seen in the unsecured retail and small business loan segments. So, in response to this nudge from the RBI, Axis Bank revised its internal framework, which then led to that 614 crore rupee hit to the bottom line, the additional 2,709 crores in gross slippages, and 821 crores in provisions because of the so-called technical impact. Now, on its part, the bank called the move a prudent application of enhanced qualitative criteria, which was aimed at making the balance sheet more resilient. Importantly, though Axis Bank's NPA recognition framework was seen as falling short of regulatory expectations, our sources have made it amply clear that they should not be compared with the IndusInd Bank case, where major accounting lapses have come to light. In Axis Bank's case, the issue was about policy interpretation, not financial misreporting.
Well, thanks so much for that, Ritu. That was the news flow on Axis Bank. But there is a CNBC TV 18 news break that was confirmed. Sona BLW will be entering China's EV market via joint venture with the Chinese company Junite Machinery. Vivek is here with more details. Vivek, congratulations on the news break.
Well, thank you so much for that. Well, last week we had intimated to our viewers about how Sona was entering the Chinese market. We understand that they were in talks with BYD. While Sona doesn't really name the companies that they supply components to, in all likelihood, this particular JV partnership is mainly to supply parts to the Chinese automotive OEM, which is an EV giant, that is BYD. Whole host of brokerage. Now, first, there's a JV where Sona will hold close to 60% stake. They are investing close to $12 billion in this particular JV. And what the JV will do will manufacture as well as supply driveline systems as well as components. Now, a whole host of brokerages have reacted to this particular development. Elara says this is a significant positive in terms of supporting valuations for Sona, which has derated quite significantly in the recent past. Investec says that the JV will provide exposure to the largest EV market and help tap Chinese OEMs. The JV with JNT will go ahead and over time reduce customer concentration risk. ISEC says that the stock has underperformed its peers over the past few quarters, currently trading at 32 times FY27 EPS. They expect the stock to bottom out and should start outperforming from here on. While JM Financial says that this particular JV represents a significant growth opportunity, the company would not have entered this venture without a strong anchor customer. In fact, JM Financial says that most likely this customer is likely to be BYD along the lines of what we had reported as well. Kotak Mahindra Bank, Kotak Institutional Equity, on the other hand, indicates that number one, while this helps Sona address a very large TAM, they are slightly conservative given the fact that they believe margins could get eroded on the fact that BYD could squeeze out its suppliers.
Interesting, Vivek. Congratulations for the news break and, of course, a confirmation of that from the announcement that Sona BLW made. The stock trading with gains in today's session. But moving on then, a new entrant on the bourses today. Anthem Biosciences listed at a premium of 28% to its issue price. We caught up with the management on the shift from China on the China Plus One theme and the capex plans that they are planning for this year. Listening to what they had to say.
People feel anxious about putting more of their eggs in the Chinese basket. Up until now, they have actually been the major player in the contract research, development and manufacturing business. But we are now clearly seeing signs that people are saying, I do not want to put in my second project in the same place again. Or alternatively, when they have a first project going in, they have anxiety about going into China because you don't know what the future holds. So we are getting many more inquiries, and clearly that's panning out. But it's not like flipping a switch that it will happen tomorrow. It is, as I said, even anyway, the gestation periods in our business are long, and we are in that phase where we are seeing a lot of inquiries which will, going again by past history, migrate into future business.
Yeah, we've been investing on capex across our entire Unit 2, Unit 3, and now we have started on the Unit 4 journey as well. Unit 4 is going to be a large project because from a size point of view, it will be as large as Unit 1 plus 2 plus 3 combined. Unit 4 could be in 2028 and 2029, and that's going to be a large capex for us.
Well, that was the management of Anthem Biosciences, a very strong debut for the counter. Take a short break, then we'll be right back. Stay tuned to CNBC TV 18. Don't go anywhere.
To build anything that true
effort is to make sure workers get better, higher skilled jobs. Our effort is to get investments and technology. Our effort is to focus on innovation, like we did with the EFTA countries, Switzerland, Norway, Liechtenstein, and Iceland.
Commerce Minister Piyush Goyal there at an ASSOCHAM event. Now, the monsoon session of the Parliament got underway earlier today. Shivani is joining in now to tell us what is on the agenda over the next 32 days. Shivani.
Well, yes, the monsoon session of Parliament opened under the cloud of protest, with opposition members raising slogans in the Rajya Sabha demanding a debate on the Pahalgam terror attack, Operation Sindoor and foreign policy concerns following the US President Donald Trump's controversial ceasefire claims. But even as the political heat simmers, the government is steering its focus firmly towards legislation, with a packed agenda of 15 bills lined up for this session. At the top of the list is the Income Tax Bill 2025, which aims to replace the old Income Tax Act of 1961. It retains the core provisions but simplifies languages and removes obsolete sections from the existing bill. Introduced earlier in February, the bill is now under review by a select committee. In addition to this, 8 new bills will be introduced in this session, from the Manipur GST Amendment Bill and Taxation Laws Bill to the Jan Vishwas Bill promoting ease of business and significant sectoral reforms through the Mines and Minerals Bill, the Geo-Heritage Sites Bill and the National Sports Governance Bill, and also amendments to India's anti-doping law. The government will also move a resolution to extend precedence rule in Manipur and table the demand for grants for the state for FY26. So while the day began with disruptions, the session has a lot of things going on and a lot of things on the table. Back to you.
Well, thanks so much for that, Shivani. But ahead of the Parliament session, PM Modi also addressed the media. Let's listen into what he had to say.
मुझे विश्वास है कि हम सब मिलकर के डिफेंस के क्षेत्र में आत्मनिर्भर होने के इन प्रयासों को बल दें, सेना के सामर्थ्य की सराहना करें। और मैं आज देशवासियों के सामने जरूर कहूंगा और देश के राजनीतिक दलों से भी कहूंगा कि देश ने एकता की ताकत देखी है, एक स्वर का सामर्थ्य क्या होता है देखा है। तो सदन में से भी सभी माननीय सांसद उसको बल दें, उसको आगे बढ़ाएं।
Take a short break here on Business Lunch, but just as we do that, here's some good news for our viewers. India's business news leader is now just a click away, and that is, of course, CNBC TV 18's all-new app, where you can get instant breaking news, in-depth articles, and financial world updates right at your fingertips. You can download the app from the Apple Store or the Google Play Store, or even scan the QR code that comes up on your screen to download the app. Take a short break, back on the other side.
To build anything.
पैसा लगाना है तो सेंचुरी प्लाइ क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
Welcome back. Now, U.S. President Donald Trump celebrated the 6-month mark of his second White House term by declaring that the United States has become the hottest and the most respected country in the world. Meanwhile, Trump sued the Wall Street Journal, seeking $10 billion in damages over the Epstein report. Take a look at this report from NBC's Yamishi Elsninder.
As President Trump eagerly touts his second-term success,
we achieved more in 6 months than almost any administration could accomplish in 8 years.
the ongoing firestorm over his administration's handling of the case of notorious sex offender Jeffrey Epstein dominating headlines, with both parties weighing in.
We should know what happened here. And it is a claim that this president has made time and time again, and the American people have the right to know what happened.
You got 1,000 children that were abused by this dirtbag, and yet the American public's all pointing the finger, trying to play politics with this thing.
This morning, the president defending himself, writing, "My poll numbers within the Republican Party and MAGA have gone up significantly since the Jeffrey Epstein hoax." But new polling from CBS shows the president's approval rating has broadly declined since February. That victory lap coming as many of the president's own supporters demand the Justice Department release more information on Epstein. Meanwhile, Epstein's former lawyer suggesting convicted Epstein associate Ghislaine Maxwell should be given immunity to testify before Congress.
She is the Rosetta Stone. She knows everything. She arranged every single trip with everybody.
Still, the president's celebrating a busy last 6 months.
And it's really promises made, promises kept.
Promises like extending the 2017 tax cuts, more immigration enforcement, and cutting the federal workforce. Still, the continuing Epstein controversy threatening to overshadow the president's future agenda.
Well, moving on then, travelers may soon have to pay a hefty new visa fees to enter the US. CNBC's Monica Petrelli gets us the latest updates on this front.
A part of the new One Big Beautiful Bill Act requires what is called a visa integrity fee. Now, we can see that this fee will be required of all non-immigrant visa holders. In fact, if you are applying for that, that would include people coming from India, China, and much of Latin America. It will be at least $250. This will be on top of other visas, and it may be reimbursable. That is, if you comply with the terms of your visa, like leaving on time. Now, what we don't know is when the fee will start, how it will be implemented, or when those reimbursements will begin. Now, the Congressional Budget Office is estimating that this could net the U.S. government around $29 billion, and that is because it does not foresee that reimbursements will begin for a few years, although sources that I'm hearing from are saying that the fees may begin as early as Q4 of this year. Now, the other word that we're getting from the Congressional Budget Office is that it expects many people won't even ask for the money back. That is because the money is only due when the visa expires, and since many visas are years long to the U.S., many people simply won't bother or won't remember to ask for their money back.
And with that, we call time on this edition of Business Lunch. We leave you with the Nifty still close to around 80 points higher. But from Amak, Shimi and the team that put this show together, thank you so much for watching. Midcap Radar on the other side.
To build anything that truly lasts, it takes time.
Good afternoon. Welcome to Mid-Cap Radar, live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, Vivek Iyer. Good afternoon, Vivek. It's not Monday blues, but greens. We've come up from the highs, but nevertheless, it's a 75-point uptick, and we are above the 25,000 mark so far. That has been an important support.
Absolutely right. Good afternoon to you, Sonal, as well. All of the indices in the green, and that is something to start the week off on a positive note. We have a lot lined up on the show, so let's start off with the top headlines. Stocks bounce after early weakness as some better-than-expected earnings boosted sentiment. Financials and industrials lead the charge, while IT and energy drag. Mid-caps race ahead.
Mastech shares rally over 9% in trade despite a muted set of Q1 earnings. The company's 13.5% growth in profit and nearly 500 crore cash in books lifts investor sentiment.
Hudson Agro rallies nearly 10% after a strong first quarter, where gross margin expands to a multi-quarter high of over 32%.
A CNBC TV 18 news break is confirmed. Sona BLW enters the China EV market, signing a binding term sheet with Giant Machinery Co. to set up a joint venture in China.
Contract research development and manufacturing firm Anthem Biosciences sees a strong debut on the street, listing at a premium of 28% to its issue price. The management tells CNBC TV 18 that they remain optimistic about the future outlook of the company.
Okay, all right, those are the top headlines. Mid-caps continue to be the focus point of the show. So this is our segment, Mid-Cap Movers. Hormaz is joining us to take us through the mid-caps that are moving around in trade. Hormaz.
Earnings reaction, there's an endless list, but we'll filter out some of them. And the only positive reaction as of now is coming in from Mastech. And that despite having a weak quarter, the stock is still up almost 8% as we speak. But negative reactions from EU Small Finance Bank, MRPL, both have recovered from the lows of the day. But Dodla Dairy has slumped to the lows now, 7.5% lower on that stock. Some of the other newsmakers in today's session, at Bajaj Consumer just announced a share buyback, but the stock hasn't managed to sustain that initial spike. GPT Infra Projects just announced a 350 crore order win, as did Titagarh. The stock has recovered from the lows, and Newgen Software continues to get pummeled, 4.5% lower today as well, after a 6% drop on Friday and a 6% drop on Thursday as well. Metal stocks are doing fairly okay today. Nalco, Jindal Stainless, Lloyds Metals, all of them seeing gains of around 3.5 to 4%. Hindustan Copper, though, is up 2.5 as well, but the stock is in the F&O band today. Some of the stocks doing on the volume front, Tata Investment is up 5, MMTC is doing well today. Tanla Platforms, the record date for the buyback is this week, so 3% higher there, and UPL has surged to the highs of the day on very strong volumes. And lastly, stocks that are at a 52-week high in today's session, asset managers continue to move higher. It was HDFC AMC last week, it's UTI AMC today. Paradeep Phosphates is up 10%, and Mangalore Chemicals too, up 6%, and all of them at a 52-week high. Back to you guys.
Thank you so much, Hormaz, for highlighting all of the stocks that are moving as far as the broader end of the markets are concerned. Well, moving on, IREDA is on our radar. Our colleague Rachna caught up with Pradeep Kumar Das, the chairman and MD IREDA, to discuss their business outlook and asset quality picture post the Gensol engineering fiasco. Let's listen to excerpts from that conversation.
Competition is coming quite a lot in the vanilla iris space segment. Since the sector is matured, like us, bank, other NBFCs, they are feeling quite comfortable now to lend in that space. But that is the role IREDA need to play. IREDA being the sole arm of MNRE, which is having capability to understand the nuances of new and emerging IRE and handhold the industry from a nascent stage to a maturity stage in due course of time. Till such time, this kind of flip-flops happens. Provision going up, NP emerging, but in due course of time, those get sorted out. One example, if I'll share with you, that replies everything with respect to our provisioning and asset quality. In last 38 years, we have financed more than 1.62 lakh crores, and our asset quality is so robust, the cumulative write-off so far in 38 years is just 135 crore. So provisioning, NPA, just a kind of temporary phenomenon in the history of IREDA so far, and we believe we can sustain that kind of quality in time to come.
Okay. You mentioned Gensol. You've moved to DRT for the Gensol 729 crore fiasco that took place. How relative is this exposure to your loan book? And apart from that, you mentioned a similar risk that you saw in an Andhra PBI. Can you give us, can you quantify that also for us?
No, first, I did not say similar. It's quite different. Andhra was a PPA where the Andhra government decided to reprice the PPA, almost half of it. And what I was told that though they reduced to half, but still that did not pay also the half what they had reduced. So not only the total revenue got reduced, even the cash flow 50% what they had to get, that was not happening. Gensel is completely different. So far, as per the investigation is going on by the various agencies, including IREDA, preliminary report what we have received, that is purely the promoters' misgovernance, complete corporate governance lapses, and maybe the mismanagement of their greed and need that has resulted in such kind of thing. But otherwise, if you look at that, unlike this PPA designer of Andhra, in case of this Andhra project, what I said, which has become NPA now, it is a sectoral issue and a call given by the state government. Here it is not like that. There is absolutely no problem in the sector. The company was doing fantastic. We had lended them almost 3 years back, and many of our loans have been repaid in last 3 years, and some of the loans also have been repaid in last 2 years. So typically we lended for 5 years. Normally it's the e-car loans. And since, as per our assessment and what market indicates also, fair amount of good opportunities there in that sector, that space. And not only DRT, we have also gone to NCLT. See, I want to emphasize one point. We are the first agency who could approach to NCLT and get the application admitted, get the IRP appointed. The IRP has already done the COC meeting. Hopefully by today, this COC should get meeting minutized, and IRP may get approval to become IRP. They have already started the principal working. See, this kind of thing is not quite well known in India, since e-mobility is new and emerging, and we do not have such kind of bad assets example in India. So therefore, any IRP or RP, whoever comes to take it, they will take some time. But since this business is not that complicated, running a car is not that difficult, unlike running a thermal project or XYZ project. So therefore, we are confident it is just a question of months. And as the initial indication they have given, so they are trying to bring back those cars on the road. And once it's happening, then the provisioning what we have made, we may not have to require to continue that also.
Right. You recently had a 5,000 crore rupee QIP. How are those funds being allocated?
We did not have 5,000 crore. We had 2,000 crore. So the approval from Government of India was 5% of post-issue dilution. 3.26% has been diluted, and 2,005 crore we have already raised. And it was raised at the rate of 164, 165, something like that. And despite the market is not doing well, and despite having this Gensel fiasco, which you said, and we could successfully complete our QIP tranche 1 and balance 3.76%, which is available to us for further dilution by raising fresh funds through QIP tranche 2. We are in the pipeline, and we'll be waiting for the right time, not only market condition, our requirement also. Hopefully we'll be successful in that also, and that may add around 3,000. The 5,000 figure what you said, then it will become 5,000. Yeah.
What's the priority for this fund allocation? Are you looking to scale up in particular sectors? Are you shifting towards the specificity of EV hydrogen?
We are only in one sector, that is RE, and we are king in that. We are founder of that, I should say. Many times we call ourselves that we are mother organization as far as RE financing in the country. So any equity infusion or any debt additions and all will be spending in RE only. And coming back to the composition, what I understand that you are asking the asset mix. But since the trend 2-3 years is going on like that, 50-51% is coming on traditional RE, that we need to continue in the same manner. The reason is, in vanilla RE, you have fair amount of de-risked assets. And government loans, you have completely de-risked assets so far, unless the government becomes something like the way some state government decided something. But 76% are vanilla or risk-free assets so far, what we have maintained, and same kind of trend is going to be continued. 21-22% is completely new and emerging. That we also need to continue, because there only we get fair amount of good spread and NIM, which averages out. And if you see 3.67 NIM, still we are having, despite all the competition from the new RE financer in the country, despite the competitive market. And typically in RE assets, till the construction period, the risk is there. Post commissioning, and once the COD happens and 1 year of trial run happens, by that time it is fairly de-risked, then many lenders are there.
All right, those are some of the comments coming in from Ireda. With that, we'll slip into a short break. Ruchit Jain of Motilal Oswal will join us on the other side for a technical check.
To build anything that truly lasts, it takes time. Welcome back. You're still tuned into Midcap Radar on CNBC TV 18. It's a good time to get a technical check on the markets. Ruchit Jain from Motilal Oswal Financial Services is just joining in now. For the markets, continues to be in the green, but yes, some heavyweights which are putting pressure on the gains that we have been seeing. Ruchit, good afternoon. Thank you so much for joining in. What explains the next levels that we'll be watching out for in terms of the technical aspects, and what is your individual technical pick?
Yeah, hi, very good afternoon. Well, it seems that the markets are going through some time-wise corrective phase since last 10-15 days, where the index is traded within a range while there have been more of a stock-specific momentum in the markets. Now, 25,000 to 24,000 is a very important support, being the 40-day exponential moving average for the index. And if this remains intact, we expect the sideways consolidation to continue for time being. I think there would be more of a sector rotations in the short term rather than indices showing any kind of directional move on the either side. So one space that is looking quite positive from current level, we would see the banking and the NBFC space. We have seen that selective large cap banking stocks are leading this move, and ICICI Bank within that space is one of the top pick, where last 1 or 1.5 months some time wise correction was there. The stock did not break any important support, and numbers we have seen a resumption of the uptrend over there. So I think ICICI Bank, the risk reward ratio is favorable post the recent consolidation. So short term traders can still buy with stop below 1425. We expect upside targets around 1520. And among stock specific moves, I think UPL is one stock that we are recommending to go long on, since we can see that in spite of market showing some consolidation or many of the stocks from the broader market showing some corrective phase, this is one stock which has given a breakout and it's trading around its 52-week high, that too supported by very good volumes. So it has already been a relative outperformer if you look at last 6 months move. So I think this trend is likely to continue going ahead. So UPL we are recommending to buy with stop loss below 690 for potential near-term targets around 745.
Thank you so much, Ruchir, for joining us. So ICICI Bank and UPL are the two stocks on your radar that you like as far as technical recommendation is concerned. Well, as you saw on the bottom of your screen, Mahindra Logistics just delivered their Q1 results. On a bottom line basis, it's a loss, but the core EBITDA has managed to jump up close to 18%. That stock now near the 400 rupee mark, down almost 3% in the session. With that, we'll slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Workers.
To build anything that truly lasts, it takes time.
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
How about it?
Welcome back to Mid-Cap Radar. Well, even as we stand by for some important results, Ultratech Cement is expected to deliver its results, and we expect the results will come sometime in the next couple of minutes. But Sonal, you've been tracking MRPL, that particular stock, under a bit of pressure today.
Oh yes, it's a big miss that we saw on MRPL this time around. The stock is down 7% as we speak. It was a revenue decline of 29% that came by. EBITDA was down 84% to come in at 180 crore rupees. Margins almost, actually more than halved on a quarter-on-quarter basis. Actually, we'll talk about MRPL in just a bit. Ultratech's numbers, they are flashing at the bottom of your screen. Net profit has come in at 2,226 crore rupees, which compares with a poll of 2,290 crore rupees. Largely in line, you have to say. It's a 70 crore difference that you're seeing right now. In terms of revenues, that too is a 400 crore rupee miss that we're seeing there. So it has come in at 21,200 crore rupees versus an expectation of 21,680 crore rupees. Yeah, 21,275 crore rupees. That is the revenue number. The expectation is that margins will be higher at 20.7%. We'll take a look at the margin number, calculate that EBITDA. Okay, so the EBITDA number is at 4,410 crore rupees. That is what being flashed right now. That compares with an expectation of 4,480 crore rupees. So that also looks largely in line. That would also suggest that the revenues lower than expectations, EBITDA largely in line with expectations. That would suggest that the margins would be better as well. But quickly, let's take a look at, okay, the margins are absolutely in line actually, 20.7% versus an expectation of 20.7%. In fact, we do have Nigel with us right here in the studio.
Yeah.
Nigel, what's your take?
Well, the top line miss, I think, is because the volume growth is a little bit lower. I'm looking at it, the volume growth that they've said is coming higher by 9.7%. The street actually was expecting a double-digit number on that front. So that's one important parameter to look at, that, the volume growth actually appears it's a little bit lower, though we have to keep in mind the acquisitions of India Cement and the cement business of growing with the acquisitions. Yeah, so including both of them, actually the volume growth is at around 9%. But as you said, I think the profitability, Sonal, is in line with what we were working with. So that's heartening to hear. Power and fuel costs, that's dipped. Just take a look at power and fuel cost as a standalone, as a line item. That's seen a dip both on a sequential as well as on a year-on-year basis. So despite the miss on the top line, a bit of a miss on the top line, we have the margins actually that have caught up, because input costs, they have been constantly talking about how they are focused on reducing the input costs. And on a sequential basis, that's actually seen a bit of a dip on that front as well. So the consolidated number should come up for you on the screen. Even the standalone number actually is a little bit lower. The freight and forwarding cost as well on a sequential basis has seen a bit of a dip. Let's get in Prakash Diman, and I'll have a closer look at these numbers. But it appears these numbers go down, I think, as of now, a mixed bag. Some softness actually on the top line, but I think that's because of relatively lower volumes. Prakash, what do you make of these numbers? The revenue number actually is coming a little bit lower. Your take?
So I guess there's lots that's happening in terms of assimilation with the acquired businesses that Ultratech is into. And remember, they've just got done with digesting the other acquisitions of the past. So, I think on a standalone basis, they'll probably be re-strategizing in terms of what parts of the new, aggregated business to focus on. But I think, Nigel, if you don't squibble about the volume, and this has happened after we saw JK Cement come up with some stellar volume, metrics. And that's why this is probably looking a bit weak, but it's better than, the era which we just recently saw 6 and 8% and all that. So from that, I think there's definitely an improvement, and sets the base for the company to springboard from here on into probably early teens or something in terms of volume growth and a consolidated basis. So I'm kind of okay with it. I know the market has high expectations from this name, but I find the numbers to be fairly in line. At least they managed to do the profit numbers in place because of the efficiencies on costs and all. So that's a heartening thing.
Yeah, that's right. Prakash, so you would be a buyer into this dip?
Yes, so I think if people are looking at allocating, some of these bigger names are the ones to be with, given how they will be the first of the races in terms of the sector re-rating and the entire shift in terms of utilities and all that. But, then it's of course a choice between the top 3, top 4 names. But Ultratech definitely gives you all the checks, most of the boxes that you would need for a long-term allocation to the sector.
Okay, all right, Prakash, got that. So I think these numbers on the top line is a little bit soft, which is the reason why we're seeing a bit of a dip. I think they've given actually the presentation as well has just come up, so I'll just try to pull out a few details on that front. The EBITDA per ton number, they're saying that it's higher by around, at around 1,248. This, as per their calculation, it's higher by around 337 rupees on a per ton basis. So that's an important number that should come in at. And they've also mentioned actually the Q1 numbers has been restated for Kesoram. So that's it's included actually in the base here, which is an important clarification as well that they're giving. So that's why in fact you have the volume growth at close to around 10%. Otherwise it would have been higher if it wasn't included. So they've restated the numbers for Kesoram, which is an important factor. So I think we should get the volume number up for it. And the India Cements acquisition, well, that is included as well. So I think these numbers are actually par for the course, a bit of a mixed number with regard to the top line miss and the EBITDA number a little bit better. But we have Jyoti Gupta of Nirmal Bang Institutional Equities who joins us. Jyoti, what do you make of these numbers? You could quibble at that, but when the EBITDA number comes in more or less in line, a little bit better, you'll have to say that these numbers are pretty okay.
Yeah, I mean, see, I anticipated, so if you look at my preview numbers, I've taken a console level of 9.6% YOY, and if you take India Cements number, then it goes to 18.7%. My beta is slightly higher by, to 1248. And why these numbers are slight disappointment? Because of the Orissa market, why, the overall market has declined almost like 12% in FY25, and Q1 was again a washout by almost like a decline of 18%. So I think Ultratech has, the share there, they do sell a decent amount in, so it has an impact on Ultratech's on the overall numbers. So I quite well anticipated, so not surprised, but yeah, going forward, the numbers should be in line with what I'm expecting.
Okay, all right. So you're pretty satisfied with these numbers, Jyoti. Thanks a lot for joining and giving us that quick comment. So guys, just to clarify, the volume growth is around 9.7%. Jeffries, for one, they had put out a note, but they said that, if Kesoram is not in the base year, then the volume growth will be 16%. But if it's in the base year, they're working with 11%. It's come at around 10%, so you don't really have to quibble on that. And they're clearly focusing on the operating performance. So that's why, in fact, we have, we have the EBITDA number more or less in line. I think we should remove that flash which states that it's at 9.7% that compares with mid-teens, because now Kesoram has been included in the base year. So we'll just keep it at the volume growth at around 9.7%. Very, very low in comparison to a Jeffries estimate, which was at around 11%. Okay numbers.
Got that point, and that explains the recovery. After the stock fell, it recovered as well after the clarification that we got on volume growth. Thank you so much, Nigel, for joining in. And thank you to the guests as well for analyzing those numbers for us. With that, we'll take your leave on this edition of Midcap Radar. Stay tuned, your stocks when we return.
Banks into their businesses from top Indian honchos before putting your money. To build anything that truly lasts, it takes time.
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
Hello, good afternoon. You've tuned into Your Stocks coming live from the CNBC TV 18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. Now, a quick look at what the market is doing, right? Market is managing to hold on to the gains that we've seen coming in. As of now, Nifty is just holding on to that 25,000 mark of the day's highest point, but nonetheless, 0.1% of gain is what the Nifty is managing to hold on to. Nifty Bank, that's what's pulling up the market, right? So ICICI Bank, HDFC Bank, Kotak Bank, all these private banks are managing to hold on to gains and overall supporting the markets in terms of its up move in today's trading session. Now, let's not forget that what you're looking out for right now is in terms of the mid and small cap. That also is managing to do decently well in today's trading session. You know, not much in terms of an outperformance there, but at least largely the mid cap is doing better than the Nifty. But the small cap, that's a bit of an underperformance. So yes, advance decline ratio as of now is almost equal, slightly bit more in the favor of declines versus advances is the current situation as of now. But yes, that's what the market setup is looking like so far. We'll watch out for the next half of the trading session as well. In the next couple of hours, what's going to be happening to the markets will be key to watch out for. But this is a show where we solve all your stock-related queries, and to do just that, we have Ashish Gyal, market technician and author of Wave Strategy Advisors, as well as independent market expert Shaina Mukaddam joining in with us to answer all your stock-related queries. So Shaina as well as Ashish, good afternoon and thank you so much for joining in with us. Let me get started with those stock-related queries coming in, and this first query for today is coming from Sundar Rawat, who is writing to us from New Delhi. Now, he is holding 150 shares of BSE. But before I, come to that query, I think we have some important flashes coming in. Now, IndusInd Bank is saying to CNBC TV 18 that they are firmly denying reports of RBI asking to expand CEO search. Now, that's the latest update. Right now, we're seeing IndusInd Bank that is down in trade as well. So this is the latest update that we have coming in here. Keep an eye out on this one. They're firmly denying reports of RBI asking to expand the CEO search. The appointment of the new MD and CEO, including seeking relevant approvals, is still in the process. So keep an eye out on that. The process is still on, is what IndusInd Bank has told so far in terms of the word that is coming to CNBC TV 18. So that will be important to watch out for. The bank will continue to make necessary disclosures as required under the law at an appropriate stage. Important updates coming in there from IndusInd Bank. Keep an eye out on this one. As of now, the stock has seen a mild uptick from the day's lowest point. Bit of an uptick furthermore in the last few minutes as well is what we could watch out for right now. But yes, that's IndusInd Bank that we'll be keeping an eye out on as well. But let's get started with those queries then. So I was talking about the first query for today that's coming from Sundar Rawat, who's writing to us from New Delhi. He's holding 150 shares of BSE. The average price is 791 rupees per share. Long-term story, how does the stock still look for this one? Shaina, BSE, these names have done very well, the capital market names, and specifically BSE as well. What are we watching out for furthermore? Should they continue to hold this for the long term or maybe book out some bit of a profit?
Well, see, I've also been holding it for a very long time. And while I have booked part profits, so I don't say that, I don't say that you shouldn't at any point in time, but I would continue holding a lot of the portion for the longer term. Couple of issues, the recent one being that Jain Securities has been allowed to again, trade on the markets. Basically, there was a halt put on them by SEBI. But now that they have deposited the escrow amount, I believe from today they have been given permission to restart operations. We'll have to see how that goes in the longer term. They will have to be, the investigation will still be on, so we'll have to see. Other than that, on fundamental basis, you have NSDL, you have NSE. These are the issues that will be traded on only BSE, at least for some time post-listing. So I think to that extent, those are the positives. Valuation, shorter term, very short term, yeah, it may look a bit expensive. But if you look at the longer term, like, 1 year down the line, it's about 25 times P. I don't think that's too expensive. So I would say continue to hold. If you need some money or if you want to book some short-term profits, you can, but otherwise you can hold for the longer term.
Okay, you can continue to hold for the longer term coming in for BSE. That's the view on the fundamental front. Ashish, your view for BSE as well. Is it similar? Should the viewer continue to hold it?
First of all, I would like to congratulate the viewer because he's holding from 791. It's not very often we see the retail participants holding the stock all the way for a multi-bagger kind of a thing. It's nearly 3 times from there. And as of now, there are no signs of the reversal in the medium to long-term trend. So there is short-term correction that we saw from 3,000 levels. The stock made a low of around 2,400, but I think that's temporary, and the overall outlook still remain bullish. My suggestion would be continue to hold. There is no time to worry here, and we can expect the stock to reach towards the level of 3,200 again on the upside. On the downside, one can maintain a stop loss, which is going to be around 2,200 levels. So the undertone is still a buy on dips for the stock.
Okay, buy on dip still for the stock as well. So interesting strategy there. Continue to hold for the long term. That's a view for BSE overall. Let's move on to the next query for today. Sandeep is writing to us from Pune. He's holding 300 shares of Bajaj Housing Finance, and this is at a price of 182 rupees per share, and 25 shares of Trent, and this is at a price of 6,700 rupees per share. So overall for this one right now, in both the stocks, they're making some bit of a loss. Wants to know the long-term strategy that comes into play for Bajaj Housing Finance as well as for Trent. Shaina, your view, Trent and Bajaj Housing Finance, what should they be doing now? And Trent is one of those names, where they bought it at those higher levels. Normally, you've seen people make a lot of profit on Trent already over the last few years. So now what should they do?
Yeah, unfortunately, both these stocks are good quality stocks, but the valuations are very high. So if you look at Bajaj Housing Finance, for example, it is 5 times price to book, which is much more expensive than the rest in the category. Similar story for Trent. What I would say is that while both these stocks are doing well, Bajaj Housing in terms of growth, they are showing 25% growth. 2 days down the line, they are the results for the first quarter. I think the 25% growth is likely to sustain because they have raised funds and this will fuel their growth. But at the same time, I would say that it's better to switch. There are cheaper stocks available in the housing finance of equally good quality. Trent also similar story. The Zudio is impacting the margins. Valuations are a bit high. So if you want to add or average, better to average it at least 10% lower from current levels. Or, if you're holding for the long term, then yeah, these two stocks, you can continue to hold. But I would suggest a switch from both if you're looking at shorter to medium term.
Okay, that's a view there, but on the fundamentals. But Ashish, Trent for you as well, and Bajaj Housing Finance also, anything that you are looking at over there right now? I know not much there, but what is your view?
Exactly, because if you look at Bajaj Housing Finance, I think the stock has just moved in a range of 128, 129 levels on the upside, and on the downside, the lower end of the range is around 116. That's a very narrow range within which it has been moving since I think nearly May onwards, and as of now, there is no directional move. So my suggestion would be continue to hold as of now, keeping 116 as a stop loss on the downside for Bajaj Housing Finance. And in case the stocks manages to break that level of around 128, 129, we can expect a good upside move from there on. For now, there is no, it's a no trading zone from investment. Continue to hold for now with the stop loss given. And as far as Trent is concerned, we saw a very big gap down on 4th of July, post which the stock is consolidating. The time horizon has to be extended at least for more than a year if you want any kind of a positive outlook on this stock. And we can expect a range bound movement between 5,800 and 5,200 levels. So that's the range within which I think the stock can move. As of now, continue to hold, maintain a stop loss of 5,200. If the stock breaks that level, then better to be exit from here.
Okay, that's a view coming in there for Trent and Bajaj Housing Finance. Let's move on to the next query for today. We have Abhishek who's writing to us from Kolhapur. He is holding 108 shares of Dreamfolks. It's at a price of 234 rupees per share. Wants to know whether he should continue to hold this one or exit the stock. Dreamfolks, your view coming in for this one, Shaina. Obviously, we've seen those recent issues that came in for the company as well. And in the last 1 month itself, the stock is down 32%. What should the viewer do?
Yeah, unfortunately, even after the sharp correction, I would still say fundamentally it's better to exit, look for some other story. Basically, they are facing increased competition from Adani itself, Adani on the airports, and that is their major bread and butter. And they have lost some of their key clients starting from July. Some like I believe ICICI Bank, Axis Bank. So and there is like a pressure on their margins. So, it's better to switch.
Okay, you would say a switch. And Dream folks, on the technical front, Ashish, for you as well?
Very similar view, because the stock started correcting from 300 levels in the month of May. It's already 150 to 50% cut in just 2 or less than 3 months of time. It's not a very, very good sign. So it's best to be out from here. It is already breaking the prior day and prior week's low also in today's session. So best to be out from here and look out for alternatives, possibly in the space of maybe something in an automobile or a banking space, something like an ICICI Bank, and from automobile sector, maybe Mahindra & Mahindra. It's better to be diversifying into that space.
Okay, that's a view coming in there for Dream folks on the fundamentals and technical front. But IndusInd Bank, like I was talking about that one as well. Now, IndusInd Bank, in a response to CNBC TV 18, has denied reports of expanding its CEO search. Ritu is joining in with us to give us more details on this one. Ritu, after we actually flashed this on the screens, we've seen a bit of a spike up that came in for the stock as well from the day's lowest point. What does this mean? What is it entailing, and what is the clarification we have gotten here now?
Well, Winnie, in summary, IndusInd Bank is really reiterating that the CEO selection process remains on track. There were some concerns this morning because there were certain reports that have suggested that the RBI had asked IndusInd Bank's board to expand the CEO search because there was some concern or some hesitation on the part of some of the so-called shortlisted candidates in taking up the assignment, and therefore RBI had, according to this report, asked the board to also look at additional candidates, including public sector bankers and even bankers of Indian origin who are working abroad. However, IndusInd Bank has now come out in a clear, statement to us where it has said these reports are false and they're speculative. It is said that the appointment of a new MD and CEO, including seeking the relevant approvals, indicating approvals from RBI, remains in process, and the bank will make, disclosures at an appropriate stage. Keep in mind, in the last week of June, that is when the RBI given deadline for the bank to submit CEO names really was. That is when we were the first to report that there were 3 names that had been submitted to the Reserve Bank of India, including Rajiv Anand from Axis Bank, Rahul Shukla from HDFC Bank, and Anup Saha of Bajaj Finance. We've been given to understand these 3 names which were submitted by the board remain under RBI's consideration, and the approval on one of these candidates is expected in the coming few weeks. Remember, we had also reported that the RBI is going to expedite the CEO name approval process simply because of the unique situation that IndusInd Bank currently is in, where it doesn't really have a CEO. The deputy CEO also resigned along with Sumant Katpalia, and the bank is currently being run by a committee which is being guided by the board in turn. So RBI also wants to expedite, of course, the appointment of a new CEO, and these 3 names remain under consideration, with IndusInd Bank really saying that reports saying otherwise are false.
Okay, Ritu, thank you so much for that update coming in here. That's a word coming in from IndusInd Bank to CNBC TV 18, and obviously the appointment of ND and CEO, the process is still on. There's nothing of an issue on that front coming in there. So you'll wait out for more details coming in on that front. But on that note, we're going to step into a very short break. We'll come back with more queries on the other side. Welcome back to your stocks on CNBC TV 18. Let's keep it going with all your stock-related queries, and we still have our experts Ashish Gyal as well as Shaina Mukaddam. Let's move on to the next query for today. We have Girish Kumar, who's writing to us from Dubai. He's holding 100 shares of MRF, and this is at a price of 1,07,915 rupees per share. So he wants to know the outlook for the stock. Should he continue to hold or exit? MRF, what's your view coming in on this one, Shaina?
Yeah, he should continue to hold in my view, because we've seen a sharp correction in rubber prices in the last 3 months. In line with that, of course, the price of MRF has also started moving up. But I believe that the balance sheet is very strong. Valuation's not too expensive. EV by EBITDA 10 times FY27, price to book about 2 times. So he can continue to hold even at current levels.
Continue to hold even at current levels, that's over there. And Ashish, your view coming in for MRF?
See, it's not very often we get a question on MRF.
Yeah.
That the stock is trading at around 1,48,000 levels, no split even up. So the overall trend for the stock still remains positive. I think there is a possibility the entire auto ancillary and the tire space, I think, is doing very well. If you look at C8, if you look at MRF, if you look at other stocks also, I think MRF has continued to outperform. We can expect the stock to reach towards the level of around 1,65,000 also on the upside. And on the downside, the support for the stock is going to be around 1,40,000. So hold on over here. The medium to long-term outlook remains strong, and I think the auto sales will also start picking up eventually, given the lower interest rate scenario, which will also help the auto ancillary stocks to outperform from here on.
Okay, that's a word coming in there for MRF. Let's move on to the next query for today. Unicommerce, that's the next stock we'll talk about. Sumit Ghosh is writing to us from Noida. He's holding 500 shares of Unicommerce e-Solutions. Price is 210 rupees, making a loss on this one. Wants to know if he should continue to hold or just book his losses and get out of the stock. Shaina, what's your view coming in for Unicommerce? Because I don't think, like, in terms of overall returns also, it's managed to give anything to investors since its listing. You know, post that we've seen those ups and downs, and more of downs that has actually come in for the stock since listing.
Yeah, you're right, Vinny. Actually, but now it has been consolidating after having given up most of its, listing gains. But if you see, I think this is a concept stock. So even while valuations even today are expensive, the space in which it's operating, I think that potential is huge. They're SaaS platform for e-commerce companies, and there I believe the opportunity is large. It's a small cap company, just about 1,350 crores type of market cap. So these type of companies, I would say you should continue to hold for the long term.
Okay, continue to hold for the long term. And also, Shaina, would you say then averaging makes sense right now? Because the price is much lower than what they bought it at. Right now, it's just at 127. They bought it at 210. Then would averaging be a good bet?
Yeah, if you have a long-term perspective, I would say averaging would make sense. But then you really have to hold it for the long term.
Okay, then you have to be committed to holding it for the long term there if you just start averaging out. But Ashish, your view coming in on the stock as well. What should the viewer do now?
See, the stock corrected from the levels of 250, made a low of 100, and it has been consolidating in a zone. On the downside, the support for the stock is around 117, and on the upside, it has failed to break above that 145 mark. So that's the range within which it is consolidating. But yes, the downside momentum has reduced. I think eventually the stock should reverse back on the upside, and one can average it here, maintain a stop loss of 117 if you are looking at from a short-term support perspective. And above that level of 145, if the stock manages to break, we can expect a good upside momentum towards 175 levels. So trade on the basis of these levels.
Okay, keep an eye out on those levels over there for Unicommerce. But let's move on to the next query for today. Dhruv is writing to us from Ahmedabad. He wants to know the long-term view for 3 to 5 years. This is long-term what he's talking about for DAM Capital. Should he look at making an investment here? Shaina, your view?
I think he should wait for 2 days. Wednesday is the results for the Q1. Actually, what has happened is that if you see 2 years, not much history in terms of financials that we have. Yeah. Still, if you see 2 years, there was a good growth, good numbers. But post the listing, which is recent listing, actually first quarter numbers of March were very disappointing. So I think you better wait, see what the management commentary is, and then look to invest. So wait for now.
Wait for now is the word coming in there. And Ashish, your view, I know there's not much history in terms of charts or anything, but what was your suggestion? Because it's a long-term investment query.
See, if you look at the charts, I think the stock is filled to move on the upside. It's breaking the previous low made in the month of on 19th of June. Also, it's just about to break that. It's better to be out from the stock here, and maybe something like an AB Capital looks much more promising, given that the stock has a good history, has shown a very strong rise as well, and an impulsive move on the upside. So, I would suggest to be out from DAM Capital. Park somewhere, something like an AB Capital, that makes more sense.
Okay, that would make more sense for you right now. That's a word coming in on the technical front. But that was the last query for today. So Ashish as well as Shaina, thank you so much for joining in with us as always, helping our viewers solve all their stock related queries. And viewers, as we're going to wind down this edition, you have the numbers of IDBI Bank that are flashing at the bottom of your screens. So wait out for there. That seems like NI is down 2%. Net profits have seen a bit of an increase. We'll wait out for the asset quality. What's that on that front? Will be coming in closing bell, which is up next to take you through the last hour of trade, so don't go anywhere.
Internationally, along.
To build anything that truly lasts, it takes time.
market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
So while we're seeing Taiwan index that's down 0.3%, we're seeing Hang Seng that's trading with an uptick of around 0.5%.
Which had raised some red flags about Axis Bank's asset classification practices.
56,000 odd levels, 56,000, 56,030 or so.
Investec says that the JV with JNT will provide exposure to the largest EV market.
24,986, 24,970 opening up this morning.
Equity predictability is always low, not just on a one-year basis, but sometimes even on a 5-year basis.
The tariff uncertainties have also caused trade flows to get diverted.
Also decided to increase our secured book mix.
कि राजनीतिक दलों से भी कहूंगा कि देश ने एकता की ताकत देखी है.
100-point uptick on the Nifty is what we are witnessing right now.
All of the indices in the green, and that is something to start the week off on a positive note.
Well, that is the day so far, and the last hour coming up here on the show. We are coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi, Rima here in the studios. Nigel is joining us from the newsroom floor. Guys, good afternoon.
Hi, good afternoon, folks. And it's not looking bad at all, right? I mean, at one point in time, the Nifty had given up 24,900 as well. So it's a nice 150-point recovery from the lowest levels of the day. And we've got some green.
We have some green, definitely. Surabhi, before we take it any further, let me just quickly run our viewers through the top 5 or 6 names which are coming up here on the program. And then we'll sort of talk a little bit of markets before we get our guests in, right? So this is what you will hear about. We'll talk about CET. There is a downgrade, and we'll address that with Sudarshan in just a bit from now. Results came, I think, on Friday, but the cut is coming in today. The big move is coming today. Banking stocks are in focus after a slew of earnings over the weekend. HDFC, ICICI are up about 1.5% to 2.5% in that range, while the smaller financials like AU Small Finance Bank, L&T Finance are also reacting. So Gaurav will help us with that as we go along. Refiners, Nigel is putting the spotlight on MRPL and Chennai Petro, both in focus as global refining capacity tightens. I mean, is there a bit of a move here which could develop? Ultratech reported numbers about 30 minutes back, and we'll get some more details. They seem to be bang in line with consensus expectations. We'll have more on that. We, of course, also take a look at some earnings expected later. Eternal will report today. Ultratech is already out of the way, and I think we've got 1 or 2 more, but that's largely the stack up as far as earnings previews are concerned. So that's the lineup. Now, the market is barely holding above the previous low, which is 25,000. I mean, of course, we've broken that and we've sort of gone below it. The last low was 25,001. And we are trading around there. I mean, is it absolute clarity that this is it and the market perhaps starts to do better and better? I think that we don't have yet. The other big talking point, which may one fine morning you'll come in and you'll have something about the India-US trade deal. So that very much is perhaps on the table, as well as a interesting and important possibility if it were to happen, which is about 2 weeks to go to the 1st of August deadline. Otherwise, I mean, it's all about single stocks. It's all about specific earnings with some buzz, with some chatter, which we will cover with Nimesh in a bit from now. Prima.
Well, on the way up, it's the 2 banking heavyweights. So ICICI Bank, HDFC Bank are gaining. Eternal is your top Nifty gainer ahead of numbers. So that's up about 3.25%. So your top 3 Nifty gainers today, leading is Eternal, followed by an ICICI Bank and an HDFC Bank. So that's on the positive side. But on the flip side, what's counterbalancing this is the weakness in Reliance Industries. Reliance Industries had hit a fresh 52-week high earlier this month on 9th of July. The high on Reliance Industries was 1,551, and from there we've seen the stock correct close to about 8%. Well, the numbers were fine, but as analysts pointed out, in the last 3 months, the stock had gained close to about 20-25%. So a lot of optimism was built into the price, and therefore it's retracing a bit. So Reliance is weak, IT is on the back foot. You've got cuts in Wipro, HCL Tech, TCS, and then 2 of the FMCG giants, HUL and ITC, are in the red. Not by a whole lot, but it's a red tick.
That's right. I mean, we don't have too much of the large FMCG names supporting the screen today. And the other thing is that, yes, while there was a recovery from the early morning opening lows, the market has not been able to really push through or build on any kind of momentum in a meaningful way. Having said that, let's not forget there are still plenty of gainers out there. The mid-cap index is outperforming the large-cap screen. And we'll talk about that as we go forward. Stocks like L&T Finance, stocks like Hudson Agros, many of these are actually result reactions. And look at Tilak Nagar Industries, up 10%. What a move for Monday, Nigel. Tilak Nagar.
Well, indeed, should be a big move out there. But, the price action today is encouraging that we have recovered from the lows of the day, but the markets are not out of the woods. You'll get greater confidence if you can make a higher high. So if you can get, 100-point rally from here on before the time we wind up, 25,150 is the important level we'll be looking at. Let's see whether or not for the time being, it's pretty okay on the Nifty. On the Nifty Bank, it's encouraging because it protected the 50 DMA. And as we speak, we're packed at around the 20 DMA as well. Let's get in Mitesh Thakkar back on the show. Mitesh, price action, was pretty okay on the Nifty. The Nifty Bank, though, that's encouraging. Comment on both these two?
So, I spoke about this in the morning that you kind of have managed to hold on to 24,900, bounce back from there. So maybe will not decline much. And the reason is Nifty Bank, as you rightly pointed out. The Bank Nifty has managed to bounce back very strongly with ICICI Bank and to a certain extent HDFC Bank, contributing on the upside. For the Nifty, the counters are same, 24,900 and then 220 to about 25,250. But what could be interesting is the Bank Nifty. Bank Nifty, if it sustains about 56,700, 600 zones, then you might see some more upside to about 57,200 to about 57,250 zones. So I think there's mild upside left in the Bank Nifty, and ICICI Bank could be interesting over here. I in fact have that as a trading recommendation, just trying to get past the earlier highs of 1460 to 1465. So I would say if it starts closing about 1470 today, buy with a stop at about 1455, 54 and look for a 300 plus kind of a target over there to begin with. And that about, I think, the cement stocks have very well to me, and we had Dalmia Bharat earlier in the day. Ramco Cement has given a pullback, so Ramco Cement is something which I would want to have a look at. Try to buy with a stop below levels of 1135, look for targets of 1185.
Okay, ICICI Bank and Ramco Cement. All right, let's talk about SIAT. Mitesh, do stay on. Sudarshan is now joining in. So SIAT is under pressure because Nomura has downgraded the stock. So what is it that they didn't like? Sudarshan joins in with the details.
So ahead of its earnings on July 17th, company had given, the stock basically had given returns of almost 30% in last 3 months. But after the earnings, there has been a sharp fall in the stock, and now it's down almost 10% in last 2 sessions. So why, and if you talk about the earnings of Q1, so earnings were largely lower than expectations. Gross margin had seen a sharp decline. It was down 250 basis points year on year, and even down 70 basis points on a sequential basis. And that was mainly because an increase in input cost against management's expectation was of flat input cost on a sequential basis. Now Nomura has come out with a note today. It has downgraded the stock to neutral from buy, and target price is cut to 3,906 from 3,945 per share. Now what's the reasons behind the downgrade? First, Nomura believes that Camso value accretion may be lower than its expectations. Why it is so? Because it's saying that Camso was acquired with a revenue of $213 million in 2023. But with a sharp drop in the revenue, it believes that EV EBITDA of 10x might be expensive. Second, US has imposed tariff that would be effective August 1 on Sri Lanka, and the tariff rate is 30%. What it will do, it will delay the Camso's recovery. That will have an impact on SIAT's revenue. Second, input cost concerns. As I've told you that management was expecting that input cost might be largely flat on a sequential basis in Q1, but it has increased. Now Nomura is saying that if recent rise in input costs sustains, it might have an impact on SIAT's earnings, and that's the reason it has decreased in EBITDA estimates by 9% for FY26 and 5% for FY27. Also, it has cut EPS estimates by 16% and 6% for FY26 and 27 respectively. As far as the valuations are concerned, it's currently trading at 7.8 times FY27 EV to EBITDA, and Nomura finds that it's a fair value, and that's the reason it has downgraded the stock.
Sud, thank you very much for that. So that is C8 for you. Mitesh, technically, what's the price action telling you?
See, last few weeks, tire stocks have gained, but today I think there is a negative breakdown on the charts of CN. It made a low of 3,500, closing low of 3,500 in June, 23rd of June, and then rallied from there and has come back to that level today. We got a low of 3,524. So this 3,500 is a good pivot for the stock, but if it breaks that, and there's a chance of that on a closing basis, I think I would expect another 200 points on the downside.
Okay. That's CAT definitely under pressure and cooling off very, very rapidly after a equally sharp build-up. 2,400 in March when all the tariff mayhem was playing out, just around that time. And since then rallied very sharply. Anyway, now let's talk about financials because that's been the other big headline of the day. And it's very clear. If you're looking at stocks like HDFC Bank and ICICI Bank, that's where the numbers have been in line with estimates. That's where the buying is happening. And if you're looking at tier 2 financials, it's been not a very clear picture. It's muddled picture, one parameter up, other parameter down, and which is why the market is a little circumspect on names like AU Small Finance and RBL Bank. So tier 2 financials largely are under pressure. Let's bring in Gaurav to parse through all the major financial earnings and how the market has interpreted them. Gaurav.
Well, when we talk about major financial earnings, let's talk about some stocks which are really creating an impact in the market today. First, let's talk about ICICI Bank. When it comes to numbers, growth has been higher than what the street is expecting. So net interest income increased almost by 11% on a year-on-year basis. We saw PPOP, which is pre-provisional operating profit, growing at around 17%. And as a result, profitability also increased almost by 15% on a year-on-year basis. What remained as a key positive thing is that net interest margins actually declined only by 7 basis points versus the expectation of the decline of around 18 basis points. There was some change in the accounting practices, and as a result, management also suggested that the net interest margin fall has been in the range of 4 to 6 basis points only. Going ahead, they also said that the cost of funds will start easing and keep easing even in the quarters going ahead. So definitely a positive commentary which is also supporting the stock price. On the other hand, we saw stock like AU Small Finance Bank actually struggling in trade today, and the reason being that when it comes to the margin and the overall credit cost guidance, now AU Small Finance Bank has increased their credit cost guidance from 85 basis point to 100 basis point for the year. And the reason being that they said that the recovery in MFI is actually weak in this quarter specifically, and going ahead as well, they believe that the credit cost specifically in the MFI segment can go as high as 5%, which was earlier guided at 3 to 4%. Now, let's also not forget that management has said that in Q2 we will see the peak of MFI and the credit cost cycle. So definitely that is something which is relieving. But another factor to consider here is that the net interest margin fall was at around 40 basis points on a sequential basis. So that was also something which is hurting the sentiments of investors right now. Let's also not forget about L&T Finance. Now, this stock is also shining in trade today, we could say. And the reason being that when we look at the profitability, we actually saw a little bit of positive surprise in terms of profitability, and that was because of the lower provisions. So let's understand the numbers first. First of all, the loan book growth was actually strong at around 15% on a year-on-year basis. Specifically about the retail loan book, that increased at around 18%. So companies moving towards their retailization portfolio, which they had promised earlier. Other than that, when we talk about provisions, that have gone down, and as a result, profitability was actually up almost by 10% on a sequential basis. Now, they have used their provisions, the macro prudential provisions for 300 crores. But other than that, the commentary also remained very positive. Net interest margins are again in line with what they had guided earlier. Credit cost is coming down at around 2.23%. Net stage 3 assets, they are also in line with what they had guided earlier, and as a result, we are seeing some positive sentimental impact in the stock price. As we speak, the stock is up more than 2%.
Thank you very much for that. Well explained. In fact, let's listen in to the management commentary of L&T Finance. Realization and loan growth remains a tailwind, for optimism according to analysts. Here out Sudipta Roy, Managing Director and CEO at the company.
The objective of the management to be as prudent as possible and to use as little of that as possible. And I do believe that the guidance on the credit cost that we have given, I do believe that we will be able to test those marks without sort of support on any macroprudential provisions in Q4 of this year. Because by that time, I expect sort of the asset quality headwinds which had appeared in the microfinance segment and to a certain extent in the two-wheeler and the unsecured asset segments to completely dissipate by then. The gold loans business that we acquired from Paul Merchants, actually we'll be setting up about 150 to 175 branches in the remaining part of new branches in the remaining part of the year. So our gold loans business also will grow strongly. So overall, yes, we continue to guide toward that 20 to 25% AUM growth for the rest of the year. And in terms of ROAs, probably by Q4, we should test near 2.8%. However, that remains also to see how the credit quality pans out, which are very hopeful right now.
Well, that's a couple of major earnings that have been in focus, especially on the financials front. We have Sudeep Bandyopadhyay joining in to take us through the next leg of trade. Sudeep, thanks for joining in. So, that'll be my first question. And I remember we've been discussing this for a while. The market's expectation was running far higher from tier 2 financials, that they will show the growth, there will be turnaround stories, whether it's RBL or AU, etc. But Q1 numbers, small hiccups here and there. Would you still be a buyer of tier 2 financials? If yes, which stocks?
Very selectively, Surabhi. I think, of course, the ICICI HDFC numbers were pretty good and NIM was better than expected. But when you look at the tier 2, I think the credit cost issue is still bothering most of them. And the unsecured lending book, which all these guys had, and unfortunately, the tier 2 banks had a higher proportion of unsecured book compared to the larger players as a proportion of their overall book. And the unsecured book is taking a hit. We know there are challenges there, and the challenges are not yet over. Whether they get over in the second quarter or third quarter, or the whole year continues with this kind of pressure is anybody's guess, and different opinions are around that. But having said that, I think some of the tier 2 financial institutions have also come up with good set of numbers. CSB, for that matter, is one bank where I did like the business update which they came up with, and I will carefully watch what kind of numbers and what kind of projections they come up with. Similarly, there are other some other City Union Bank, I think I do like. But as I'm saying, you have to be extremely selective in tier 2, tier 3 kind of banks and NBFCs.
Okay, all right. Sudeep, I wanted your view on refiners, MRPL as well as CPCL. I'll tell you why. Because refining capacity globally, well, it's in a bit of a short supply, which could probably throw up a refining opportunity just in the near term, in the next 2 quarters or so. And hence the core refiners will be in focus, which I mentioned as MRPL and CPCL. But before we explain the thesis to you and what's going on, let's explain to you the risk first. It's a sunset sector. So re-rating may not happen, and GRMs, they're very volatile. So earnings projections as well are rather tricky. That said, MRPL results were weak, but that was because of 2 factors. Shutdown, which impacted the refinery throughput, which came down by close to 24%. And inventory losses as well, which were reported. That's what led to GRMs declining. The question is, can Chennai Petro do relatively better? Let's state a few reasons out. Because there's no major shutdown, right, for CPCL in Q1 FY26. So the volume parameter will do relative outperformance. Secondly, the GRMs, well, they'll be hit by inventory losses, like it was the case with MRPL. But there was no shutdown, which will cushion the hit, as CPCL has been focusing on the reduction in fuel and loss, which has come down from around 10.7% to around 8.5%. Now, analysts estimate that could be a few hundred crores that's been getting added on an annual basis. That's on the profit before tax parameter. So the operational efficiency is something that they've been looking at. Next up, the share of diesel in the refining mix for CPCL, it's at more than 50%. Remember, diesel cracks, well, they're higher than petrol cracks. So in that parameter as well, they're relatively cushioned. And on the valuation parameter, if you look at it, CPCL is trading at a discount to MRPL. So, and on the replacement cost basis as well, it's trading at a bit of a discount. So valuations give some comfort. And the other factors we need to track from here, if it's actually going to be so good for them, then the dividend payout will be important. Last couple of years, they've paid out close to 30-35% of FY24 as well as FY25. And interest costs have come down sharply. Last year on an annual basis, it was around 245 crores. A few years ago, it was more than 410 crores. So sharp reduction in net debt as well we have seen. So I'll keep an eye on both these two in case things are going to be so good. Debt reduction as well as dividend payout. So there is always a risk with regard to refiners because the GRMs are very, very volatile. But in the near term, the next couple of quarters, particularly Q2, could look up for both these two names. For the time being, MRPL's numbers are disappointing, but the street seems to have bought into the dip on CPCL. Sudeep, it's a tricky subject, GRMs. What's your view on on this space? Too tricky, or do you think as a tactical play you like to participate?
Well, I think, I'll tell you the basic thing which, foxes everybody is that the GRM and the volatility of the GRM. And look, our view is that, if a unit has a capacity to process multiple grades of crude, I think that gives them much more flexibility in maintaining and enhancing the GRM vis-a-vis the standard GRM. So in case of, even in this case between MRPL and Chennai Petro, I think Chennai Petro has a larger flexibility with diesel being about 50% of what they are doing. They are in a better position, and I continue to maintain my view that the guys with a more flexibility will be the winners, will be better positioned. And of course, I do like Reliance because they have to a great extent that capability of using multiple grades of crude and processing the same. So they are always trying to better the GRM compared to the Singapore numbers which they come, and they almost always come up with better set of numbers. So yes, I can look at tactically some of these players, and definitely between the two, Chennai Petro does look better. Of course, on the valuation front as well, it does look interesting.
Okay, all right. So the refiners looking good.
Maybe there's a flash at the bottom of the screen.
Tilak Nagar Industries.
It's come off sharply.
The stock was roaring 10% when we started the show. And now this regulatory issue obviously is hitting hard, and this is coming in from the Informist. Alleged liquor scam. We'll of course be reaching out to the company. I'm sure our guest team has already done that, and we'll try and get
it's not a completely new story, Surabhi. The basic story essentially is that when the last government in the state was there, the allegation goes that the company, not just this company but others also, a bunch got gained unfavorably at the expense of others. That is the basic story under the last government. So this has been going on. I remember asking them on the air whether they've received something from the police or something from the government, etc. So, but this has now come out again. This is from the Informers. So we'll, that's the one. Police allege that the company paid some 200 crores, etc., etc. So we'll have to wait, and we'll come back on this particular story as we go along. I think it's still up 10%, right?
It just showed up 4.5%. Now it's up 10%.
I think it's
again. Maybe we'll do a tick by tick on this a little later.
Did it just move up?
Yeah, even I saw 10.5% when we started, then 4.5%. Now again about 10%. So I'll get more on this in just a bit.
But this is not, all I'm saying is it's not new.
This has been ongoing.
This has been ongoing, and this has been around for, the information has been around for a while. Yeah.
So there's a difference between the, I think the rates we're getting on the different exchanges, NSE rate and BSE rate. And therefore, this is very large variance between the two exchanges. We'll again go back and just do a technical check on this and come back. But in the meantime, Sudeep, otherwise, Alcobev as a space has been doing very well. And with a lot of these FTAs getting signed, there's just a lot going on. Look at a stock like Radico. It's just been such a huge wealth creator over the last several years, right? I don't know if you like the Tilak Nagar AFS, just give your overall sense on the company if you can. Any advice to investors who are looking out at the Alcobev space?
Definitely, it's a good space to be in, and with all these FTAs getting signed, there is definitely long-term benefit. Though I heard the Radico management on your channel sometime back when UK FTA was signed, they definitely were looking very positive. Their views were very positive. I'm not sure how to quantify the benefit at this stage till the T's are crossed and I's are dotted, but definitely they will benefit, and it's a good thing for this. So Radico Khaitan has been our favorite for quite some time, and we maintain our positive view there. Of course, the valuation is not cheap, and you have to, if you're buying now, you have to be prepared to be in the stock for a 1 year plus kind of time horizon. Some of the other names, including Tilak Nagar, also we have been examining. I think this Andhra Telangana, there are too much of confusion and too many issues surrounding the entire liquor distribution. We know the government was holding on to payments which and some of the large players stopped supply in some of these states. So there was a lot of confusion. So companies having significant exposure in these southern states, we are generally a little careful. So I will rather go with a Radico than a Tilak Nagar.
Okay, by the way, just checking the proper rate. Now on both exchanges, what's reflecting is what you're seeing on your screen, which is about a 5% gain on Tilak Nagar. Got that. Thanks very much, Sudeep, for all the advice there. We do have to take a quick break on that note. Come back on the other side and we'll have Atul Mehra of Motilal Oswal AMC joining in with some thoughts.
To build anything that truly lasts,
and we've spoken about the usual suspects, but the ones that are not, one of them being K-Solves India, and that is now down almost 13% in response to its results. The margins took a bit of a hit this time around, and the fall is interesting because this 13% fall was preceded by a 14% gain in the 3 sessions before today's drop, and the drop today also comes on the back of very significant volumes, where the 25 lakh shares have been traded in the 3 prior sessions, and that comes on the back of a 20-day average of just 1 lakh shares. So it shows the kind of volumes with which the stock has dropped in today's session. And the other one, and most of the earnings reactions today have been on the negative side, and Newgen Software is the other one that just keeps continuing to get pummeled after the earnings it reported last week, down another 5% today. Third day of losses now is down 15% in the last 3 sessions, was down 6% each on Thursday and on Friday as well, and volumes continue to remain on the heavier side for this stock as well. It is down 47% so far in 2025, which is the worst calendar year that it has had since its listing, and this is preceded by an almost 10x jump that the stock had seen over 2023 and 2024. So some bit of reversal coming in from higher levels. You take a look at some of the others on the positive side. Paradeep Phosphates is one of them. Slightly off the highs of the day, was up almost 10-11% at one point, but the stock though is gaining on very heavy volumes. And if you look at today's volumes, nearly 5 crore shares have already been traded, and that is compared to a 20-day average of just 22 lakh. So heavy volumes, a strong move for Paradeep Phosphates, and it is the 4th highest volumes in a session that this stock has had in its trading history. Some of the other earnings reactions, then Control Print is one of them, and that is the 5th day of losses. Another earnings reaction, 8% lower on the stock, and it fell almost 9% after its results. And the volumes, which until the result announcement were below their 20-day average, have seen a very sharp spike. 2.5 lakh shares already traded compared to a 20-day average of just 50,000. And lastly, Dodla Dairy is the other one. Hatson Agro doing very well at one point, and Dodla Dairy is the other one. 8.5% lower now at the lowest point of the day. 5.5 lakh shares already traded compared to a 20-day average of just 63,000. So some movers and shakers on the earnings front. This is the highest volumes that Dodla Dairy has seen in a month, but most of the reactions that have come in are on the negative side.
All right, Hormuz, thank you very much for that. It's an interesting bunch of names that Hormuz will get to you every day in terms of the movers and shakers that we don't typically discuss and talk about, but they're happening. Atul Mehra is with us, fund manager at Motilal Oswal Asset Management Company. Atul, good afternoon. Good to have you here with us. You know, if you think about it, and maybe you disagree, but I was just thinking that either you've got to be very short term, or you've got to be not very long term, but you've got to be long term. This in-between period has kind of disappeared. That I don't know. I mean, do you feel that way? Because things are priced quite finely. In the very near term, of course, things will move based on this or that, earnings or otherwise. Otherwise, things are kind of priced for FY27 and beyond. What's your sense, Atul?
Yeah, hi Prashant. Hi, good afternoon. Yes, to some extent, I would agree. Yes, that given that say stocks are priced in terms of taking into account FY27 earnings and so on. So what you're actually seeing is reactions on either side, on the positive side or on the negative side. So the delta in terms of surprises, either positive or negative, is what is getting reflected in terms of day-to-day prices. Otherwise, stocks broadly are just consolidating per se. So to that extent, yeah, it's right that stocks are going broadly nowhere, and only the surprises are getting in terms of priced on a day-to-day basis.
Atul, you look at the IPO space, lots of new listings recently. Anything that you purchased in your portfolio?
We've had a number of names added to our portfolio, and even this week, like we would have about 3 new IPOs open up. So there's a lot of activity in the primary market, not just IPOs, even in QIP in terms of a lot of other deals, etc. So actually, if you look at it, what is really happening is the secondary markets are kind of consolidating in this very narrow range, and a lot of incremental activity is on the deal market side, and that is where I think most of the incremental attention, energy, money is going towards. So even last week, like for example, you saw a $3 billion QIP. You had a number of blocks in the last 1 or 2 months, $1 billion plus blocks. So what you're seeing is secondary markets broadly consolidating, and a lot of deals getting basically in terms of activated and dealt on a day-to-day basis.
Atul, with the disclosure, can you share where you've participated in a big way?
We would avoid any stock-specific name. But fair to assume that we have been active in a number of IPOs over the last 3 months, and even the pipeline in the next 3 to 6 months is a very large pipeline. Number of names that are lined up to hit the markets.
Interesting. Speaking of IPOs, today's listing has done so well. Anthem Biosciences stocks holding on to a gain of 28%. So yeah, I mean, there is a fair amount of interest for specific stories, specific companies, I suppose. Quite evident. Overall, by the way, just reiterating, the market is trying to make a bit of a move now. The Nifty is trying to inch towards the 25,100 mark. It has another half an hour left. Let's see if it can get there. It's the first meaningful move otherwise what's been a completely ranging session. So let's see if this takes us anywhere further up. Atul, hi. So, tell us what you've been doing largely in the last couple of weeks to 3 months since the market got into a range. The range is now almost a month old. I mean, what is the preference? Mid caps, large caps, in terms of sectors? How are you primed for the earnings season?
Sure. So I think in the last few months, it's primarily been a little bit more stock specific because the index has gone nowhere. And incrementally what we've seen is in terms of names which are in terms of on the small and mid side especially, they are having sharper moves in terms of appreciation. So incrementally at the margin, we've looked at more stock specific individual names, some of the newer names that we've added to the portfolio. And that is where I think the delta is. Broadly, if you look at it from a sectoral perspective, like we continue to, in the fund that I run, remain overweight on financials and telecom. Those have been the key overweight sectors. Other than that, there's been broadly most of the other sectors have been more or less in terms of aligned. Metals, we continue to remain underweight as a sector. So that is the sector positioning at this point in time.
Metals not finding favor with you, Atul. It's a tricky one, and maybe you'll believe that there is money to be made in other sectors. Let's talk about the banking space, because today you have the Nifty bank that's roaring away. It's up 700 points technically as well. It took support at 50 DMA. It's crossed the 20 DMA. That's great. But how are you positioning yourself on the banks? Because the larger banking names, they're doing extremely well today. While some of these mid-sized banks that actually, or smaller sized banks that trade at a sharp valuation discount, they're getting pummeled actually. But their weight on the Nifty bank is so less that no one's really talking about it. What do you like? Do you go for the value names, or do you believe you'd rather stick to the large cap names?
Sure. So I think in terms of, if you look at the results that have come by so far, the large set of banks, large private banks especially, they have been very, very strong in terms of performance, and they've been beat in terms of NII as well as asset quality has been quite stable. What you're seeing in the mid-sized banks is some level of issue on the asset quality side, especially like we've seen in case of a lot of commercial vehicle exposures and so on. Those have been the ones where we've seen
some level of asset quality in terms of negative surprise that is coming about, and which is what is getting reflected in some of the NBFCs as well as the small finance bank space. So it is in that sense on the mid side, it's a little bit of a mixed bag on the asset quality side, which is why the stocks are perhaps reacting on the negative side. Large banks, they continue to remain very robust. And so far in terms of our positioning, portfolio positioning in the fund I run, so it's primarily towards the large banks and not to many of the mid financials. So some of the names we own are more on the HFC side, where we believe that with the interest rate cut that is perhaps further getting in terms of accentuated, you will see that some of the HFCs which have a large fixed rate book, they tend to benefit disproportionately because your lending side is fixed while your liability gets repriced lower as you have in terms of the interest rate cycle playing about. So there we believe there could be some beneficiaries that could come about. But other than that, very, very selective on the mid financial.
Thank you, Atul, for joining in. He's also overweight telecom, and one of the stocks, Bharti Airtel, has now become India's third largest company by way of market capitalization. So today it's overtaken TCS. TCS, remember, post the numbers last week, has fallen close to about 6-7%, while Bharti Airtel continues to gain ground. So now this telecom company is overtaken TCS to become the third largest by way of market cap. We'll get into a break. On the other side, we'll get you a quick check on what dealing rooms are saying in our segment D Street Chatter. We'll also get you what to buy or sell today from our technical expert.
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV 18 Market Central.
For your daily source of market intelligence and wealth creation, with a commitment to doing it right.
Well, the markets have seen a good recovery actually in the last few minutes. Eternal is one stock. I think Nirmal Bang had come out with a note, one of those brokerages that I read earlier today. And, that stock is now up 4.5%. It's been a gradual up move is what we're seeing on that particular name. But besides that, I think stocks like Grasim that were trading in the red, that's moved into the green, as is the case with the Adani Ports as well, putting on some weight in the last few minutes. And good to see the Nifty now hit a century. But it's time for D Street Chatter. Nimesh joins us to tell us what is he picking up in terms of the flows and how trade setup is. Nimesh?
Nigel, looks like this last 30-minute MOC is playing out. It was part of my graphics as well that in the last 30 minutes I'm expecting a small MOC buy, especially in the Nifty name. So I guess that explains a bit of uptake in the large cap Nifty stocks in today's trade. But otherwise, in general, it's been a mixed day of trade. I think it's the earnings which is reacting across the street, whether it's bank stocks, whether it's the likes of Reliance as well. So today, banking stocks are leading the way, but even within that, it's a mixed day. Large private banks are doing good, but the smaller mid-cap banks actually underperform on the back of weak quarter-one earnings. From a flow perspective, as I said, there is a small MOC buy in Nifty name, so that explains the last move in the Nifty in the last 30 minutes of trade. And in general, metals have done well today on the back of strong commodity prices globally. But net, I guess it's earnings which is impacting a lot of reactions and a lot of stocks as well. And that's going to be the trend, at least in the near term. We have Infosys day after, and that's a big bellwether to watch out for. So again, IT has seen some bit of pullback in today's market. But today, I think the big sector of the day is clearly the financials. And within that, large private bank stands out.
Okay, all right, but plenty of chatter. Nimesh, what are you picking up today?
Well, so the first stock on my list is UPL, United Phosphorus. That's been buzzing in trade. In fact, in the last couple of days, it has actually outperformed overall markets as well. And the flows have picked up from larger FIs is what I understand. But for UPL, apart from the earnings, the next big trigger would be a potential corporate development. Essentially, the buzz is that there could be restructuring of business within UPL going forward. So that's a big trigger there. The second stock is Reliance Industries. Well, the stock is reacting to a little bit of weak earnings, but there is a small MOC buy, is what I understand, at a leading FI desk today. So expect some bit of recovery in Reliance as well in the last 30 minutes. The third stock, a couple of stocks where there is delivery-based selling. Shriram Finance within the FNO stock, and South Indian Bank. These are the two names which stands out in terms of delivery-based selling at an FI desk today. So expect high delivery volumes there. And the last is JSW Infra. A bit of accumulation has started, is what I understand. So there are small buy flows. But I understand a domestic mutual fund has been aggressively accumulating at current levels in JSW Infra.
Okay, all right, got it. So plenty of action. Thanks for that. And indeed, we'll have to watch out for the delivery stats on Reliance as well, given the stock's been down over 3%. Thank you for that, Nimesh. Well, we've got Mitesh back with us, so let's get some final trading
before that, sorry, Eternal numbers are
they're
at the
on
bottom of the
now.
screen.
25 crores of
25 crores profit compared to 253 crores. That's the number. Revenues are up 71% as compared to 7,170 crores. So top line is a very large jump. Bottom line, year on year, I mean, basically it's about 10% of what they did the same quarter last year. Stocks starting to come off a little bit. There were we didn't put out a poll. I think there was only one or two sort of brokers who listed their expectations for the quarter. And Mangalam should be with us in a bit from now to talk to us about what these numbers look like. And I mean, the sort of the presentation is detailed from Zomato, both in terms of the segments that they operate in, and that is looked at very, very closely. So we'll try and have that for you. But for now, we have the basic profit and top line number, which is flashing at the bottom of the screen. So 266 on Zomato at this point in time. Mitesh is with us while we wait for Mangalam to come in. Mitesh, what do you have?
In fact, UPL and Paytm, UPL features on my list as well, making a fresh swing high, finally, getting past 695, 705 kind of a zone. BTST here with the 708 stop and 725 target, and Paytm is the other one. Paytm is a BTST with a stop at 1,005 for targets of 1,035.
Okay, all right, got that. Thanks very much. While we are waiting to do the fundamental check on Zomato, Mitesh, just very quickly, levels to watch for Eternal, 265 now?
See, this stock has kind of, come back from a corrective movement. And the recent highs were around these levels. This 271 was the closing which we got on the 14th of July. And if you look at the retracement levels on the long-term charts as well, they are near these levels. But the chart structure is improving. So I would, want to see if we can get it on a mild decline, or if the breakout happens at a much higher volume, then you would tomorrow maybe want to initiate some kind of a long.
Okay, let's go across to Mangalam. Mitesh, thanks very much for that. Mangalam, tell us more. Zomato.
For Zomato, a couple of things. Revenue growth at 70% is higher than what the street was expecting, anywhere between 55 to 60%. But that is led by, no surprises, Blinkit. In the quick commerce business, the revenue has actually grown by about 154%. But remember, this is something that the street was anticipating already because of the upfront investments that they had done. So revenue growth wasn't a concern for Blinkit. The question was, what happens to the operational performance? And out here, Blinkit EBITDA loss has come in at 42 crores. This versus a gain of 43 crores the same time last year. So there's a near 80 crores swing which has taken place. But despite that, the stock is holding in the green because this loss has narrowed from 82 crores in the fourth quarter to a loss of 43 crores in the first quarter of this year. So that's a positive. The second part is that, the food delivery business, which had been seeing a declining growth trend in the last quarter, had grown at around 16%. this quarter, the food business has grown. The delivery revenue has grown 16.4%, which tells you that, it may have perhaps bottomed out at the pace of growth level, which explains why the stock is holding with a gain of about 4%. So now we need to watch out for a couple of things. How the food business margins have done. There has been a slight contraction quarter on quarter on the food delivery margins, but the fact that revenues continue to stay stable at around that 16.5% doesn't have the street very worried about. So all said and done, these are decent numbers coming in from Eternal. Why is that? Because on the one hand, quick commerce, the revenue growth has come in at 154%, which is higher than the street anticipation. The EBITDA has turned into a loss versus last year, but sequentially there has been a reduction in the loss, which is also a step in the right direction. The food delivery business, which was showing signs of slowing growth, has stabilized at around 16.4% in terms of revenue growth, notwithstanding the mild compression in the margins. And the stock has already seen a correction from the top, so as a result of which it's holding with a gain of about 4.3%. More details when the shareholders letter is uploaded to the exchanges.
Okay, all right, Mangalam, thanks very much for that. So that is the first look as far as Eternal, that is Zomato, is concerned. Stocks actually moved up and sort of even sharply 5% now, about 2.5-3% when the numbers came out, almost about 270 odd rupees on Zomato. We'll get you more from that letter as Mangalam was talking about as we go along. But let's move on. IndusInd Bank, we've been talking about, Ritu's been of course telling us this big story on Axis Bank that she broke. But IndusInd was also in focus because the bank, in a response to CNBC TV 18, has denied reports of expanding sort of its CEO search. Ritu is here with some backdrop and what we're being told by the regulator. Ritu, take it away.
IndusInd Bank, in a statement to CNBC TV 18, has firmly denied any reports of the Reserve Bank of India asking its board to expand the CEO search. For context, certain reports had indicated that the RBI had suggested the board look at new CEO names, including public sector bankers or Indian origin bankers working in foreign banks, and even went on to suggest that RBI's directions followed some concerns or hesitation on the part of the shortlisted candidates to take up the assignment. However, now IndusInd Bank has dismissed these developments entirely. In its statement to us, it has called these reports false and speculative, and also said that the appointment of a new MD and CEO, including seeking relevant approvals, is in process. Remember, CNBC TV 18 was the first to report the 3 shortlisted CEO candidates for the top job at IndusInd, including Rajiv Anand of Axis Bank, who is the front runner, Anup Saha of Bajaj Finance, and Rahul Shukla of HDFC Bank. We had also earlier reported that RBI could expedite the CEO appointment, which would typically take 6 to 8 weeks or longer in other cases, given the gravity of the situation at IndusInd Bank, which is currently without a CEO, with an executive committee running the bank's day-to-day operations. So in summary, IndusInd Bank making it clear that the CEO appointment process remains very much on track.
Thank you very much for that. Anand Tandon is now joining in. And by the way, markets are picking up now. So it's moved up about 50 odd points in the last 30 minutes or so. So now inching closer to the 25,100 mark. And it's gained more than 100 odd points. Anand Tandon is now joining in for the last leg of the show. Anand, first, a quick word on Eternal's numbers. I don't know if you had a chance to listen in to Mangalam's first take.
Well, I did listen in, and as he said, the numbers for Blinkit, what you're looking for is simply the top line growth, and the fact that they have managed to reduce their losses over the last quarter is a positive, which means that at least the unit level profitability exists. So as you continue to grow, hopefully there will come a time when you'll start to make money. Overall, the level of intensity of the fight in that sector has actually increased because the other players are also putting in their best. So it will take a little while before you would expect to see stable numbers. But overall, I would not be too worried about what these numbers are. In fact, they are, I would imagine, relatively positive.
Would you buy? Do you own Eternal in your portfolio?
Well, it would be in one of the portfolios which are managed by others. I also have PMS investments, but it's not my own personal choice.
No, absolutely. 6.5-7% on Eternal. I mean, that is a big move, which is coming through. And mostly all of it has basically come through after the results have been announced. I think you've got to say something about lack of positioning as well, right? I mean, the stock actually did correct from about 278 to about 256 in the last 4-5 days. So there is that as well. So going into the results, the stock was weak by about 30 odd rupees or so. So that's coming up very, very sharply, very, very quickly. So almost 20 rupees now after the numbers have come through on Eternal. Let's just look at Swiggy as well as the other one, right? I mean,
moving up.
Yeah, it's moved up. It's moved up a little bit, not much. So from about 389, it's moved up to about 395. So about $6 on Swiggy after Zomato has reported numbers. Anand, good afternoon. Good to have you with us here as always. The banks, and I don't know if you heard Ritu on IndusInd, she of course broke that story on Axis as well, that RBI basically forced Axis's hand to recognize all that. I mean, the regulator thought that they were being lenient in terms of NPA stress recognition, and that is what led Axis to disclose all that stress. Your thoughts? I mean, troubled financials, if I can sort of put that in a category. There are a few others as well.
Well, I think, larger banks are doing kind of okay, right? Clearly, we are still in a stage where credit growth is nothing great. And more importantly, I think people are not recognizing the fact that the Indian consumer today is a heavily leveraged consumer. If you just even take out the housing loans, the rest of the unsecured credit to Indian households is probably the highest it has ever been. And on a relative basis, is actually as much as many of the developed markets are. So there is not that much place to go, which is why I had mentioned even in the last conversation we had, that you will see a lot of growth in the Ninja loans, but you will also see NPAs coming through, and that is what you are going to see now in the smaller banks. Some of that has already happened. I think it can only deteriorate from here. So if you are looking at financials, clearly the most conservative ones are the ones that one should be looking for. Already the growth has to be factored down. That said, the profitability will still remain quite good for some of these banks, especially the bigger, larger ones, which are able to have a deep deposit franchise. And there is no particular reason to migrate to the others. If you are looking for growth, look for NBFCs. Remember, they are lending to ninjas.
Okay. By the way, I just want to make one point on Eternal. I mean, a lot of the comparisons that we are flashing are year on year. Perhaps another way of looking at it, and that's how the market is looking at it as well, is quarter on quarter. Because remember, year on year, Eternal had flagged off that there will be some burn in the quick commerce business. Now, quarter on quarter, that burn is definitely coming down. Look at the quick commerce losses from 82 crores. The losses come down to 42 crores. The going out business loss is steady, but it hasn't increased too much. From 44 crores, it's 48 crores. Overall, of course, the food delivery business, there the profits keep rising. 439 crores has become 465 crores. So sequentially, this performance is looking really good, and the market is taking note of it for sure. So Eternal looking very, very good. Big Nifty move up, the biggest actually Nifty gainer this afternoon. Well, let's quickly head back to that story on Tilaknagar Industries as well. We just saw that news flash about regulatory issues and allegations of a scam in Andhra Pradesh. We have Shilpa joining in with the latest. Shilpa, fill us in.
Well, the Andhra Pradesh police has now called out Tilaknagar Industries in the larger liquor scam that is under investigation. Now, the state police has named the company, and which is a big name in the alcohol industry, as one of the companies that is involved in an alleged 218 crore kickback when it comes to this particular company. Now, what the charge sheet says, as per the details that we've seen, is that between 2019 and 2024, Tilaknagar Industries was one of the biggest liquor suppliers to the state, which is Andhra Pradesh State Beverages Corporation Limited, or the SBCL. Now, it was pushing its top-selling liquor brands like Mansion House, Brandy, and also Cooper Napoleon. Now, the investigators say that 1,472 crore in revenue is what the company earned from the APSBCL, and an estimated 218 crores was siphoned off as kickbacks. Now, this was actually routed to a liquor syndicate that allegedly controlled the state's liquor procurement sales. This is as per the larger investigation. Now, the police claims that these kickbacks weren't paid directly, but they were laundered through gold. Now, sums were transferred to jewelry businesses like Sri Jewelers, Uday Jewelers, Uday Jeweler Industries, Sona Chandi Jewelers, Mangat Fried Pearls, and these were amounts of about 3-4 crores each. And in return, gold was allegedly handed over to the syndicate handlers, helping the company convert that into white and bank money on into untraceable assets. Now, with the alleged GST invoice also is something that they had to show for it. Now, according to the police, this wasn't just, corruption. They have said that there was coercion also involved as per the charge sheet, and that the syndicate allegedly held such tight control, and even large legacy brands like Tilaknagar Industries were forced to play along. That is the allegations that have been given in the charge sheet, and this was to be able to just retain a market share in the state. Now, let me give you a little bit of the larger context. This is part of a larger liquor scam that has come to light. Now, this was come to light in the state based on a complaint by a man named Yedi Venkateshwar Rao Srinivas. Now, his complaint led to a 5-member AP-SBCL committee, which then submitted a report which found that during the YSR Congress party's rule, some popular liquor brands were unfairly sidelined while certain players dominated supply orders. Now, based on this, the Principal Secretary for Revenue, Mukesh Kumar Meena, filed a formal CID complaint in September 2024. Now, this scam is being pegged at about 3,200 crore, with the alleged mastermind being identified as K.C. Reddy Rajshekhar Reddy, who was the former IT advisor to the then Chief Minister Y.S. Jagan Mohan Reddy. Now, Tilaknagar Industries has not yet responded to the allegations, but CNBC TV 18 has reached out. Back to you.
Okay, well, that is a lot of information, but there is important context to what we are seeing now, which news which flashed on our screens right now. We'll wait for a comment from the company itself. Shilpa, thank you very much for that. I think Anand may have some views on this, and I'd like to go across to him, but I'm being told we have to take a break here, so let's do that. We are back. There's 5 minutes to close.
Dadu,
Yes?
what does premium mean?
Beta, premium you can say is like petrol. The car will keep going till the time it has petrol. Once petrol is over, the car stops.
But Dad, this time even if the petrol is over, our car won't stop.
How come?
With LIC's Jeevan Labh, even after the premium payment tenure is over, the policy's benefits continue.
That means our journey of happiness will continue non-stop.
LIC, हर पल आपके साथ.
Welcome back. 1 minute to go. Less than that. The Nifty is ending at the 25,100 mark. So picking up a little bit towards the end. Anand, any stock, since we have less time, so I want to leave it to you. Anything that you'd like to talk about, any new opportunity that you've spotted?
Well, I guess you continue to remain bullish with financials, and especially, insurance is the area that I would prefer among that.
Okay, thank you. We'll continue our conversation after the break. For now, it's counting down. The Nifty is ending closer to 25,100, 128 points higher. A significant recovery from the day's low. Benchmark indices ending up with a gain of about 0.5%. Banks provided a lot of support. The Nifty banking index higher by nearly 650 points, with ICICI Bank, HDFC Bank up more than 2%. Eternal was the star. The street likes the improvement on a quarter-on-quarter basis, 7.5% on that. HDFC Life, M&M, Shriram Finance, BEL were some of the Nifty movers with a gain of more than 1.5%. On the way down, Reliance was the top drag, closed below the 50-day moving average, 3.25% down. IT names weak, Wipro, Innocent Bank, Eicher Motors, HCL Tech were some of the other notable losers.
Absolutely, and if you look at the results screen today, it's a mixed bag. So on the gaining side, you have names like Mastec, something like Aarti Drugs, Hatsun Agro. These stocks fared well on the earnings calendar. Even Ultratech Cement, by the end of it, 0.5% gain coming in over there. On the flip side, AU Small Finance Bank, Union Bank, Bandhan Bank, RBL Bank, not a great day for tier 2 financials. Many of the earnings, the market is choosing to look at the glass half empty side of it rather than the half full. So that's how it's played out. Mid-cap index outperforming the Nifty on day one of the week. The Nifty itself not too bad, getting closer back towards the 25,100 mark. Well, with that, we'll take your leave on this closing bell. Many thanks for watching, but don't go anywhere because we have Markets Forward taking the action ahead.
पैसा लगाना है तो सेंचुरी क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी क्लब प्राइम, रहो बेफिक्र।
The Nifty and the Sensex gain over 0.5%, led higher by banking heavyweights. The Nifty reclaims the 25,000 mark. The Nifty Bank outperforms the blue chips to end over 1% higher.
ICICI Bank over-delivers. HDFC Bank too turns in a steady showing with a moderate decline in net interest margins, unlike the mid-sized banks, many of whom also feel the credit cost pressure.
Reliance Industries shares end lower despite the company posting a good quarter, delivering a healthy profit even after adjusting for gains from the sale of Asian Paints shares. Meanwhile, Zomato delivers a solid show in the first quarter. Healthy growth coming in from Blinkit. Food delivery business also does better. The stock zoomed 7% in afternoon trade.
Hello and welcome to Markets Forward, your go-to show where we get you up to speed with regard to what went on in today's trading action and set you up for tomorrow as well. I'm Nigel. With me is Surbhi. Well, Surbhi, a green close, good to see. Maybe not out of the woods, but at least we took support at around that 24,900 and saw a bounce.
Absolutely, because intraday, the market had fallen below that level as well. So it was looking a little tricky in the morning. But from then on, there was a recovery. There were some decent earnings. And what we had was a pretty positive-looking screen. And we'll talk about it. It's basically very, very earnings-heavy and earnings-driven. Not too much of global news flow that was driving the markets today. But the banks were a big story. Pull up the Nifty Bank. And I think that's pretty much what it was. I mean, the big boys, the big banking boys have told you, you cannot ignore them. The market was positioned more for the mid-cap banking space, but actually the large boys, HDFC Bank and ICICI, delivered. So we'll talk about all of this and more over the next 20 minutes. Of course, all the corporate voices of the day, all the day's action and the events to watch tomorrow. But in fact, of course, the movers and shakers of the day will come through as well with Hormaz. And of course, we'll put the spotlight on Reliance Industries shares being down in trade despite what was a pretty steady first quarter. The spotlight on banking names will continue, as I just said. The smaller banks took it on the chin today. So we'll focus on some of those names as well, like AU Small Finance, and then map out tomorrow's events. But let's get to Nigel and your sense on the way the trade played out today.
Well, today was actually a good trading session. Should be the 24,900 mark was something that the bulls were waiting for, and they replied to it in style. What was good today was the Nifty Bank. Well, it defended the 50-day MA. It conquered the 20-day MA on a closing basis. Good going out there. However, the Nifty needs to get past the 25,150 odd mark and the 25,300 mark. Why do I say this? Because Friday's high was at around 25,150 and 25,300 is when we do have, the 20 DMA. That said, let's get straight to our first segment. Hormaz is standing by on the big wall with all the movers and shakers of the day. Hormaz, take it away.
Well, there was a green on the screen, yes, but then you can't deny the fact that there were a lot of earnings reactions that were on the other extreme as well. You take a look at Dodla Dairy at one point of time is down 8% at the lowest point of the day is where it ended. Eternal came out with results just a few minutes before close, and boy, did it build on to those gains. It was already up 3 to 4% before the results were announced, and now it ended 7.5% higher. And EPAC Durables, MRPL, of course, some poor earnings reactions again, and L&T Finance bucked the trend though among the negative NBFC reactions, ending almost 4% higher. It was the financials that continued to dominate proceedings today. It was the financials that ensured that the Nifty ended in the green. You take a look at HDFC and ICICI Bank. Of course, we'll talk more about that in greater detail. But AU Small Finance Bank, Union Bank, Bandhan Bank, all of them seeing a negative reaction today. Bharti Airtel has now become the third biggest company in India in market cap terms, surpassing TCS. So it was good going for that stock. GPT Infra won an order, as did Titagarh. Bajaj Consumer is going to consider another share buyback. And Newgen Software continues to get pummeled after its results last week. A sector that did well today, though, was the metal names. Lloyds Metals, Nalco, almost every constituent of the metals index ending higher today with gains of anywhere between 2% to as high as 4.25%. And lastly, stocks that ended at a 52-week high in today's session. With Paradeep Phosphates, Borosil Renewables is another one, 7.5% higher on that stock as well. UPL had a good day, and as did UTI AMC, following the HDFC AMC path from last week, ending at a 52-week high. Back to you guys.
Okay, all right. Thanks a lot for that, Hormaz. Well, Reliance Industries, that's been in fine form. However, in today's trading session, the stock ended lower in trade despite clocking a good quarter. The firm saw a healthy profit even after adjusting for gains from the sale of Asian Paints. Brokerage firms, though, remain bullish on the stock. Sonal joins us to break it down for us. Sonal, the stock was falling there, but take us through some of those details. What are brokerages making of it?
Well, let's talk about the basic numbers and then we'll talk about the segments. For the revenues came in at 2.44 lakh crore rupees. EBITDA was higher on a YY basis to come in at 42,900 crore rupees. Margins at 17.6%, which compares with 16.7% in the year gone by. Profits, that is something that came at quarterly records at around 27,000 crore rupees. It was aided by an element of other income of 15,100 crore rupees, out of which 8,900 crore rupees came in from Asian Paints stake sale. In terms of Reliance Retail, reported double-digit revenue yet again, and this time around their area per square feet increased by, or revenue per square feet increased by 16.5% at 10,847 crores. Jio reported inline set of numbers, so the revenue growth came in from both subscriber growth and ARPU growth this time around. O2C EBITDA margin higher on a YOY and on a quarter-on-quarter basis, but do remember this time around it was also impacted by a maintenance shutdown that was taken in the month of April. Mukesh Ambani reiterated their plan of doubling their business every 4 to 5 years, so that was an important statement that came by. In terms of brokerage commentary, Morgan Stanley said that new energy, telecom, balance sheet were the bright spots this quarter. They have an overweight rating with a target price of 16.17. Jeffrey says that while O2C was impacted because of a refinery shutdown, the outlook continues to remain positive. Focus will shift to the AGM expectations. That will be possible listing of Jio. There is also a possibility of a tariff hike. They project 11% EBITDA growth in FY26. They have a target price of 1726. Motilal Oswal, they've gone ahead despite calling it a soft quarter. They've increased the target price to 1700 versus 1685 earlier because they're sanguine on growth prospects across the segments for Reliance Industries.
Got that, Sonal. Thanks a lot for that. But a slew of banks came out with their first quarter numbers. While the big fared well in the first quarter, it was a mixed bag for the smaller banking names. Gaurav has had a very, very busy weekend and a busy Monday morning as well. Gaurav, break it down for us.
Well, yes, it was a day full of action for banking names. We saw a few banks actually outperforming in trade today, and on the other hand, we also saw some banks who struggled in trade. So first, let's talk about HDFC Bank. When it comes to profit, the number increased almost by 12% on a year-on-year basis. Net interest margins, they declined almost by 19 basis points, but at core level, the net interest margins declined only by 12 basis points. Another key trigger here was that the asset quality remained stable, and all of which actually helped the bank getting up in trade today. Other than that, ICICI Bank actually was in focus, and the reason being that strong performance is what we saw. Profits increased almost by 15% on a year-on-year basis. Let's also not forget that the net interest margins declined only by 7 basis points, which was anticipated to decline almost by 18 to 19 basis points on a sequential basis. Again, the asset quality remained stable, and as a result, we saw some uptick in this counter as well. Let's also talk about Yes Bank. We saw a good set of number here, and I'll tell you why. Because the ROAs are actually moving towards that 1% mark. Bank reported ROAs of around 0.8%, and at the same time, net interest margins also remained stable for the quarter. Bandhan Bank, on the other hand, actually came up with inline set of numbers, we could say, but the weakness was there in terms of the asset quality. Specifically, when we talk about fresh slippages from the EEB segment, we saw the stress was rising, and as a result, we saw some kind of pressure in the stock price as well. RBL Bank also, same kind of pressure was seen in the stock price, and the reason being that although bank is saying that ROAs can reach around 1% in FY26, in this quarter specifically, net interest margins declined almost by 40 basis points. Now the street was anticipating 30 basis point of fall, and as a result, we saw some pressure in the stock price. AU Small Finance Bank, here also we saw some kind of stress coming up in the asset quality side, specifically in terms of credit costs. They have actually upped their credit cost guidance from 85 basis point to 100 basis point for FY26, and specifically for MFI, this credit cost guidance has been up to 5% on a year-on-year basis versus what it was anticipated at 3 to 4%. Lastly, let's also focus on Union Bank. Now, the numbers, when we talk about loan book growth, it was a little muted and lower than what the industry growth has been for the quarter. But what was another trigger is that in the near term, brokerages are not seeing any kind of triggers which will make the bank outpace the peers, and that is the reason why they have actually downgraded the rating. As a result, we also saw some pressure in the counter today. So definitely it was a day where we saw banks like HDFC and ICICI soaring in trade, but at the same time banks like AU Small Finance Bank and Union Bank actually struggled in trade today.
Absolutely not a big day for tier 2 financials. It was a day for the big boys. Gaurav, thanks very much for that neat wrap-up. Let's go to our guests and quickly discuss the way forward for some of these banking names. We have Chandan Taparia joining in from Motilal Oswal Financial Services. And of course, we have Anand Tandon to give us a fundamental viewpoint. Anand, first to you. Now, when we are going into these earnings, I kept hearing a lot of people sounding fairly optimistic about tier 2 financials, just purely in terms of growth, getting better bang for your buck in the near term from a positional perspective. But what we've seen is that some of the concerns like asset quality stress or higher credit cost stress or margin pressure, it's still showing up more in tier 2 banks than the large cap banks. What would your advice be looking at today's numbers for the next several quarters?
Well, that's inevitable for the simple reason that, the cost of funds for larger banks will be a little lower compared to the smaller banks. For them to make the same kind of profit, they will have to lend to the worst kind of credit quality. So while you typically have growth there because they are more eager to borrow, you also have the highest NPA possible. And, like I have been sounding out for the last some months now that, we are now at the peak of the cycle in terms of clean balance sheet. From here on, it only goes downhill. And the more that there is pressure on banks to try and outperform in terms of earnings and so on, it will be at the cost of poorer provisions and the poorer credit quality. That is inevitable. Also, with the falling interest rate scenario, we will always have a pressure on NIMs. So the pressure becomes even more for the smaller bank. So at this stage, one should not be very adventurous and look for more stable banks which are more conservatively run rather than looking for the most aggressive growth.
Got it. Okay, all right. Got that, Anand. Let's go across to Chandan. Chandan, what do you make of today's trading action, though? 24,900, that was the line in the sand. We went to the line and the bull said, game on. Let's take this on. And that's why we saw a big recovery. But what about the trend? How's it looking on the Nifty? And the Nifty bank, the Nifty needs to do well. You need that star performer to come in there and make the runs. That seems to be happening. Where's it headed from here?
Yes, Nigel. Fantastic, I think. The summary you've given about the market, that yes, bulls are finding tough from last couple of days, but today's recovery is giving some stance that yes, the market again can head towards 25,250 marks. During the day, index drifted below 24,900, but somehow it reclaimed and managed to hold above 50-day exponential moving average. If I look at the weekly chart, index started to form lower top, lower bottom. But on the daily chart, if it manages to negate the lower top, lower bottom by holding about 25,050 or 25,080 by tomorrow, then I believe the index will again reclaim to 25,250. But one need to keep in mind that 25,250 is a major level. If market manages to move over the same, then only the major stance will be changed in the market. So I'm keeping two views in mind. First, the 24,800 is immediate support. Market needs to surpass about 25,080, and then momentum could be there towards 25,250 and higher levels. When we talk about Nifty, we need to focus on Bank Nifty index because the major recovery was seen in the Bank Nifty index, which managed to reclaim from the lower levels. Technically, it formed a hammer sort of candle, took support near 56,250, again managed to reclaim a key level of 56,750. So I believe if market has to hold, then the selective private bank and the Bank Nifty has to take the lead. So with support of 56,500, I believe Bank Nifty has potential to again get into the trading range of 57,000 to 57,250 marks.
Okay, that will spell good news for the Nifty as well. Got that, Chandan. Thanks very much. Stay on. We'll have more questions for you in just a bit. But let's talk about Eternal, the big zooming stock on the Nifty towards the afternoon. As soon as those numbers hit the screen, the market loved what they saw. So what's the fine print that the market is liking so much in Eternal's numbers? Let's ask Manglam. Manglam, so Zomato hitting all the right notes. What's working?
It is hitting all the right notes. If I told you that a company reported 70% revenue growth and stopped at that, it would be a good set. But if I told you 70% revenue growth, 35% decline in EBITDA, 90% profit decline, and the stock went up 7%, you'd say, why? What exactly happened? Well, it seems like the worst is behind because one, management commentary is positive. Remember, the company has been disappointing on the food delivery growth front and the quick commerce margin front over the last few quarters. But now it seems like, the Blinkit losses have narrowed quarter on quarter and food delivery growth slowdown have stemmed. So two major problems the company both arrested. The management says year on year growth slowdown has bottomed out as they expect recovery from here on in the food delivery business. And in the very near term, quick commerce margins have also bottomed out. They expect if the competitive scenario remains the same right now, they will go ahead and see improvement in margins. Food delivery, gross order value has been stable at 16%. The last quarter also it was at 16%. Remember, the previous few quarters it had been coming down, so that has been stemmed. Blinkit revenue growth at 154%. EBITDA loss has narrowed quarter on quarter. Same time last quarter, the EBITDA loss was close to around 180 crores. Now that has come down to close to 160 crores. And add to that, the company has continued its store expansion. Now their total reach is at 1544 stores. And on District, which is the third growth vertical of the company, they see at some point in the next 5 years, annual revenue run rate to be $3 billion with EBITDA at close to around $150 million. So these factors working well. Remember the last quarter, the one thing that annoyed the street was that despite them raising cash and because of the competitive intensity, cash balance of the company had come down quarter on quarter. That problem seems to have been addressed as well, with the cash balance increasing from 18,824 crores to 18,857 crores. So all things pointing in the right direction, and that's what the street got excited about. The stock ended at the high point of trade.
Okay, wow, fantastic. And what a comeback. Remember last few quarters ago when there was this whole thing of bigger losses as the rollout continued in quick commerce? Well, Eternal really answered its critics today at least. Thank you for that, Mangalam. Let's quickly go back to our guests on this. Chandan, let's talk levels first. Do you see a bigger breakout? Do you see more upsides on Eternal?
Yes, in fact, the price behavior of Eternal is making higher tops, higher bottom. I still remember the entire price setup that earlier it used to take support at 200, that zone shifted to 220, then it headed to 240, and now the support is shifting to 255. So I believe with support of 255, the way it has negated the lower top, lower bottom, formed a strong bullish candle, it has potential to rally towards 278 to 300 mark. So I believe it offers a better opportunity after the corrective move of last 4 days, and stock has potential to head towards 300 marks plus.
Okay, just very quickly, Anand, do you like Zomato?
Well, I mean, from a business perspective, it's doing well. From a valuation, it is highly overpriced. If you have a 10-year view, it might be still worth it.
Okay, all right. We'll get to Manisha in just a bit to tell us about the commodity space, but let's focus on UltraTech Cement. The numbers came in today, and initially the street was a little bit disappointed because there was a miss on the top line. Revenue did miss a little bit. You had the EBITDA number, though, that came in more or less in line, and that's why the stock did see a bit of a recovery. The only problem was that the volume growth was a smidge lower because it grew by around 9.7% because they've included Kesoram in their base year, and Jeffries was one who was expecting close to around 11%. But besides that, actually, the numbers look good. They were focused a lot on the cost side, which has helped them. On a core business, the core UltraTech business actually grew by only around 3.8%. Some would say it's a little bit disappointing, but otherwise, when the profitability is in line, the street will digest that. Very quickly, Anand, what's your view on UltraTech Cement?
Well, obviously, the consolidation in the industry continues. The only issue I have with the industry is that they are increasing their capacity faster than the sales growth, and therefore, to that extent, the economic growth in terms of profits doesn't keep pace. But as the consolidation progresses, there will come a time when you will be able to manage both the volume and the prices. And at that point of time, you should expect to see a steep upside. Right now, I think the sector is fully priced.
Okay, all right. Thanks for that. Well, let's focus on the metals pack. Strong economic data coming in from the United States and hopes of some kind of stimulus from China. That's what's sparking a rally in metal stocks. Manisha joins us to decode that for us. Manisha, nothing wrong in hoping, right? And we keep hoping that China is going to throw up something. Tell us more.
Oh, well, absolutely, Nigel. Every few days and weeks we hear that statement coming in from China, but it always does support metal prices, and that's exactly what we're looking at in today as well. The decline in dollar index has been supportive. Markets are anticipating a China stimulus measure to come in. Remember, there is China Politburo meeting happening as well, and that would set course for the rest of this year in sense of economic policies coming in from China. And then apart from that, you also have seen strong US economic data as when come in. The retail sales was better than expectation, and the jobless claims did decline, so that has been supportive as well. If you look at the copper prices, we're not trading too far away from its all-time highs, especially in the US market. The premium between the US and LME still stands at a tall 25% there. Remember, we are getting to go to that tariff starting from 1st of August, and that is what is keeping the market jittery, given the fact that US only has 2 mining smelters there, and that would keep prices supportive. Aluminum prices trading at a March high as well. We've seen prices gain up by 4.5% in the matter of last 1 month. Not just copper and aluminum, you have zinc trading at April highs too. The Chinese smelters are facing pressure to cut, and there is product capacity outpacing demand right now. That is another thing to watch out for. And in the ferrous metals, you have iron ore prices trading at a 3-month highs. You have steel trading at a 2-month highs as well. There is lower supply, expectation that China demand will increase quite strongly. All of those factors clearly supportive. So when you look at the last 1 month in sense of metal prices, the best of the gains clearly coming in with copper with 15% of a jump up. You have iron ore prices up by 13% as well. But it has been between 6 to 7% of gains that you have seen coming for the rest of the metals as well. So it's not just about today, but on a weekly basis, monthly basis as well, metals seem to be doing well.
Indeed, metal shining today yet again. Thanks, Manisha, for that. And thanks, Anand, as well as Chandan, for joining in and giving us your view on the markets and individual stocks. Well, we'll slip into a short break. On the other side, we'll tell you about all the top corporate voices that joined us. And also then we'll be telling you how to prep up for tomorrow, all the events you need to track. Don't go anywhere.
To build anything that truly lasts, it takes time.
Welcome back. You're with us on Markets Forward. Well, let's quickly take a look at all the key corporate voices that we picked up during the course of the day. First up, JSW Steel. The company reported a strong set of numbers for the first quarter. Speaking to us, the company's joint MD and CEO Jayant Acharya said that while the steel industry witnessed robust growth in the first quarter, global demand could be impacted by tariffs and the ongoing geopolitical tensions. He noted a moderation in Chinese steel production and added that the Indian government is expected to take a final decision soon on duties to safeguard the domestic steel industry. The company's overseas operations, especially in the US, have seen a strong turnaround. However, lower exports led to higher inventory, which in turn resulted in an increase in the debt. Acharya added that JSW Steel has filed a review petition in the Bhushan Power and Steel case and remains quite optimistic about a favorable verdict.
Well, up next, L&T Finance gained closer on 3% despite a muted showing in the first quarter. Speaking to CNBC TV 18, the MD and CEO Sudipta Roy said that the firm's credit cost guidance could be achieved without any macro-prudential support. He added that the MFI asset quality is now expected to bottom out in quarter 3. Earlier, they were guiding for around quarter 2. Roy also said that he expects 20-25% AUM growth in FY26 with strong traction in gold and two-wheeler segment. On the ROA or return on assets, it's likely to reach 2.8% in the next couple of fiscals.
Okay, next up, let's talk about the day's listing. Anthem Biosciences rallied almost 30%. This is on day one as it listed today. The firm's management is expressing optimism about the company's future outlook. While China has long been a dominant player in the contract development and manufacturing organization space, a clear shift is underway towards other countries, says the management. The company has seen a surge in inquiries recently, with conversions anticipated.